A lot to choose from this morning. Let's go to the chip stock sector first. This has been an area of huge momentum over recent days, weeks even. We're watching the US session, the Asia session. It's been pretty positive. Nasdaq futures have faded a little, but we have seen some enthusiasm for the sector continuing through the Asia session, so we'll watch what that means for Europe. Airlines in focus. The Axos report is one thing. Does that put upward momentum on them? But we've got the oil price. That puts downward momentum on them. We've also got a lot of talk about maybe US airlines trying to get some sort of support from the US government. Is there an expectation that catches on here in Europe, perhaps? E.ON is also in focus in the energy space. The German utility is working on a plan to merge with OVO Energy, according to some UK media reports, guys. So we'll watch that.
A lot of single stocks to price in. The broad narrative, though, is energy prices are higher. That should maybe benefit what we are seeing in the FTSE 100 with some of the names out of the UK and France maybe benefiting from that. Does that mean we get a flat picture? Probably yes. At the get-go this morning, maybe we've got weakness elsewhere. We'll break it down in just a moment from a sector point of view, but at the moment, a very flat open here in Europe. The divergence between what is happening in the United States and Europe, really interesting at the moment. Does that widen? Does it close? That's one of the trades that I think people are watching very carefully at the moment. The CAC is up by 0.3%. The stock 600 gets driven a little bit higher on the back of that. The IBEX is up by 0.1%. The Amsterdam market, though, interestingly enough, we'll take a look at tech in a moment, is down by 0.3%. We'll see what the DAX does in a second. How does this break down from a sector rotation point of view? Let's find out. Tom.
Top of the list right now in terms of your sectors, with the gains coming through for retail, up 0.4%. In an otherwise, as you say, flat market on the headline basis. Travel and leisure is also there, second best performing sector so far in this session, up 0.4%. On the downside, biggest losses coming through for personal care, down 0.5%. For F&B as well, food and beverage down 0.5%. Chemicals, utilities, media, all of those sectors are in negative territory. Travel and leisure is now the top gainer, just 0.4%. Again, in an otherwise lackluster market. Of course, this is an event-driven, the risk events for this week, given the Straits of Hormuz, the earnings story, and the central bank action, all of those event risks on the horizon. So maybe that is speaking to the slightly placid approach taken by markets so far this Monday morning.
Yes, I'll add one mover in there, and this is in the grocery space here in the UK. Sainsbury's double downgraded at Goldman, and Citi is also cutting its expectations for that particular grocery store. So we see that one down by 4% today. So that's putting some downward pressure on that part of the market. Interesting that travel and leisure is moving higher. When I last looked, it was more the leisure side than the travel side, although there is a bit of upward movement in airlines, which is interesting given oil prices are up another 2% this morning.
They were called sharply higher earlier. Ryanair, I think, has just opened flat in terms of what it's delivering this morning. It's up by 0.5%. But I saw a call earlier that it was going to be up sort of circa 6%, which now looks a little off in terms of what we are seeing there. Elsewhere, what do we see as the narrative? That Sainsbury's story is certainly having a big effect. I think there's some XD in the market. I think Axo's gone XD this morning. But there is a bit of a chip story to the upside, but maybe not that much of one. Siemens is up a little bit, Infineon's up a little bit. So there is a bit of sort of tech/energy in the mix.
We seem to be entirely flat on the stock 600, don't we, this morning?
I'm desperately.
Yeah, we're trying to find some more interesting things than that to say. Well, the DAX has just opened up by 0.3%, so there we go. That's a little more interesting. Patrick Armstrong joins us, CIO at Plurimi Wealth. Patrick, very good morning. Nice to have you with. So, what is your guiding investment view right now? We've spoken to one guest who seemed not relaxed about the recession risk in Europe, but saying, it's not here yet, and another guest who says, there is recession risk building. We'll be in a really stagflationary environment and a recession in Europe in a month if the Strait does not reopen. Is that what's in the driving seat for you, or are you just all about the tech stocks?
That's the main risk you want to worry about is stagflation, because that's a consequence of the war in Iran. The longer it drags on, those risks do grow. And the backdrop to that, you want to own companies with pricing power. That's how you win in the stagflationary environment. And I think it's the oil and gas companies, primarily the refiners. I think they'll have incredible pricing power on refined goods, jet fuel, diesel. And the high bandwidth memory is just insatiable demand right now. They're not expensive. They've got great momentum and incredible areas. Pricing power for different reasons.
Because you say we've moved on from a binary phase where it's either, war or peace. We could end up being caught in somewhere in between for quite some time, could we?
That's how the market seems to react. That, it's peace, the market jumps up, it's war, it's going to continue, it sells off. And I think we're in a stalemate scenario endgame where neither side is conceding, but Iran wants to drag it out. They've got to win through patience, keeping hope that there's a deal there to keep the U.S. side from really escalating things, but
and the market could really ignore that if it weren't for the Strait of Hormuz.
Exactly. It could completely ignore it, but it can't because of the Strait. And that's the scenario that I think is missed, that you've seen inventory drawdowns in oil. Everyone knows about that. But on refined products, you're getting close to no inventories left. And I think we have months and quarters ahead of us where there has to be an inventory rebuild with probably a very strong demand backdrop sticking in. And the market's not pricing that, especially in the futures curves.
Patrick, when does demand destruction become a problem for your call and your exposure to the energy heavyweights?
I don't think it's anywhere even close. Probably another 20-30% upside, and you'll see material impact. But
20-30% upside to prices.
Yes, on refined products particularly. Yeah. People don't change their habits. Companies don't change their habits in the short term until it really bites. And I think where we're at right now, it's hurting, but people are looking through it. They're viewing it as transitory and not really making long-term decision changes. Short-term, people never change things. So I don't think we're at the point where there's been incredible demand destruction.
And your call on high bandwidth memory, that is it's a pretty consensus call, Patrick. Yeah. So how do you convince me that you have confidence that has further to run? And if I'm just wanting to get exposure now, is that an opportunity? Is this about holding the positions you have or adding at this point?
I would be comfortable to add if I didn't have. I would want to own them. Just because when you look at equities, humans have always looked at growth, profitability, momentum, and these stocks have all of them. They don't look expensive because the earnings have outstripped the share price. Share prices have rallied massively. Earnings have outstripped that. In terms of revisions, price momentum, growth, profitability, it's incredible. High bandwidth memory is a commodity. Eventually, there'll be too much of it, and pricing will fall off a cliff. But I don't see that happening through all of 2027. The outlook that's going to come this week with the spend on the hyperscalers, I don't think there's any change in that. And the choke points for AI right now is high bandwidth memory and electricity. And I do think it's just incredible pricing power, probably for another year and a half on these stocks.
Okay. When do I fade that?
It's
because the market looks forward.
Yeah, it does.
When does the cycle?
So if Microsoft and Amazon show hesitance on their capex, if the market punishes them for capex, I think that's when you probably want to start to fade them, because you'll have a window where the end of the world, that cliff that we're talking about, isn't priced. That's when I'll probably want to change my mind. And there's been no slowdown in the narrative from these companies. They are 100% committed to their AI data center build-out. And while that's in place, the high bandwidth memory stocks are the beneficiaries.
Can we talk about the market's mental health? How do you, in a world where Trump is moving the market around, can you make rational decisions? How you get to the office on a Monday morning, you look at kind of what is going on. You got an Axios report. How are you, from a kind of, how are you dealing with this? Anna talked earlier about the fact the market's exhausted. Do you feel exhausted? What's going on?
It's exhausting if you do change your mind on everything he says. And what we've decided to do, which might not be the right decision, is ignore a lot of it, because we think the end game for everything he does is he wants quick wins, and the consequence of the quick wins is inflation, in my opinion. So everything he does, he wants to create growth, he wants to end a problem, throw money at things.
Short-circuiting and going straight to the inflation bit.
That's where it ends up, I think. All of these policies are knee-jerk reactions, quick wins, consequences going to be big deficits, big debt, and higher prices in the future. So it helps us look through a lot of the noise, but yeah, he is the most important man in the world. He drives markets. And maybe it's a risk to ignore him, but I do think everything he does and everything he thinks about goes in that direction.
Okay, so if you're trying to look through some of that short-term volatility and focus on where this takes us, inflation being one of those things, join the dots then with your gold view, because you like gold miners, Patrick, and explain that in that inflation context.
Well, gold is a traditional store of value. It preserves value in an inflationary environment. I just don't have a strong view where gold goes, but every day gold stays at $4,800 an ounce. These companies that have cash costs of $1,500 to $1,900 an ounce, it's just incredible profits. And if there is upside in gold, and there's a really strong narrative that's pushed gold to where it is, that's totally intact. The gold miners are a geared play on that. If gold does nothing, I get incredible profits. If gold moves higher, I get a geared play on it. There's a lot of downside if gold does fall, but I definitely prefer the miners to the gold itself.
Bitcoin's up 12% in the last 30 days. Do you like Bitcoin, Patrick?
I don't have a view on Bitcoin, to be honest with you. Maybe I'm too old to understand it.
Isn't it just a tech play?
It's a correlation with that, definitely.
It's risk aligned now with tech, it seems, at least in the last 30 days.
I think in the last 2 years even. If the NASDAQ futures are up, Bitcoin futures are up, or Bitcoin prices they seem to be up.
That's the correlation.
So what do I do next? I remember last year you told me that you thought the market was basically hanging its hat on the idea that rate cuts were coming.
Yeah.
Rate cuts looks like they're not coming. Do you think they're coming? Or?
I do.
Okay, you do?
I think Warsh gets nominated, and I think he'll set the stage for why he has to cut rates, and all the oil price shock is transitory. We have to look through it. I'm not Trichet. I don't hike rates based on current inflation. I don't look at spikes in inflation.
How does the market react to that?
Market rallies on
More
liquidity. So bond prices should fall and stock markets should rise, actually, in that scenario, I think. But it's not certain. He's got a dovish bias. I think that supports markets, and that means you do have the put option when things do go bad. Then he's got the narrative to really cut rates aggressively that I think he's minded to do.
Bond markets take that in their stride, Patrick, or bond markets have a bit of a freak out worrying about?
They should freak out.
Inflation fighting.
I don't know what they'll do. But yeah, if the Fed cuts rates and the backdrop's like it is right now, we're not in a recession. Growth is still strong. I think the U.S. is going to grow probably a little bit more than 2% this year. Consumer demand looks pretty robust, and prices are nowhere near the Fed's target. They're above them. So that's not the backdrop you should be cutting rates. But I do think he'll be minded to do it.
Do you think the ECB should be cutting rates?
Cutting rates?
Yeah. If we're going to a recession here.
We have to ask you both now, cutting, hiking, everything.
Because if they had a dual mandate, yes, but they don't, so they won't. But I do think we're going to end up with a pretty dovish commentary where they don't want to be cornered into the hike that the market for some reason is expecting.
Great to see you. Thanks for stopping by to see us this Monday morning. Patrick Armstrong, CIO of Perimi Wealth. This is what the Core 6 looks like. This is the picture we find ourselves with at the centre of gravity here in Europe. ASML is a little down this morning, so it's interesting to see how that's translating. Nestle's also a little softer. Elsewhere, there's some fantastic pieces being written about kind of what fashion is telling us about where we are in terms of the economic cycle, and the 80s are back and all that kind of stuff. So pay attention to what is happening. The skinny versus wide jeans debate. Apparently it's a useful market indicator.
This is what Guy Johnson's been reading over the weekend.
Apparently.
The skinny versus the wide jeans debate.
Andrea Felstead has got a great piece out on it this morning. Anyway, Charlie Wells, I'm sure, is all over that debate as well. What do you got, Charlie?
Good morning. So definitely more on the skinny as opposed to the baggy trouser debate here, at least for now, but let's see if that changes. Really interesting mover this morning, that's Nordex. So that is the German wind turbine company. They are up over 10% this morning after delivering an earnings report that beat expectations. Now, this is interesting, right? Because it gets at that kind of conventional energy versus new energy debate that we've been having over the past really year or so. There have been questions about renewables, but given what we're seeing out of the Middle East, it's looking like we're seeing strong demand for these, renewable energy companies, and that kind of gives a boost to Europe, right? Because there is a lot of strength. There are a lot of these large renewable energy companies here. So let's take a look at another story interesting this morning. That is Sainsbury's, the supermarket chain. in the red, so down over 3%. Now, Sainsbury's facing really difficult headwinds. They got that double downgrade. They got some downgrades coming from the likes of Goldman and Citi. Now, the issue here really is pricing, right? Because in the British supermarket sector, as any shopper on the high street knows, there's intense competition. So where does Sainsbury's fit? Where does Sainsbury's fit between, say, a Waitrose and an Aldi? So they're going to have to really fight to keep their margin, to kind of fend off competitors in that ultra-competitive space. And it's pricing that really came up in a lot of these notes in these downgrades for Sainsbury's. So expect pressure there. That is a read also on the consumer under pressure, given some of the inflationary fears, not just inflationary, but also stagflationary fears that we've been talking about over the past few weeks. So definitely one to watch, and the market is not liking those downgrades. Let's end on Whitbread, because this is a really interesting British company as well. So they own a number of hotels, and what we heard, at least according to a report over the weekend, is that they're thinking about offloading some of their Premier Inn hotels. Now, this would be really interesting for Whitbread because it would make it more of a leasehold company as opposed to a freehold company, and that would free up some cash for investors. So the market is liking the news on that report of Whitbread potentially letting go of some of these hotel chains.
Charlie Wells, thank you very much indeed. Coming up, we're going to check back in on what is happening in the energy space. Of course, oil higher in the session today, gaining after efforts to resume US-Iran peace talks, of course, remain stalled. We know that. That is a fact. There's some reporting from Axios as well, but the reality is the standoff continues. The latest on the market next, and how the energy markets are adjusting to that news. This is Bloomberg.
Season is here.
Earnings season begins. Let's get right to it.
Bloomberg is first to break the numbers.
Netflix here crossing the terminal.
Let's go to a retailer, Urban Outfitters.
I'm looking at shares of Paramount, Skydance.
Morgan Stanley, another monster quarter.
A lot still to come.
With the smartest insights.
What are some of the sponsors and some of the CEOs talking about here?
I think the biggest risk continues to be that inflation gets imported around the world again.
Continuing coverage on Bloomberg.
Your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
When it matters, investors turn to Bloomberg Surveillance.
I said it maybe even on your show here.
I hear you guys talking about this a lot.
Our investors are really thoughtful. They're engaged. They listen to your show.
As a number of people you've had on your show have mentioned.
The three of us have talked about on this show many times.
I think you find, and you've heard this on your show, we've already talked this morning on your show, as you know, and you cover every day on Bloomberg.
You've heard a lot of big guests talk about that.
I think your show is incredible.
Bloomberg Surveillance, we're talking about it.
Welcome to Bloomberg This Weekend.
Breaking news today from Wall Street to Washington.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, now for a full hour, only on Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Earnings season is here.
Certainly valuations have shifted quite significantly.
Maybe a bit of optimism.
Bloomberg is first to break the numbers.
We're talking about a move away from U.S. assets.
So much corporate issuance.
Let's get the reaction and context.
With the smartest insights.
We're observing what's happening in the Middle East.
The situation is volatile.
We're closely monitoring the impacts on supply chain and logistics.
Cross-border M&A, still such a difficult thing to get done in Europe.
Continuing coverage on Bloomberg.
Welcome back. This is the opening trade, Monday the 27th of April, in fact, and European equity markets pretty flat overall. We do see a little bit of upside coming through on the DAX and on the CAC 40. The FTSE 100 is flat right now, but oil is certainly not flat. Oil is bouncing.
It is bouncing. We're currently trading on Brent at 107. We did earlier see oil pair some of the gains that we've seen. This after an Axios report suggested that Iran has offered the US a proposal to reopen the Straits of Hormuz. Global markets awaiting further news on that. Remember, the Strait is still closed. The high on the year is 112 on Brent. We're currently trading at 107. Of course, these are paper prices. Let's get a take on what happens next. Bloomberg oil and shipping reporter Waylon Sun joining us now to talk about this. The market once again looked at an Axios report this morning, but this morning had a slightly different reaction, and that is it looked through it, and prices have just gone higher again. Are we now in a reality dawning phase where there is a belief now that oil prices are going to go higher, that the Strait is going to remain closed, and that we are therefore going to see Brent maybe taking out that 112 high?
Yeah, right, because we think that the market is trading on a lot of ceasefire headline news. And this morning when we read about the Axios report, it sort of brought a little bit of optimism back into the market. But if we go deeper into that news article, it says that Iran will only proceed with the ceasefire talks if the U.S. lifts the blockade. So we've been here before. This kind of tit-for-tat mutual standoff has been in place for a few weeks now. It appears that even though Iran is trying to reach out to the U.S., the way they're proceeding ahead doesn't seem to bring the negotiations any much further. And therefore, you see oil prices gaining again, because for every day that Strait of Hormuz doesn't open up, it gets even harder to get physical barrels out into the market.
What is the current situation in the Strait? There are reports now that 57% of all the production out of the Persian Gulf has essentially been sidelined as a result of this. The standoff continues. To your point, what is anything moving at all through the Strait right now?
What we're seeing right now is just other forms of commodities, say dry bulk or even cargo ships. But for crude and from oil products, it's really difficult to get them out, because what we have are two blockades in place. Iran trying to control the Strait of Hormuz, not letting Western affiliated vessels through. And then the US on the other side, near the Arabian Sea, trying to stop Iranian vessels going out. And this standoff is making some forces in Iran getting even more agitated. And that's why we saw quite a bit of chaos in the Strait over the past few days. And the US has said very clearly that they're targeting the high-value oil tankers. And this just cuts off Iran's revenue. And I think what we can see here now is that Iran is responding by firing on ships, warning them again that we don't want ships going through. And that's why we see the Strait of Hormuz is now at a standstill 3 months on.
So Waylon, what does that mean then for what's on the horizon for energy markets? Goldman Sachs talking about upside risks to their forecasts, because as a result of the closure, they see the lowest ever global visible inventories. What is your Bloomberg? What are all your Bloomberg screens telling you about inventories?
Our team over the weekend have reported out a story saying that oil traders are looking at maybe a billion barrel loss of supply currently. We don't feel that as much yet as of now, because countries are releasing stockpiles of oil. But we are starting to feel it more acutely in Asia, especially in the petrochemical sector, because once the refineries in Asia, which are geared and built towards processing Middle Eastern crude, if they can't get that feedstock, you can't get your jet fuel, you can't get your diesel, you can't get your kerosene out from those refineries, and economies will start to slow down. cut down demand, and this is where we see demand destruction coming. And once that that cuts down, it's likely going to impact on a wider scale in the weeks and months to come.
Thanks very much, Waylon. Good to have you on the programme. Bloomberg's oil and shipping reporter, Waylon Sun, joining us there with an update on the oil markets. Now, we're also watching Adidas shares this morning after a record-breaking London Marathon. Kenya's Sebastian Sawa ran in the brand's new ultralight $500 racing shoe as he surged ahead to win in 1 hour, 59 minutes and 30 seconds. And breaking that 2-hour barrier is seen as very significant. A new world record as well. We're joined now by Bloomberg's consumer reporter, Tim Lowe, based in Munich. So the record it's a huge win for these road racing shoes and this innovation. I mean, I'm not sure how much is to do with the shoe and how much is to do with the runner in it. I could wear, Tim, shoes that cost $500 and I don't think it'd make me go that fast. So give us the lowdown on what this means for Adidas.
Sure, you're absolutely right. Now, I think a lot of people are going to be going out and buying these shoes to see if they can improve their personal best time at all. And that's what Adidas is certainly hoping for. This is sort of like the culmination of decades of talk about whether anyone could really break 2 hours in the marathon. And, you know, the latest chapter is Nike sort of accelerated this game last decade when they introduced really the first generation of these, they call them super shoes. They have super light and bouncy foam. They have carbon fiber in the sole that kind of acts as a propeller. And Nike put on these, you know, events. They didn't count for world records, but Eliud Kipchoge, a Kenyan, did break 2 hours in 2019. It's just that it was not a real race. And so people have been wondering, when is it going to happen? Will it ever happen in a real race? And people have gotten close. And yesterday, the Adidas shoes blew the doors off. 2 guys got under the 2-hour barrier. And they happened to do it in these shoes that Adidas had released on Thursday, so just a few days ago. And they are the lightest marathon racing shoe ever. They're less than 100 grams. And they contain all the latest in terms of technology. The foam is super light. They have carbon plates in them. And so this was sort of like someone has landed on the moon. And they did it in Adidas shoes.
Yeah, what, less than 100 grams. Is that per shoe or for both? Less than 100 grams. You just wonder how far this tech goes. Adidas have obviously invested in the R&D around this. I'm going to give some credit to the producers because this is the question: how far will Adidas run with this victory? See what they did there with this victory lap of publicity, Tim?
That's a great question. Now, Nike has historically been very good at this game, and they did it in the last decade. And you know, what was remarkable is Nike really owned the sub-2 story, even though they had no one that had done it in a real race. So now Adidas has actually had 2 people do it in a real race. So the onus is on them. It does come in the context of Adidas has been like trying to play catch up in this, like the sport of running is booming in the sneaker industry. Adidas clearly has some very high-end products, and the question is whether they can convince the rest of us to buy Adidas in hopes that we'll also get a little bit of that magic touch.
Okay, Bloomberg's Tim Lowe. Thank you very much indeed. We may all be revisiting our sneaker or trainer closet maybe and looking to update as we want to add some speed on the track. Guy Johnson's definitely going there. Coming up, no more robot hallucinations, malfunctions, and maybe hallucinations as well. These machines can actually think outside the bot. Wow, the producer's on fire today. They can think outside the bot. Is this a factory floor game changer? German robotics software company Syriac's co-founder and CEO Ralph Gould is going to join us next. This is Bloomberg.
Eternal life, a concept that has captivated the imagination of humans since the dawn of time. I'm David Rubenstein. The advances that have been made in science recently has made it possible for people to live much longer than they would have otherwise lived decades ago. With innovation exploding, it's harder than ever to know what's real and what's just hype. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
It is at the front and center of what we're trying to resolve and understand.
Americans need to know they're at risk of dying from the next pandemic.
What we really need in our lives is to build community.
Knowledge is power. The generation before us, cancer was considered a sign of weakness, and many never talked about it.
Longevity without health is not valuable, but if you can maintain health, people are productive when they're older.
Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything. Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg.
Happy Monday. This is the opening trade. We are 30 minutes into today's session, so possibly not a great surprise, given all the risk events on the horizon this week, that you are flat across the benchmark. You've got Iran, you've got earnings, of course, and you've got central bank action. The DAX is outperforming, marginally so, up 0.3%. In terms of what's happening on the CAC, you're looking at gains of just 13 points. On the downside, interestingly, despite the gains coming through for energy, which was the leading sector the last time I checked, with Brent up about 2% in the session, the FTSE 100 is actually flat at 10,373 over the last 30 days. The FTSE 100 has underperformed its European and US counterparts. Guy, what do you see?
Tom did really well then. He made a market that is basically doing nothing this morning sound quite exciting. And to be honest, I don't have much that I can add to that. If you look at what you're saying in terms of the distribution, you've got 264 up, 320 down. The only thing I will add is that volume is kind of galactically light this morning. So the market, that's a theme that continues. And this is an average, remember, so in theory, things are getting worse. In terms of the single stocks, actually, I think there probably is a little bit of excitement here. So let me just talk you through some of the stocks that I think are interesting. Nordex is definitely one of them. The win story this morning is certainly a win. Nordex is up by 11.4% on the back of its earnings this morning. That is a positive story. Siemens is up by 2%. Rheinmetall, the defence space, is actually having a little bit of a more solid day today here in Europe. So that stock, defence has actually had not a great run recently. On the downside, I think the only interesting takeaway this morning is, despite the fact that we saw very strong numbers out of Asia overnight, it did fade a little bit. ASML is up by 1.4%. I do wonder whether the Asian trade was more of a reaction to Friday's US trade. And this morning, this is kind of a fresh look at what the narrative looked like. So ASML is down, Process is down as well. And Sainsbury, a big downgrade this morning for J. Sainsbury. That stock is down by 3%, Anna.
Guy, let's have a look at some of the other stories that we're covering this morning. Iran has reportedly given the US a new proposal to reopen the Strait of Hormuz and end the war. This, according to an Axios report, which cites a US official and 2 people with knowledge of the matter. It says that the offer calls for extending the ceasefire to allow time for Washington and Tehran to work towards a permanent end to fighting. Budget airlines are reportedly working together to ask the White House for a relief plan. This, of course, in the United States. According to the Wall Street Journal, the proposal asks for $2.5 billion in exchange for convertible equity stakes in the carriers. And in tech news, DeepSeek is slashing prices for its newly released flagship model, intensifying competition across a Chinese artificial intelligence industry that is trying to take on Silicon Valley. The AI lab is offering a 75% discount to developers using the DeepSeek V4 Pro and is reducing fees across its family of AI platforms to a tenth of their original pricing. Tom.
Okay, let's stay on AI and shift the focus a little bit to robotics, because there's been a big bet on smarter robots. Germany's Seriact just pulling in 110 million US dollars to push the boundaries of what machines can do on their own. The Series B funding round was led by venture capital firm Headline. Seriact co-founder and CEO Ralph Gould says most of the new funding will be used to build out the company's newest AI model, which can help a machine simulate different outcomes and decide what action to take next. I'm pleased to say that Ralph joins us now. Ralph, thank you for your time. Congratulations on the raise. Just give us more details on what this 110 million US dollars can do for the company and how it sets you up in terms of building out those partnerships and building out the models.
Hi, Tom. Thanks so much for having me today. It's a pleasure to be here. So we are really thrilled to announce this fundraise, and clearly what we are going to allocate the funds on is our latest AI model called Cortex 2.0. The great thing about Cortex is that it is grounded in real-world industrial deployment. It's basically a world model that is trained on over 1 billion of real pigs. No simulation data, but real-world data. And with the proceeds of the funding round, we are now unlocking this new model that is able to anticipate outcomes when it basically reasons about the environment to solve a robotic task. Similar like humans, it can predict the world's outcomes and thereby is able to do better robotics manipulation. But let's make an easy example. When humans basically go grocery shopping, they stack a bag of groceries and then they wouldn't probably throw a can of soda onto a bag of chips. And this is an easy example of how our robots are able to anticipate outcomes by understanding the physical world and thereby delivering better manipulation capabilities.
You have your software working in robots for the likes of BMW and Daimler. What is the pace with which you are seeing industrial companies adopt these solutions, and what is the biggest challenge you have to overcome when you're making the pitch? What is the key question or the key level of skepticism that you have to get through to get these companies to adopt?
Yeah, great question. So the key question is, can the robot adapt to new environments and to kind of edge and corner cases? What happens when something isn't in place? Is the robot able to generalize and leverage the experience it has onto new and unseen scenarios? And thereby we can say the Seriact Cortex model has the leading generalization level out there in the industry. And that is based on the fact that we have actually trained it on the world's largest real-world robotics data set. Seriact has a data and performance advantage because we have the world's largest robotics fleet out there at real customers, at real production site. Over 200 systems working through real orders, over 200 robots working through real orders 24/7 and thereby generating a large amount of data. It is a clear thing that physical AI has a data problem. Unlike ChatGPT, for instance, we couldn't train a robotics model on an internet of data. Like the biggest problem, clearly, for physical AI is the lack of data. And Seriact is bridging that data gap by basically combining customer value creation, robots that do useful things, and thereby acquire the data. And because of that, because of Seriact has collected over 1 billion pics in real environments, our model is able to generalize so good and can deliver full productivity from the first day.
Ralph, where is the biggest use case for these robots? Is it in industry? Is it elsewhere? Is it in the home? Where do you think the biggest use case will ultimately be?
That's a great question. I'm glad you bring it up. So at Syriac, we don't try to solve all the problems at once. We are basically starting in easier use cases with a more controlled environment, such as industrial applications, pick and place in warehouses, working in manufacturing facilities. And then we have our robotics brain emerging from industrial application and then generalizing into service industries to do store replenishment and ultimately healthcare and household environments.
Yes, and on that subject, Ralph, when do they make it into the home? Give us a year. When do you think that happens?
This is Anna's obsession.
No, I think that's a fantastic question. It's hard to put a time frame here, but what we're already doing is working with warehouse grocery customers. So that means our robots have picked like hundreds of thousands, even millions of groceries already. And then, of course, getting robots into the home, we have a huge head start already. But for the household environment, I think the humanoid form factor needs to be advanced a bit more. And then we are ready to roll. Maybe one thing that is worth discussing is that at Syriac we don't focus on the hardware per se. We are strong believers that the biggest unlock is the AI. So therefore, the Syriac brain, the Syriac cortex brain, can empower all kinds of form factors.
I feel like I need a Syriac brain this morning. Ralph, how many jobs do you replace as a result of this technology ultimately?
I wouldn't necessarily say that we are replacing jobs. I would say we are augmenting humans. What does that mean? Still, one of the greatest challenges humanity faces at present is the demographic change. We have a problem or a challenge of vanishing labor, and we need to increase our productivity to remain competitive. So therefore, our only solution for humanity is to leverage robotics automation to overcome labor shortages and to have sufficient productivity and capacity in healthcare, in household, and also in industrial applications. So the Syriac brain empowers robots so that the robots can do ordinary tasks and humans can focus on the extraordinary things.
Ralph, thank you very much. Thanks for joining us. Great to speak to you. The Syriac co-founder and CEO, Ralph Gould. Let's stick with technology innovation. Quantum computing is widely considered a potentially transformative technology for finance with the capability to add billions of dollars in revenue. However, it currently remains largely experimental with limited real-world use cases. And that's left some of the world's largest banks split on whether to invest further or cautiously wait and see. We're joined now by Bloomberg Finance reporter who's been writing the Big Take story, co-writing the Big Take story for today, Will Shaw. Will, nice to have you with us. So, Will, what are the big Wall Street banks doing then to harvest the potential of quantum computing? Let's start there.
So this dynamic's best understood by looking at Goldman Sachs and JP Morgan. Both banks, more than 7 years ago, began experimenting with quantum computing, what it might do. Now, about 3 years ago, Goldman Sachs were looking at how they could increase returns for their wealthy clients through quantum. They were surprised, to say the least, to discover that it would take their algorithm millions of years in order to solve this problem. The team was disbanded shortly after during a wider cost-cutting program, and Goldman has remained on the sidelines ever since. JP Morgan is taking a very different approach. They've still got about 50 mathematicians, physicists, computer scientists working on problems about how quantum might help with portfolio optimization, cryptography, machine learning. So they still remain very committed to what it might eventually deliver.
You've boiled it down to JP Morgan versus Goldman Sachs. Is Goldman Sachs just representative of most banks? Are most banks in the Goldman Sachs camp, or are most banks... Like JP Morgan's enormous and it has a lot of capacity to do these kinds of things. Yeah. Most banks, I'm assuming, don't.
I think it's fair to say that JP Morgan is the exception rather than the rule. Yeah. It's easier to figure out how quantum can help in areas like life science, chemicals, defense than it is in finance. That's because there's such a myriad of problems that people are trying to address in finance. That includes transaction fraud, risk management, predicting asset classes. Most banks are largely staying somewhat on the sideline, given how long it might take in order to deliver on the promise of quantum computing.
Can you give us a bit more detail in terms of that promise then, Will? And why would they not look just to buy in solutions rather than employing armies of mathematicians and quantum wizards? Why not just buy it in from an external source when the technology is mature enough? And where is the potential most significant upside for these banks longer term?
So they are relying on a lot of auxiliary firms, tech startups, to help them with this. They're not working purely in isolation. Now, their goal largely is, if we look at McKinsey's findings from last year, they talked about how by 2035, quantum computing in total might deliver about $72 billion in revenue. That compares to about $4 billion in revenue in 2024. So people are committed. They are working to some degree in areas where they see potential benefits. So you have firms like UBS, they're training up about 50 quant analysts in the basics of quantum computing. Credit Agricole, they're looking at how quantum computing might assist them in spotting potential credit downgrades. Like I said, though, this remains, it's not like AI. You're not seeing the level of investment, the level of interest, the identification of potential in the same way that you are with AI. I think firms broadly recognize there'll be years of work before anyone sees a big payoff in this area.
It's a really interesting read, though. Thank you very much indeed for bringing it to us. William Shaw, who co-wrote today's Big Take on your Bloomberg terminal. Coming up, traders warn the worst of the oil shock is yet to come. The Strait of Hormuz remains effectively closed. We're going to get the latest on the potential ceasefire talks. That is coming up next. This is Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 60-65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anim, only on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Welcome back to the opening trade, 8:47 in London, and European equity markets very much flat across the top line. We do have some movement under the hood. The DAX is up by 0.3%. The AEX over in the Netherlands down by 0.6%. So we do have some movement, but overall we're flat. And I guess it makes sense because we have such a busy week ahead of us, don't we? With the corporate earnings agenda looking really full, lots of central banks, and that says nothing about the geopolitics.
Let's talk about the geopolitics. The Iranian foreign minister, I think, is in Moscow now. The meeting with Vladimir Putin. Talks with the US, apparently between the Iranians and the US, remained at an impasse. So where does that leave us this Monday morning? Jumana Basetchi joining us from Dubai with the latest. Talk to me about the implications of this trip to Moscow.
Yeah, well, it is a notable one, Guy, and especially because it's coming on the heels of this weekend of a whirlwind tour that the Iranian foreign minister has spent throughout the region. He visited Islamabad twice. He went to Oman. This morning landed in Russia, and he is supposedly going to be meeting with the Russian President Putin in a couple of hours. And here, it is interesting to see that Russia is having such a high-profile meeting with the Iranian foreign minister, given everything that's gone down, especially because Russia, in this instance, are not a neutral mediator. There have been multiple reports of them having shared both intelligence and surveillance support with the Iranians in their bid to track down key U.S. assets in the region. Also reports of them sharing key technology and possibly even weapons as well. And so there's an interesting angle that is opening up here, not least because economically, Russia is emerging as one of the key beneficiaries of this war as well, with higher oil prices and that temporary lifting of the sanctions waivers from the U.S. But what is emerging from this whirlwind diplomatic tour that the Iranian foreign minister has conducted is the ask and the conditions that the Iranian side are putting forward in order to proceed with discussions with the U.S. And this is it sounds like more like a wish list as opposed to conditions that the U.S. are going to accept, including a new protocol around the Strait of Hormuz, war reparations, a lifting of the U.S. naval blockade. And at this point in time, of course, even though there's plenty of pressure from nations around the world to lift the blockade, the mutual blockades that are in place, there's no signal from the U.S. side that they're planning to do so. Yesterday, President Trump, in a Fox interview, actually said that the blockade is going well, and in a couple of days' time, what will happen is you're going to start seeing that Iranian storage capacity reach its limits, at which they expect the Iranian side to come to the negotiating table and make more concessions. So at this point, it's unclear whether the U.S. are actually going to subscribe to the conditions that the Iranians have set forth. And there was a lot of talk this morning about maybe this being a breakthrough of some sort. But we've yet to hear from the U.S. Axios are reporting that there will be a Situation Room briefing later this afternoon. But once again, it is unlikely to yield the big breakthrough that the market is expecting. What we do understand, though, is a better sequencing of how the events could be in terms of, number one, thinking about what they're going to do about the Strait of Hormuz before, two, proceeding on to the bigger topics around the nuclear file, the nuclear program, the funding of proxies, and Iran's ballistic weapons arsenal as well.
Yeah, and we'll be watching, of course, to see if there is any further reaction from President Trump and his team later today. Bloomberg's Jumana Basetchi in Dubai following that visit as well by the Iranian foreign minister to Russia. Jumana, thank you for that update. Let's take a look at what else we are watching throughout the week. Later today, King Charles arrives in the US for a 4-day visit. On Tuesday, the BOJ rate decision kicking off the big central bank action, of course. On Wednesday, you've got the Fed rate decision. You've also got US tech results from Alphabet, Meta, Amazon, and Microsoft. A huge day for earnings, particularly on the tech front. And on Thursday, central banks back in focus with the European Central Bank and the BOE coming through with their rate decisions.
So what are we focused on? It is a massive week. Skylar's here. She's going to tell us what we should focus on. Skylar Montgomery-Koenig joining us from our M Live team. What's the most important thing you're watching?
I mean, it's still the oil price for bonds in particular.
Okay.
For equities, not so much. Yeah, I think, well, this is it, right? The transmission channel is you have higher energy prices, that feeds into growth and inflation. The central banks then respond to that, and the bond market responds to the economy and what the central banks are doing. And so your signal of what the central banks are going to do is coming from the real-time variable of energy prices, because there's enough of an impact that there will be that feed through. Now, you know, I'm not a geopolitical analyst, so I have no idea actually what's going to happen from that perspective in terms of negotiations this week, so we just have to kind of watch. If we just range trade throughout the week, then bonds maybe can range trade, and we'll take signals more so in that case from central banks.
Skylar, as you were talking there, we saw Brent go over $108 a barrel, some sort of messaging. So in terms of the central banks then, the most interesting ones, the Bank of Japan, I think, could be interesting, because up until so recently, we'd been expecting a hike, actually, hadn't we, from the BOJ? Then there's a lot of talk about how, no, they won't hike, maybe they'll hike next time. Where do you think the interest will fall in terms of the central bank conversations?
Yeah, I mean, Bank of Japan certainly, because the expectation before the war was they would be doing hikes regardless this year, and they very much react to volatility and uncertainty. And so they kind of just freeze when that happens, which is why a hike isn't expected at this meeting, but there's something like 16 basis points priced for June, and that could be quite dangerous for the currency if you have more dovish soundings from them. If they're more concerned about the growth impact from higher energy prices than the inflation impact, that could see dollar-yen rapidly go above 160 and bring up risks of intervention. So that's very important from a signaling perspective of what comes next from them, because hikes were expected and now they've been pushed out.
On the equity market story, we're speaking to Mark Dowding of Blue Bay Asset Management at the start of the show, and he was saying he thinks that there should be a wider divergence between US equity performance and European equity performance. The other side of that, I guess, is S&P 500 up about 10% over 30 days. The Stock 600 is up about 4%. So you do get that divergence. Mark thinks it should be wider. How do you think that story unfolds in the days and weeks ahead?
I mean, I think it absolutely should be wider, particularly in the current environment where you have energy prices very high. That's much more negative for growth in Europe, because Europe is an energy importer versus the US being an energy exporter. I also think you had outperformance of European stocks last year that wasn't necessarily warranted by the relative earnings picture. And going forward, you have a higher tech weight in the US, which is what's powering earnings and equities higher. You also just have this perspective where AI adoption rates, for example, are higher in the US than they are in Europe. And if you think that leads to productivity, it should be long-term outperformance on that. So I think there are a number of things that are skewing that way and will likely continue to.
Why are people buying tech? Is it because they like tech? Is it because tech's a great place to hide out? Is it because everything else looks rubbish and tech's the only thing where you can actually kind of make a case for the... It's a really confusing picture at the moment in so many ways, why you're suddenly getting this rapid move to the upside. Is it just momentum? Is it... what is it?
It is really confusing, because last earnings season as well, we had really good results for tech companies, and they didn't do particularly well because people were quite scared. I think it's partly a repositioning of that, because you're not finding growth stories elsewhere, because you're more worried about growth overall because of higher energy prices, and you can say these companies are generating growth now that is slightly independent of that. And I think it's partly a catch-up to that, and a catch-up to valuations had adjusted lower. And these are, you know, the valuations are higher than elsewhere, but the reason you have higher valuations is that U.S. tech companies have just been more profitable over the last decade. And if that continues, there's not a reason that you shouldn't adjust up now that they're cheaper post-last earnings season.
Skylar, just briefly, scenarios seem to be catching. All central banks are about scenarios now. The ECB was about scenarios. The Bank of England set to be about scenarios around the Strait of Hormuz. What should we expect from the BOE?
Yeah, the Bank of England is also a really interesting one, as well as the Bank of Japan, because they have a vote on hikes and cuts, et cetera. And you could see a couple of members vote for a hike at this meeting. And we've had a big shift in expectations for them, right? We were expecting 2 cuts prior to the war. The market's now looking for more than 2 hikes. So if it gets validated, bonds could be under significant pressure there.
Yeah, and that would be tough for the UK economy. It could be a pretty uncomfortable decision even for the Hawks on the BOE. Skylar Montgomery, thank you very much. Indeed, Skylar Montgomery-Koenig, of course, looking ahead to a huge week of earnings and, of course, the central bank action. You look at gilt yields now up about 2-3 basis points, largely in line with what we're seeing in the European bond action as well. Across the stock picture, you're just seeing very, very soft, a little bit downside now, down to 10% on the benchmark, having futures flagged earlier positivity, but that's been wiped out.
US futures flat to negative now, Guy.
It's going to be a mess. Today just feels like the calm before the storm, doesn't it?
Huge week.
Huge week coming up. The Pulse is up next. This is Bloomberg.
how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
What happened was you were on.
Earnings season is here.
Earnings season begins. Let's get right to it.
Bloomberg is first to break the numbers.
Netflix here crossing the terminal.
Let's go to a retailer, Urban Outfitters.
I'm looking at shares of Paramount Skydance.
Morgan Stanley, another monster quarter.
A lot still to come.
With the smartest insights.
What are some of the sponsors and some of the CEOs talking about here?
I think the biggest risk continues to be that inflation gets imported around the world again.
Continuing coverage on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
When it matters, investors turn to Bloomberg Surveillance.
I said it maybe even on your show here.
I hear you guys talking about this a lot.
Our investors are really thoughtful. They're engaged. They listen to your show.
As a number of people you've had on your show have mentioned.
The three of us have talked about on this show many times.
I think you find, and you've heard this on your show.
We've already talked this morning on your show. As you know, and you cover every day on Bloomberg.
You've heard a lot of guests talk about that.
I think your show is incredible.
Bloomberg Surveillance. We're talking about it.
The Iranian foreign minister has arrived in Russia after a report that Tehran could reopen the Strait of Hormuz if the U.S. ends its blockade of Iranian ports. Well, the man accused of storming the White House correspondent dinner spent years building up his arsenal of weapons, this according to intelligence documents seen by Bloomberg. And China's DeepSeek is aggressively cutting fees for its flagship new model as it tries to reshape the AI race with Silicon Valley. So there is quite a lot going on. It's also a very big week in terms of central banks. Again, U.S. stocks seem to be holding near record highs. There's a belief remaining pretty firm that the U.S. and Iran can near a deal to restore Middle East oil flows. We don't have concrete signs of that, but that's what the market is latching on at the moment. You can see Brent crude 108.23. Again, traders are also eyeing major mega cap tech earnings, but also central bank decisions this week. 4 hyperscalers will report on Wednesday. The Fed will also deliver its latest interest rate decision on Wednesday. Of course, investors will look at that to see how policymakers will confront the risk of war-driven inflation shock. And then you see a little bit of muted response here in the UK. We're down 0.1%, but the IBEX is up, and then the CAC 40 and the FTSE MIB are pretty much flat. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. It's a major week for central banks and big tech earnings in the U.S. In just a moment, we're joined by Simon Dangor, Deputy Chief Investment Officer of Fixed Income at Goldman Sachs Asset Management. We'll also bring you, of course, the latest on the attack at the White House Correspondents' Dinner in Washington over the weekend. But first, Iran's foreign minister has arrived in Russia for a meeting with President Vladimir Putin. It comes after an Axios report that Tehran has given the U.S. a new proposal to reopen the Strait of Hormuz and end the war that includes postponing nuclear negotiations. Now, for more, we're joined by Bloomberg's Jumana Bersetchi in Dubai. So, Jumana, what more do we actually know about this proposal?
Yeah, well, Francine, on Friday, I think expectations were really high that we were going to see another round of direct U.S.-Iran talks in Islamabad over the course of the weekend, and clearly that has not transpired. But what has gone down is a whirlwind trip by the Iranian foreign minister, who flew to Islamabad. He then went on to Oman, back to Islamabad again, and then a couple of hours ago arrived in Russia and will be meeting with the Russian President Putin. And what has emerged here is the Iranians' counter-proposal for what they deem as necessary conditions in order for negotiations to continue. And here the wording is very important, because they're not coming back and saying these are the conditions for necessarily peace or some of the longer-term issues around the nuclear file. These are just the conditions that they would like to see in order to return back to the negotiating table. As reported by Iranian state media, they're looking for things like a new legal framework for the Hormuz, a lifting of the U.S. blockade, compensation for damage, and guarantees against further military action. Clearly, many of those are non-starters as far as the U.S. perspective is concerned. And over the weekend, President Trump gave an interview to Fox where he was talking about the success of the U.S. naval blockade and actually suggesting that Iranian storage capacity will start to get filled up in the next couple of days. So the question is, why would the U.S. take that point of leverage away from themselves in anticipation of what they think is going to be a lot of economic hardship to follow on Iran, because their exports are essentially going to be cut off the longer this blockade goes on for? So we haven't got a formal response yet from the U.S., expecting it to come at some point later this afternoon. Axios reporting that there will be a Situation Room briefing later today. But from what we can gather from all of the diplomatic shuffling that has taken place over the weekend, it is clear that from the Iranians' perspective, what they're trying to do here is to bifurcate the issue of the Strait and the reopening of the Strait of Hormuz from the nuclear file, and try to deal with the first thing now, and then later on deal with the thornier issues of what to do with the nuclear program. And just a reminder to viewers, it took the Obama team 20 months to get the JCPOA across the line. If they're planning on looking at that sort of time frame, it may take a very long time to get a nuclear deal, a new form of a nuclear deal across the line.
Jumana, thanks so much. Jumana Bersachi there with the very latest, of course, in the Middle East. Now, a 31-year-old man is set to be arraigned later over this weekend's shooting at the White House Correspondent Dinner in Washington. The acting attorney general says a suspect was probably targeting Trump administration officials. Now, let's bring in our Washington Deputy Bureau Chief, Laura Davison. So, Laura, good morning. What more do we know about the attacker?
Yes, so he was a 31-year-old California man. He wrote this manifesto allegedly that called Trump a traitor and referred to himself as a potential assassin. He arrived in Washington a little bit before the event, checked into the hotel where the event was taking place, and so he was able to evade security that way. He also allegedly took the train across the country, so he didn't have to fly with weapons. So he was able to, really kind of go undetected. And then was able to breach one of the levels of security to get closer to the ballroom where the president was scheduled to speak later that evening. There's multiple checkpoints there. He didn't actually get into the actual room and was tackled by Secret Service before he was able to do any sort of damage. But this has raised a lot of concerns within the White House and elsewhere in Washington that there aren't enough security protocols in place for particularly this event, which is not held on White House grounds. And there's more to come in this arraignment. His motives are not exactly clear on what he was trying to do, but there's an arraignment later Monday in Washington, as well as additional charges local authorities have said that we should expect.
Yeah, I think we found about manifesto. I mean, I've been to the event many times, and there is quite a lot of security once you're in the room. But actually, if you check in the day before, like supposedly he did, it does get quite tricky. So what are some of the questions that, the security people around President Trump would be asking themselves today?
Yeah, a lot of questions, both around, questions about Amtrak and carrying weapons on Amtrak and security there, questions about the event itself, is there enough security both inside the building but outside the building of people being able to get in. The White House has also raised this as, sort of a case for why the White House ballroom needs to be built. This has been sort of a legacy project that Trump has been very focused on, that he wants to have a very large-scale ballroom on White House grounds. This has run into some legal trouble, as well as raising questions about the money from this, which is allegedly coming from private donors, but has been a controversial project within Washington. So this is, the White House has sort of used this as an opportunity to say that the White House needs to have more control over large-scale events like this, and it should be happening in buildings that are controlled by U.S. government authorities.
Laura, thank you so much. Laura Davison there with the very latest, of course, on what happened on Saturday night at the White House Correspondents' Dinner. Now, policymakers in the U.S. and across a group of 7 will probably keep interest rates steady this week while watching nervously for signs of higher energy costs fanning inflation. Let's get the thoughts. Simon Dangor, he's Deputy Chief Investment Officer of Fixed Income and Head of Fixed Income Macro Strategies at Goldman Sachs Asset Management. Simon, thank you so much for joining us. It's a huge week for central banks, right, as we try and figure out, and they try and figure out inflation. What do you think of market pricing? Are the markets expecting just too many hikes from both the ECB and the BOE?
Great to be here, Francine. It's going to certainly be a super interesting week as we get to understand with a little bit more detail how all of these central banks are going to risk manage this situation. We got hints of that back at the IMF a couple of weeks ago, but this is really the moment for central banks to give us a clearer picture. I think, as you mentioned, everyone's really going to be playing for time here, although I think rhetoric is going to be pretty hawkish, particularly from the ECB and the Bank of England, as they try and risk manage around inflation expectations. And I think they'll want to come out of this with pricing for the June meeting being relatively full. But of course, if all of these central banks pass this week, then the next decision is going to be in 6 weeks' time. And in 6 weeks' time, the facts on the ground are going to be very different. And of course, what really matters is going to be decisions taken in Washington and Tehran. If we get gas flow and energy flow coming through the Straits, we could see a sort of very different risk proposition for central banks in June. If we don't, then situations in physical commodity markets are going to be much worse, and that's a very different setup.
So, Simon, I mean, if you take it back, so you're not expecting anything from Bank of England or ECB this week. What happens from here until the end of the year? Well,
it's interesting because I think that if you do get the opening up of energy flow through the Straits come June, then we may get a hike from the ECB. We may see the beginning of a sort of series of rolling holds, really dependent on where growth plays out. And we got some indications around growth for Europe last week with all of the business surveys that were really quite weak, that were building on already some disappointment about where growth was playing out in the early parts of this year. So we think that the market in that scenario probably overprices the chances that the ECB does deliver a couple of hikes. And for the Bank of England, the setup is similar in many respects, with a different mix. Obviously, a worse inflation picture going into this, but also a worse labour market and much higher rates than we're seeing in Europe. Rates that most people on the Bank of England would judge to be already in restrictive territory. So again, if we do get that better scenario where you do start to see energy flowing through the Straits over the course of that 6-week gap, then we could see a rolling pause, particularly from the Bank of England. Of course, in the other scenario, where we see much higher inflation, much higher commodity prices, then I think you will see hikes from central banks. Yeah. But of course, growth is going to do some of the heavy lifting here, particularly in the UK, where you have that starting point of the weaker labour market.
So, Simon, what's your prediction? And again, it does feel like market pricing for what central banks do is different from equity pricing. I mean, there's just a mismatch. So one of the two is wrong.
Well, I mean, it's obviously they're sort of pricing to different horizons in many respects. And I think certainly people have used rates in order to protect the tail of the bad scenario. That sort of has left us with a risk premium. So we think the markets, particularly in Europe and the UK, are overpricing things. And as you get more than 2 hikes priced for the balance of this year, then that starts to look like an interesting place to deploy risk. It's tough to deploy a lot of risk in rates at the moment. And really the interesting opportunity is going to be when we come out of this and eventually, at whatever point that is, energy starts to flow through the Straits again. And what you'll find is that the echoes of this shock will play out in very different ways in different parts of the global economy, in some respects similar to what we saw after Liberation Day last year. And that's going to create quite a rich environment for rates investing.
So what are you buying right now?
So, as I said, we think opportunistically the front end of Europe and the UK. Okay. Japan is an interesting setup.
Everywhere in Europe or certain countries in Europe?
Mostly focused on the rates complex, so the core rates. I think the setup for France is tricky. I think this shock combines in a very difficult way with the sort of electoral cycle in France. That's not really in the minds of the market right now. But as the year progresses, that's going to be something which is which is important. I think Japan's an interesting play here, very different set of dynamics to what's going on in this time zone, and that's another area of focus for us.
Simon, I mean, what's the right way? Do you think we should look through, you know, inflation's tricky. We had a good conversation also on Friday with Clement Fuss, the head of the IFO Institute. He's really worried about stagflation. This is a nightmare, right, for chief executives. It's a nightmare for central banks to deal with if it becomes entrenched. Do you really worry about stagflation, or is it just a big word that we're throwing around?
I think clearly we're going to get a bad mix of inflation and growth through this next episode. I think when we really think about the sort of concept of stagflation and as something which is really damaging in the long run, it really depends where inflation expectations goes. Certainly in Europe, I think what we've seen so far has been more encouraging. We'll have to keep a close eye on that. If you look at, let's say, for instance, the PMIs that we received last week for Europe, in fact, you've had sort of less of a reaction on output prices than you saw in, let's say, for instance, the 22 episode. Break-evens in the inflation markets further out have been very, very well behaved. And of course, you don't have the level of fiscal support that we saw in 2022 that can propagate this type of shock in a way that can result in a sort of bigger de-anchoring of inflation expectations. So we're, at the moment, more encouraged that we won't have a more prolonged period of stagflation, but we have to watch the data. Of course, this is a very novel shock.
Is there anything that you're expecting from the Fed? I mean, we have Kevin Warsh. He's kind of like, you know, a new entity. And if he's only one vote, he can significantly influence the outcome or certainly the conversation.
Well, in some respects, the Fed right now is in a relatively happy place because the labor market in the US looks to be in pretty good shape, and some of the concerns that we would have had at the end of last year seem to have fallen away. But at the same time, it's not strong enough to really start to push up tightening of the labor market, push up wage pressure. And so for now, the Fed can stay on hold. And as you say, we've got the transition. Look, I think sometimes how much Warsh might change policy making and the reaction function of the Fed is maybe overstated. But anyway, if we keep inflation expectations anchored in the US, if the labor market is stable but not strong and inflation in an underlying sense continues to normalize, then we do see a couple of routes to rate cuts by the end of the year, perhaps December, perhaps a little bit earlier than that, although that's going to be very much dependent on that balance of growth and inflation.
I mean, again, if you look at, I guess, this mismatch, right, between equity and fixed income traders, are we misunderstanding the deflationary pressures that could come from AI?
I think it's less about sort of the deflationary pressures that are going to come from AI in terms of how we think about that mismatch. I think that's a really interesting question. I think in the short run, it's really not obvious to us that AI is a very big near-term source of disinflation. I think it definitely is something which becomes important further out. We don't see a lot of evidence right now of disinflation processes. If anything, if you look at the US, there's sort of a demand for resources. In fact, if you look at the core PCE, probably there's about 9 basis points of inflation by the end of the year that's sort of linked to some of the pressures in chips markets. So at the moment, it's sort of hard to make that case. As we look out, everything's to play for from that perspective. And certainly when we think about a Fed which has some chance of cutting rates towards the end of this year, as I discussed, little chance of rate hikes, and these longer-term questions of where inflation might go, even if they're not shorter-term questions, then when we see sort of 5-year rates in the US up in the sort of high 3%, just below 4%, that looks like an okay thing to own in portfolios.
Simon, overall, does the Bank of England actually have the hardest job? And also, if you look at the interest rate differential between where the Bank of England is and the ECB, I'm not sure what justifies it.
Well, I think that the Bank of England does have a hard job because the setup going into this is the toughest setup. You have sort of inflation running above target. You've got a labour market which is weakening. You've got more questions around that inflation expectations process. In fact, if we sort of look under the hood at what's going on with inflation, we would be more constructive than some of the hawks in the Bank of England about what's going on. And you've seen quite a lot of disinflation, particularly in private sector wages. So we think that unless you see something of a disanchoring inflation of expectations, then the reaction function of the ECB, or the Bank of England rather, can look something similar to the ECB. And there is some capacity to not overdo it on rate hikes in that bad scenario. But we'll have to see. We'll have to watch the data. Certainly, if we look at some of the survey data that we got last week from the UK, that wasn't totally encouraging on this front. So we'll have to see how the data plays out.
Absolutely, Simon. Thanks so much for joining us. Simon Dangor there, Deputy Chief Investment Officer of Fixed Income and Head of Fixed Income Macro Strategies at Goldman Sachs Asset Management. Coming up, a report that Iran offered the U.S. a proposal to reopen the Strait of Hormuz. We discuss all of this with Julie Norman, professor at University College London. That's coming up next, and this is Bloomberg.
Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, now for a full hour, only on Bloomberg Television.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. The Bank of England makes its next interest rate decision against the backdrop of conflict in the Middle East. Investors will look to BOE Governor Andrew Bailey for signals on the rate path ahead.
Our next decision is at the end of April. A lot will have happened.
Tune into Bloomberg for live market reaction and analysis from the studio and on the ground at the Bank of England. It all starts Thursday at noon on Bloomberg. Context changes everything.
Welcome back, everyone. Now, Axios is reporting that Iran has given the U.S. a new proposal to reopen the Strait of Hormuz and end the war. That includes postponing nuclear negotiations. Now, we're now joined by Julie Norman, professor at University College London. Professor Norman, as always, thanks so much for joining us. Look, I guess the two sides are talking, but there's nothing set in stone. So how does this get better? How do we have some kind of resolution or actually ceasefire that really holds?
Well, good morning, Francine. You know, the reports that we're hearing tomorrow indicate an attempt to break this stalemate that we just seem kind of stuck at this point. And what this new proposal would do is essentially agree to end the war, open the Strait of Hormuz, but essentially postpone those essential talks about Iran's nuclear capabilities, the enrichment of uranium, and transporting out any current uranium that's still there. So those are two big items that Trump has wanted to have part of a comprehensive deal. And I think it'll be really difficult for him to simply punt on those or put those off because he knows he'll lose that leverage. But we expect a meeting today in the Situation Room to discuss this and see if there is a way to work from this current proposal to get something to move this forward.
We understand that the Iranian foreign minister is in Russia for talks with Vladimir Putin. How does Putin factor into this?
Yeah, you know, for Iran, there's a couple different asks that they want out of these negotiations. And one is a guarantee that there will not be further attacks from the U.S. and or Israel. And so our understanding is that one reason that Iran is seeking meetings with Putin is to have a Russian kind of guarantee against future U.S. aggression, such that if the U.S. or Israel chose to enact military action again, Russia would essentially be there to defend it and cooperate with Iran against that. So we understand that's what that meeting is about. It's unclear if Putin is going to be going for that with his own military stretched quite thin still with Ukraine, but that seems to be where that conversation is motivated.
So what do you think happens next, Julie? And actually, how desperate is the U.S. and the U.S. administration to strike a deal, almost any deal at any cost, given the price of oil and especially the price of gasoline going up?
Yeah, well, Francine, obviously we've seen these costs going up. We know that Trump does very much want a deal. But at the same time, he does, I think he can still wait out the Iranians a bit longer. He thinks he still has the upper hand economically and as well as militarily, still with this military threat hanging over Iran. So my guess is he will try and squeeze out some more concessions on the nuclear issue. I can't see him just walking away with nothing on that and expecting that to be enough. But as we always know with Trump, he can play this different ways, and I think we'll know a bit more after that meeting today.
Julie, what are you expecting actually from the Iranian side? I mean, do we have any understanding of how strong this regime is?
Well, I think what we can see is that the regime is able to endure quite a lot. They are not going to crumble easily. They are not going to give Trump a win on this. And they have shown, much more resilience and capacity than certainly the U.S. had expected them to. Obviously, they are also hurting economically. They were hurting economically even before this war started. And at some point, they will need that flow of money from oil, but also just sanctions lifted. But I think what we're seeing now is that neither party is quite at that hurting point where they're willing to make major concessions. Each still thinks they can absorb more of this and extract more from the other. Again, opening the strait is key. I think we see that Iran does see that as a priority, but we also see that they want to maintain their sovereignty when it comes to the nuclear issue, and that has always been a no-go, obviously, for Israel and increasingly for the U.S. as well.
Julie, can both sides really get what they want, given where we are now, or is there going to be an automatic winner and an automatic loser?
Well, I think it's clear that no one's going to get exactly what they want out of this. And usually when things get to this point, we look for some kind of off-ramp, some kind of resolution where both can claim that they came away with a win. You can kind of go back to your respective citizenry and say, we got this out of this deal. For Iran, their stakes were simply surviving this war. They can go back and say that they, survived this onslaught from the U.S. and from Israel, and that they might have even, been able to, show much more leverage in the strait, which we all know they can deploy once again in the future if needed. And for the U.S., Trump really needs to find a way to make this a win. I think in the best case scenario, you would get back to a similar deal like we had with the JCPOA, the deal that was negotiated under Obama, which Trump famously pulled out of. And so for Trump to have something better than that, I think that's going to be a challenge for him. But he's going to try and find a way to spin it that makes this look like it was a win for him one way or the other. But I don't think we're at that point yet.
Julie, spin it at home, but does he spin it? How does he spin it with, what would be the minimum that the U.S. needs from Iran if a nuclear deal takes, at least 20 months to try and really get something on the cards?
Yeah, and this is the question right now, is how to turn this into a win when it's really looking more like a quagmire. Obviously, opening the strait is going to be a bare minimum, but that just brings us back to where we were before. I think Trump will try and get some kind of concessions on the nuclear issue, but again, my guess is that's going to be somewhat rhetorical, and it will be a little bit difficult to have that, again, at the level that the administration has gone in wanting. But again, I don't think we should underestimate Trump and some of his tactics. He still does have a lot of military assets at his disposal, and I don't think he will hesitate to pressure Iran a bit further before calling this off. I expect that we'll see a bit more pressure before he decides that he's done with this.
Julie Norman, thank you so much for joining us. Of course, a professor at University College London. Coming up, King Charles arrives in D.C. to meet U.S. President Donald Trump as relations between the nations fall to their lowest in a decade. This is Bloomberg.
Take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop. I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacquet here in London, and these are your top stories. The Iranian foreign minister has arrived in Russia after a report that Tehran could reopen the Strait of Hormuz if the U.S. ends its blockade of Iranian ports. Now, the man accused of storming the White House Correspondents' Dinner spent years building up his arsenal of weapons, this according to intelligence documents seen by Bloomberg. And China's DeepSeek is aggressively cutting fees for its flagship new model as it tries to reshape the AI race with Silicon Valley. Now, the UK's King Charles is due to meet President Trump in Washington later, with ties between the two nations at their lowest in decades. Trump has praised the king as a fantastic man, yet relations with the Prime Minister, Keir Starmer, soured over the UK's position on the Iran war, with Trump making headlines for saying Starmer was no Churchill. Now, for more on the foreign and domestic pressures facing the UK, let's bring in Bloomberg's politics reporter Joe Mays and Evie Aspinall, British Foreign Policy Group Director. So thank you both for joining us. Joe, what can we expect from this? First of all, it's quite unusual to see a monarch go to the U.S. It feels more political. This feels like trying to make a bridge and a friendship between the two nations.
Yeah, you're right. It hasn't happened since 2007, the late Queen Elizabeth II. And the real stated reason for this trip is that we're commemorating the 250th anniversary of the Declaration of Independence. And so, if anything, the King and Keir Starmer are actually trying to downplay the political significance of this moment as not a political moment, more a kind of historic commemorative moment. But nevertheless, politics are still going to be front and centre of all of our minds. And what you really think the hope is that after this trip, we can see some mending of that relationship between the US and the UK, which, as you say, is at its worst state in decades. And usually it comes down to the monarch and the royals who can, in these difficult times, make those positive connections and bridges. I think that's the real hope.
Evie, talk to me a little bit about, how do you think the relationship between the UK and the US is? I mean, we talk about a rough patch. Is that an understatement?
I think in many ways it's an understatement. I think we are at a very difficult time in UK-US relations. The Iran war is kind of a very stark reminder of that, of how different the views of the two sides are. But it's a broader trend we're seeing too, where the US is pulling back from Europe, it's retrenching on the world stage, and that's a concern for the UK across the board, even kind of predating and after Trump as well. So we've got a broader trend of this kind of fracturing of UK-US relations.
But Joe, why is this? I mean, it feels like it's a lot because of societal matters, right? Freedom of speech, some of the things that maybe, people close to Keir Starmer also stood for when they went to, trying to curb X and some of the powers there. Is it more about that, or is it about trade and what's happening in Hormuz?
I think it is the big picture issues, especially the Iran conflict, the UK not taking a more aggressive stance, but then also President Trump attacking the Chagos Islands deal. That's caused tensions as well. And yes, talking about perhaps unpicking the trade pact that he signed, to such great fanfare with the UK, that's playing as well. But you're right, X as well, Elon Musk. There's a long list now of areas where there's been tension and disagreement between the UK and the US. I think the difference here is that previous presidents might have tried to ally over things and prioritize the relationship. Trump isn't doing that. Trump is very happy to publicly criticize, as is his modus operandi. And that's why we're in this new realm of real tension in the relationship, which hasn't existed for such a long time.
But Joe, do you feel like it's really aimed at the UK? I mean, we've seen also President Trump making fun of Emmanuel Macron. Is it across the board, or do you think he's really taking aim at the UK?
I think it is across the board, and what comes down to a bit of a disdain towards Europe writ large, and especially the question on defence and how Trump feels like Europe as a piece, and NATO especially, has not been doing enough to support its own security, and clearly the UK is part of that group. But recognise also that they come from different political leanings. So as you have Starmer, a kind of centre-left, traditional, statist British politician, against President Trump, clearly from the right, entrepreneurial, corporate worldview, and that's causing lots of these clashes as well. Plus the American exceptionism, which we all know very well from President Trump, is a real recipe for what has become this real fracturing in the relationship.
Evie, when the US president says, look, the UK might have to learn for itself, to fight for itself, I mean, this is questioning one of the US's deepest alliance, but do you have to take it at face value?
I mean, I think there's a broader question as well that goes beyond Trump, that actually we've consistently seen the US wants Europe and the UK to scale up its military capabilities. The world has become more fractured, particularly in the last sort of 5 years or so. And so the UK really does have to scale up those challenges. I think Trump reasonably wants the UK to do that, and I think the UK will and is starting to take quite seriously the questions of its own security and defence beyond the US. The question is how US remains involved in NATO and how much it is willing to support the UK and Europe more broadly on its defence and security moving forwards. And that's where the concerns start to arise.
How would the president see Keir Starmer's commitment to trying and protect the Strait of Hormuz?
I mean, it's not entirely clear what Trump wants on the Strait, so let alone what he wants the UK to do. I think, I mean, in the earlier stances, he wanted much stronger commitment. He wanted much closer military cooperation when it came to the Strait. I think it's been quite clear that the UK won't do that. And I think the US actually broadly now accepts, whether it was saying publicly or not, that the UK won't do much more to support the US in the region. What the UK will be offering is opportunities to help reopen the Strait, to help trade move more freely moving forwards afterwards once it's reopened.
Evie, I mean, how does the Mandelson scandal also play into this? I mean, you have a severely weakened prime minister here, but also Mandelson was ambassador to the US.
Yeah, and I'm surprised you've not seen more made out actually of the Mandelson scandal here in the UK and what it means for US relations. We've seen it as kind of a big domestic issue in terms of the Prime Minister's stability within his role. But actually, in terms of that transatlantic relationship, there are genuine questions the United States can and will probably be asking behind the scenes at the least about the UK's vetting procedures, about how this was allowed to happen, and whether they can trust the next ambassador or the next leader to be properly vetted and to be aligned with the UK-US relationship. So there are genuine concerns I think the US can be raising about the UK and how this was allowed to happen.
Joe, is this also one of the reasons why it's really the king, of course, the monarch, so has maybe more of an appeal than a prime minister, but also it is because the prime minister, Keir Starmer, is severely weakened now?
Yes, if you wanted to pick someone to go to speak to President Trump to try and improve the UK-US relationship, you'd rather King Charles than Keir Starmer because of all the reasons we've just discussed, and the fact there is a genuine warmth between the President and the King. So that acts in the UK's favour here. But I think that, just picking up from that previous discussion, the Mandelson saga will continue today in Westminster. There could be a vote on whether Keir Starmer has to face a parliamentary probe, whether he misled Parliament. So that's still to come. Tuesday, we have more testimony from his former Chief of Staff, Morgan McSweeney, the former Foreign Office Chief, Philip Barton. That could lead to more revelations as well. And all this will be going on while King Charles is in the US with President Trump. So what a backdrop to that visit. It's going to be absolutely fascinating to see how it plays out.
Joe, and it's a big, they have a bilateral meeting with President Trump. This is the King and Queen Camilla. Then they have a White House banquet, and then they have a speech to a joint session of Congress during his 4-day visit. How does a king actually measure success?
I think quite simply, does he avoid a embarrassing moment with President Trump? I mean, the bar is pretty low, but that would be such a scandal and so damaging to the standing of the relationship, to what the UK wants out of it. I think that is a low bar, but a very important bar. Can you avoid King Charles being sat next to President Trump while he makes some kind of controversial comment that's against the UK or Britain? I think if they can avoid that, they'll come home happy for sure.
Do you think, if again, is it more of a feel-good, just that, the two men need to get along and have a laugh rather than behind the scenes some kind of, diplomatic negotiation?
Yeah, I think as much as anything, this is about trying to reset the relationship. And actually, because the relationship's got so bad in the last month or so, there was a big question about whether the king should still go, and the decision was made that he should, not least because of the optics of cancelling the visit were too bad. But in many ways, as Joe alludes to, it's a risk aversion strategy. We want to make sure that nothing bad happens while he's there, and maybe it feels a bit fluffy, but nothing tangible or practical is going to come from this.
Okay, thank you both for joining us. Evie Aspinall, British Foreign Policy Group Director, and Joe Mays from Bloomberg. Now, moving to the tech sector and some headlines crossing the Bloomberg terminal not long ago. China is actually blocking Meta's $2 billion deal to buy Manus, the Chinese-founded AI startup. We're also looking at DeepSeek, which is cutting costs to try and get an edge over domestic rivals and Silicon Valley. Well, we're now joined by Neil Campling, Bloomberg Senior Market Strategist. Neil, thank you for joining us. So first of all, does this move by China to block Meta's acquisition of Manus actually come as a surprise?
It is a surprise. We've seen China blocking a number of big tech deals in the past, but primarily on the basis they have very substantial revenue bases in the country. This is different because it's an AI startup, so it's clearly around technology and IP rather than the revenue. So it is definitely a surprise and wasn't expected that China would take this particular action.
So that means what, they were ready for a fight?
I mean,
if you read behind the lines.
Yeah, if you read behind the lines, you could certainly say that we are stepping up another example of the AI kind of IP wars, if you like, between China and the US. We've seen lots of export controls over NVIDIA chips has been the one that's made lots of headlines. And this is, I think, China saying, we have core IP technology here, we're blocking this.
Neil, does the pricing pressure from DeepSeek have any impact on strategies from Silicon Valley? Are they depressing everyone?
I think it's really more about everyone is kind of working out where the angle is for them to get edge, whether it's over technology, whether it's over forcing better returns on the investments. But we're still early stages of working out who is going to be the global champions in the AI space. So we'll have to wait and see which one plays out best.
So there's so many tech earnings and there's so many tech stocks that we're watching. As AI continues to surge, again, can this momentum keep on going? It's quite extraordinary.
It is extraordinary. We've seen the SOX index, which is the semiconductor index in the US, sort of reaching sort of record highs, record returns, incredible gains. This week will be a key test. The key test, clearly, in terms of the tech valuations, are not extreme. Why is that? Primarily, even though you had the prices move high, it's because the growth has been so substantial for these tech companies that it's kind of justified the valuation. So the next challenge, as you mentioned, we've got $16 trillion worth of tech earnings across 5 mega cap stocks on Wednesday and Thursday evening. And the key focus is going to be, what's the growth rate and what's the CapEx investment? And does the CapEx justify the top line growth? And I think investors are looking to see whether we'll see an acceleration of growth rates to justify that investment. That's going to be the key for this week.
And it's amazing that so far it's held up, right? Which is why Wednesday is so key.
Yes, I think if I looked at some of the profiles of the earnings growth for this year, majority of that growth for the S&P 500 is coming through from technology companies, and in particular on the memory complex and also on the semiconductor hardware side. So without doubt, you've got valuations that are very supportive. So, for example, you've got NVIDIA that's growing its top line this year at 70% for 25 times PE multiple, which is cheap relative to its history for sure.
Neil, I mean, the other story, and this is like a battle of the titans. So you have Elon Musk and Sam Altman showing up in court. I don't know if they're showing up, but they're headed to court in a showdown over AI. So, I mean, what happened for it to be so out in the open?
I think this is with the documents that you've seen. Altman is not. Well, both characters are sort of fairly well known for controversial views. Musk has done lots of things in terms of their own AI chip developments in-house and has turned clearly against the whole open AI architecture and infrastructure. So it's a battle that's definitely being seen in public, as well as what's going on behind the scenes. But we'll have to wait and see in terms of who comes out on top in terms of who has the best tech footprint. But OpenAI has the backing of Microsoft in terms of the billions of investment. And actually, last week, if we looked at what Musk said about the $25 billion of CapEx being spent this year, that's actually a drop in the ocean relative to the hyperscalers. So can Musk do more with less investment than what the mega cap tech rivals are doing? That remains to be seen for sure.
Yeah, that's a big question. Maybe we'll have an answer at some point. Neil, as always, thank you so much. Neil Campling there with the very latest on tech and AI. Coming up, Bloomberg learns that HSBC is reviewing a long-standing perk covering school fees for bankers in Hong Kong. Details next, and this is Bloomberg.
How the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
The trading day is about to start.
And you're already looking for that edge.
The Opening Trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your Opening Trade.
Only on Bloomberg.
Earnings season is here.
Earnings season begins. Let's get right to it.
Bloomberg is first to break the numbers.
Netflix here crossing the terminal.
Let's go to a retailer, Urban Outfitters.
I'm looking at shares of Paramount Skydance.
Morgan Stanley, another monster quarter.
A lot still to come.
With the smartest insights.
What are some of the sponsors and some of the CEOs talking about here?
I think the biggest risk continues to be that inflation gets imported around the world again.
Continuing coverage on Bloomberg.
Now, the entrepreneur and British businesswoman Emma Grede has made headlines for building a billion-dollar brand and working with the Kardashians. But she's best known for the apparel firms Good American and Skims, and used to describe herself as a behind-the-scenes woman. Now, in the latest episode of Leaders with me, Francine Lacroix, I asked her if anything has changed.
I think what I've realized as I've become more successful is that wherever I go, people ask me the same questions. They always say, you know, how did you do this? And I don't think people are that interested in me. I think they want to understand how they can be successful for themselves. I'm really trying to like lift the lid and demystify what it means to have a successful career and to start a business and to scale a business and what it means to sell or IPO a business, and specifically through the lens of a woman, because I believe that there is social conditioning that actually makes women avoid the exact behaviors that lead to wealth creation, that lead to success, that lead to leadership and opportunity for us.
What do you think actually doesn't serve female leaders? Because it starts from a very young age.
How long have you got?
We have a lot of time.
I need to get these girls like when they're 10, 11, 12, you know, because a lot of it is what we carry. I don't know that the idea of imposter syndrome even exists when we talk about male founders, male entrepreneurs. Why would we be talking about it so frequently for women?
I've heard male entrepreneurs.
You have?
Yeah.
Did any of them say, yes, I had it?
Yes.
Really?
Mm-hmm.
I've never heard one.
And then they say, look, I looked around the room and I thought, actually, if they can do it, I can do it.
I can do it. But the same sentence said by a woman carries a different weight. And I have seen, certainly in my own career, this notion of imposter syndrome can be planted as a seed, even when it doesn't exist. And that's what I want to stop. I want to stop us stopping ourselves getting out of the gates before we've even given ourselves a chance. Because my experience is that women are excellent at making money in the business. And they are excellent at just thinking about things in a really unique way. And I hire so many women that are brilliant, especially when they come back into the workplace after having children, because their time and the way they think about things and is so much more precious that they get really, really good at how to
done.
Oh, they get
so quickly,
so much done, and they get it done so quickly with a different sense of urgency.
Do you see yourself as a retail mogul?
No.
As a conglomerate. You're all over the internet saying, you're trying to build the next LVMH. Does that feel good?
So fun. I mean, that's such an interesting headline. How flattering. I think that's like Instagram headlines. It's a good one.
It is a good one. But
it's a goodie.
What do you want to, what are you trying to build?
What's really interesting is that what I set out to do, I've kind of done. I wanted to create businesses that I could be really proud of. And I wanted to be part of businesses that I really enjoyed going in and working in every day. Like, I wake up on a Monday and I'm like, let's go. And that for me is winning, because where I grew up and where I come from, people dreaded work. They went to work to pay their bills. And that is not what I do. I do it, and I do it for a lot less. I mean, I'm glad it comes with what it does. But I'll be honest.
You see big, you dream big.
Yeah, I've always seen big and dream big, but I think that there comes, there's a level of responsibility that comes with that, because I think that, when I look at the landscape, specifically for women of color, I think that talent's fairly evenly distributed, but opportunity isn't. And so when I look at the ability that I have to create opportunity for other people, that feels like a responsibility for me. Not in a super worthy way, but in a way where it's like, wow, there's a lot of great stuff out there. And I've done really well putting my money into other female founders. So I actually think there's this whole part of what I'm doing that is part lifting the lid, part giving opportunity, part bringing, a bunch of people into a conversation and into the business climate that might not otherwise be doing it. And really they should should.
Are you good at, I mean, you seem very good at identifying brands.
I'm really good at spotting things.
That will, are you, is this, I mean, that's a difficult talent, right?
It's a difficult
like
talent.
Magic almost.
And listen, I think there's a part of me that says, well, of course, that sounds easy now because my deal flow is so good. But I was good at it even when it wasn't. You know, I'm good at spotting opportunities. I think like a customer. You know, I am my own customer in so much of what I do. I have a terrific sense of value and what something is worth. If you buy a pair of jeans from me for $149, they're going to be worth like every $149 that you pay for them.
Is a customer of today radically different from the customer of 10 years ago?
Customers are so much more informed, and there are no barriers to what you can get, where you can get it. And brands have more responsibility to their customers than ever before. And that's fine. That's healthy. You know, may the best brands win.
Is it more difficult? It's just harder to sell.
Harder
to sell because of tariffs and moving stuff around.
Well, it's harder, and the media landscape is so much more fragmented.
Right.
Yeah, I think if you go back to when I started Good American, you could find all of these crazy unlocks, and that shifted into Instagram and shifted into TikTok, and now it's totally fragmented, and we're all like struggling and going, hey, where's our customer coming from? The
social
only thing,
media.
Yes, somewhat social media, but what channels in social media, and where are you spending, and how does that shift and change on a daily basis, dependent on the platform and the vertical even within those channels. So I think there's a lot to consider. The thing that I've learned is that good products will always win. And so what I don't let that side of things keep me up at night. What keeps me up at night is coming up with a new innovation, constantly delighting and pleasing our customers and coming up with things that they don't even know that they need.
And the full interview has a global release on Bloomberg TV later today at 10 p.m. UK time. Now, Bloomberg has learned that HSBC is reviewing a long-standing perk covering school fees for some bankers in Hong Kong. Now, we're told that the lender is weighing options, including scrapping the benefit for new hires or adjusting overall pay, with no decisions made yet. The perk costs tens of millions of dollars annually and has become a source of tension with head office in London. Now, in a recent episode of Leaders, the chief executive, Georges Alhedri, told us about his push to make the bank more simple and agile.
I was definitely ruthless about killing the complexity and the drag in the back. And I had all my colleagues who wanted to achieve the same. And, we set out to do it. The most difficult part is when you have to separate with some of your colleagues. I think we've been very thoughtful. We've been very considerate. We've done it hopefully the right way and the most respectful way for the benefit ultimately of the firm and its customers. And everybody, that's a guiding principle, is what do the customers want? They want a bank that moves at their pace. They want a bank that moves fast in a fast-moving world, fast-moving customers. We needed to be agile. We needed to be, to be ready for a modern world. And to be that, we needed to be simple. And therefore, everything then drives what decisions you take from that mission statement. The importance for us is to be disciplined about what we want to do, is to be able to do it at pace, but to do it safely.
Well, let's bring in Tom Metcalf, Bloomberg's managing editor for EMEA Finance and Investing. Tom, I mean, this is one of our top read stories. I mean, what do we know about, is this really part of the overall review that the chief executive has been trying to do?
Well, yeah, it's clearly an element. And I think, for me, it's kind of the thing that will really resonate along certainly a lot of existing HSBC staff, because it's exactly these kind of perks really sets HSBC apart in many ways, particularly in its Hong Kong market. There's still the fact they're existing and going on. It's a real sign that Alhedri is at least exploring ways of, is there a way we pull this back, or how essential is it to sort of HSBC's continuing success?
But Tom, if you don't pay enough as Goldman Sachs, or you don't pay as much as Goldman Sachs or JP Morgan in the region, and you take away the perks, is it going to be difficult to keep or attract the top talent?
Yeah, I think so, and that's always been HSBC's calling card is, yes, they haven't paid as much as, say, the US banks, but, the perks, the sort of ability to kind of, be part of that HSBC lifer community, I suppose, was enormously attractive, at least to some people. And you can totally understand why, right? If you're sitting in Hong Kong and your company's paying your children's school fees, you're probably very unlikely to leave that place unless you can find something similar. So I think it's a really interesting move. It all speaks to, you know, them implementing this strategy to become more like the rest of Wall Street. But of course, the interesting fact is, how does it impact morale? Obviously, people will be kind of looking very closely at how this is implemented, because for some people it will be really impacting, you know, their lives, as it were, and their children.
Okay, so interesting. Tom, thank you so much. It does seem that chief executive means business, right?
Definitely,
He's
yeah.
looking at everything. Tom Metcalf, Bloomberg's managing editor for EMEA Finance and Investing. Now, it is a big week, not only in terms of tech earnings. We have some of the biggest companies in tech actually reporting on Wednesday, but it's a huge, huge week in terms of central banks as well. U.S. stocks are slipping a little bit from these record highs. Look, the Strait of Hormuz remains shut. Oil prices remain elevated. We also have the Fed that will deliver its latest interest rate decision on Wednesday. Again, investors through the BOE, the ECB, and the Fed will try to assess the risk of a war-driven inflation shock. Up next, Bloomberg Brief, and this is Bloomberg.
Welcome to Bloomberg This Weekend.
Breaking news today from Wall Street to Washington.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
I think the productivity increase is not going to be marginal. I think it's going to be an order of magnitude. It's going to be significant. We're working on it internally, and we're really excited about it. I could see a world where an analyst who previously covered 20 stocks could cover 200 because they are maybe managing a fleet of agents that looks at all these stocks and tracks them. I could see a world where we're able to tackle a far greater number of top-of-funnel ideas and do a bit of work on them and more accurately pick what the best 15 to 20, best long ideas in a given year are. So I actually think it's going to reshape how we do things in the long term.
One of the things we struggle with is it's very easy to get siloed as an analyst, and these are the sectors I look at, these are the tools I rely on, these are the models I've built, and for us, we are spending more and more time as a research team collaborating around ideas with multiple people looking at sectors or trying to solve key questions or things in the market. And so the ability to have standard tools that we're all using to track lots of different things, to inform how the models are trained, will be super helpful, I think, in people being able to pick up someone else's work and say, I totally get this because it's in the same vocabulary that I do it myself.
When it matters, investors turn to Bloomberg Surveillance.
I said it maybe even on your show here.
I hear you guys talking about this a lot.
Our investors are really thoughtful. They're engaged. They listen to your show.
As a number of people you've had on your show have mentioned.
The three of us have talked about it on this show many times.
I think you find, and you've heard this on your show,
We've already talked this morning on your show. As you know, and you cover every day on Bloomberg.
You've heard a lot of guests talk about that.
I think your show is incredible.
Bloomberg Surveillance, we're talking about it.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. A new proposal. Iran has reportedly offered the U.S. a plan to reopen the Strait of Hormuz. Official talks still at a stalemate. Clearing the path, Senator Tom Tillis drops his blockade of Kevin Warsh's confirmation for Fed chair. And a busy week of central bank decisions ahead, and more than $28 trillion in U.S. market cap set to report earnings. So let's get a check on the markets around the world now. Winnie Su is in Hong Kong for the latest from Asia. Winnie.
Good morning, Bonnie. It is a very strong start of the week for Asian stocks, and we are looking at the MSCI Asia here up more than 1%, which is taking us to about 1% away from hitting fresh records. And we do have the Kospi rising 2%, as well as the Nikkei 225 making fresh a record above that 60,000 level for the first time. It is, in fact, Asia's busiest earnings week for this quarter, but also you just mentioned we're very busy with central bank decisions, including that of the Bank of Japan coming tomorrow. As you take a look at where the Japanese yen is trading, right above that 160 level against the dollar, which is very close to that intervention level that we watch very closely. And looking at how it has weakened about 12% in the past year, we will be very keenly watching out for the tone from tomorrow's presser. For now, we are expecting a hold from the Bank of Japan.
Winnie, thank you so much. That's Winnie Sue there. Let's get over now to London, 2 hours into the European Open. Here's Justina Lee. Justina.
Good morning, Bonnie. Here in Europe, Euro Stoxx 600 is kind of struggling to kind of cling on to a small gain here. Now, there seems to be a bit of a risk-on mood kind of in currencies, with the euro rising and generally kind of reflecting the broader declines in the dollar. And now, of course, the attention is still all on the oil, so we're generally seeing short-end bond yields still climbing, and especially for UK gilts. And that is something that the Bank of England will have to grapple with this week when they meet and discuss various scenarios for a longer crude prices for longer.
Justina, thank you so much. Justina Lee there in London. And as Justina said, oil prices are going to be in focus with all of those central bank meetings this week, and another day of gains for Brent and WTI. We're above 107, close to 108 now on Brent, and above 96 on WTI. Goldman Sachs raising its forecast for the fourth quarter now, saying $90 will be the average. Morgan Stanley already had its fourth quarter forecast at $90 on average for a barrel of Brent. That's $30 in the case of Goldman, higher than what the forecast was before the Strait of Hormuz got blocked. The two-year yield down a little bit. We're at 3.78. Not much movement today, but there has been some bull steepening now that maybe the blockade of Kevin Warsh's nomination is out of the way. Let's take a look at futures. A little bit of a mixed picture this Monday morning. We're seeing S&P futures just slightly pointed lower. NASDAQ futures trying to get into the green. The dollar index is down about 0.25%. And I do want to point to the VIX, rising once again this morning. It is above 19 right now. All right, let's get to some individual movers. Here's Chloe Melly. Chloe.
Good morning, Bonnie. Let's start with some M&A. Sun Pharma is buying the women's healthcare company Organon in a $12 billion deal. So for Sun Pharma, this is really going to expand its global reach and boost its ambitions of becoming a major player in innovative therapies. And for Organon, we're seeing that really boost the stock this morning, up almost 15%. Moving on to Qualcomm, which is moving higher on a report that OpenAI is considering collaborating with the company alongside others to develop an AI-first mobile phone. There's also a general enthusiasm around this tech AI sector, and therefore we are up more than 10% actually this morning. And finally, GE Vernova is down after the company was downgraded by BNP Paribas because of capacity in the gas turbine industry, saying that the growth momentum is likely to slow, will be harder to sustain, and therefore we are down on the back of that downgrade about 1.8% for GE Vernova.
Chloe, thank you so much. That's Chloe Melly there in London. She'll be back later in the hour. Also coming up this hour, we'll push ahead to the major central bank decisions with Mark McCormack of BMO Capital Markets and Isabel Mateo-Sulago of BNP Paribas. But first, Iran signals it would accept an interim deal with the US, this according to Axios. Tehran reopening the Strait of Hormuz in exchange for the end of the blockade of Iranian ports. Now, the US hasn't commented on the reported plan. Joining us now from Dubai is Jumana Bersechi. What else is in this plan, Jumana? What kind of detail do we have?
Well, it's important to remind everybody that this came on the back of a whirlwind trip that the Iranian foreign minister has conducted over the course of the weekend. Of course, he was in Islamabad, and on Friday, we thought maybe the U.S. envoys would also be participating as well. That was called off. But what we do know is that there has been a really big diplomatic push out of the Pakistani mediators with Oman as well, with the Iranian foreign minister heading to Oman, And then this morning, a couple of hours ago, he also arrived in Russia too. But from what we understand, the Iranian side have set forward their wish list of what they would like to see in order for the negotiations to proceed. And to be clear, this is a wish list that is coming through from the Iranian side. And some of the items, as per reported, not just by Axios, but also Iranian state media as well, include a new legal framework for Hormuz, lifting the blockade, compensation for damage, and guarantees against further military action. Clearly, some of those are non-starters, specifically as it pertains to a new protocol around the Strait of Hormuz. Now, Axios are reporting that later today, there will be a Situation Room meeting taking place with the president alongside some of his key national security advisors as well. Perhaps they will deliver a response to this counter-proposal that is coming through from Iran. But at the same time, President Trump had a conversation with Fox yesterday where he described the U.S. naval blockade as going well, and that in a couple of days' time, what you're going to see is Iranian storage capacity reaching their limits, after which it's going to become very difficult for them to get their oil out. And therefore, the thinking from the U.S. part is the longer their U.S. naval blockade goes on for, the more Iran is going to hurt and the more they'll be incentivized to bring concessions to the table when the two sides do eventually meet. So at this point, it is still very much a stalemate between the two sides. We now have a counter-proposal from Iran. The ball is in the U.S.'s court to come back on what they would like to see in order to proceed to the second round.
All right, Jumana, thank you so much. Jumana Bersetti there in Dubai. In Washington, D.C., President Trump speaks out on the attack over the weekend at the White House Correspondents' Dinner.
Well, what happened is it was a little bit me. I wanted to see what was happening, and I wasn't making it that easy for him. I wanted to see what was going on. And by that time, we started to realize maybe it was a bad problem, different kind of a problem, bad one, and different than what would be normal noise from a ballroom, which you hear all the time. And I was surrounded by great people.
Bloomberg's Tyler Kendall joins us now from Washington. Tyler, give us the latest on the assailant and what's happening.
Hey, Vani, well, at this point, the investigation is still in its beginning stages, though preliminary evidence does suggest that the suspect was indeed targeting senior Trump administration officials. And a manifesto reviewed by Bloomberg News does show that the suspect did call President Trump a, quote, traitor. Now, we're learning a few additional details about this suspect, Cole Thomas Allen. According to the acting Attorney General Todd Blanche, at the moment, he is not cooperating with investigators, though they have been able to piece together his path of travel, taking train from California to Chicago to Washington, D.C., where he checked in several days ahead of time to the hotel where this event was taking place at the Washington Hilton. At this point, Allen faces 2 federal charges, including using a firearm during a crime of violence and assault on a federal officer with a dangerous weapon. Bonnie, we're expected to see the suspect later today. He's scheduled to be arraigned in federal court here in Washington.
What does it all mean for King Charles's visit? Will there be any security concerns surrounding that?
Well, at this point, Bonnie, actually, officials are saying that it really shouldn't impact much. There's been some reporting that maybe a few events have been tweaked here or there. But again, the acting Attorney General Todd Blanche was asked about this and said that he is confident that their trip is going to be secure. And we heard from Buckingham Palace ultimately saying that it's going to continue as scheduled. So there's a lot of highlights on this. It's going to dominate much of the week here in Washington. But Bonnie, beyond any potential security concerns, as you well know, this is really a trip to perhaps shore up ties between the UK and the US amid what has been a widening rift between President Trump and UK Prime Minister Keir Starmer.
Yeah, that's for sure. Now, back in DC, Kevin Warsh, looks like there is a possibility now that the confirmation process will start and continue because Senator Tom Tillis has dropped his blockade. What is the process looking like now, Tyler?
Well, we actually have a date for a Senate Banking Committee vote, which is this Wednesday. So that is definitely positive momentum, considering that that's been on hold. But as you mentioned, Senator Tillis coming out saying that the fact that the DOJ dropped its legal matter into Fed Chair Jerome Powell, that's enough for him, that he also got these assurances from federal prosecutors that the case is not going to resume, despite the U.S. Attorney for D.C., Jeanine Pirro, saying in her post announcing that the suit was being dropped, that she's still retains the authority to restart it if the facts ultimately warrant doing so. But as of now, it seems that this should be a clear guide path for Kevin Warsh's nomination. He will get that 13-11 majority on the Senate Banking Committee to then advance to a full floor where he only needs a simple majority. Republicans hold the Senate, so that shouldn't be an issue as of now. We can quickly add, Vonnie, that President Trump was asked about this. He said he thinks Kevin Warsh's nomination will be smooth going, but he also did add that he's going to keep up the pressure on Jerome Powell and that he himself is looking forward to that Inspector General report that is looking into the cost overruns of the Fed's renovations here in Washington. As you know, Vonnie, Powell's term as chair ends May 15th. Looks like the Senate is prepared to get Kevin Warsh confirmed before then.
Yeah, just on Fed Chair Jerome Powell. So the DOJ has ended its criminal probe targeting him, but has the president sort of dropped the idea that, you know, he's angry about how much the renovation is costing, or is there a possibility that the Fed chair could face serious problems still?
So we have to keep in mind that the DOJ's investigation was into allegations that Powell misled Congress about those cost overruns, that there was some sort of criminal conduct when he appeared in front of the Senate Banking Committee last June to answer questions about it, which is why you saw a lot of members on the Banking Committee raise concerns. I've spoken to a lot of them that they didn't think that what Powell did rose to the level of criminal conduct. Instead, they'll say that he was unprepared in that testimony. That was a separate matter. That is what the DOJ has dropped. Instead, there is an Inspector General investigation, or review rather, that Jerome Powell asked to be done by the Fed's watchdog to look into these cost overruns. That isn't something that would yield the same sort of consequences that a Department of Justice criminal investigation would. But President Trump is still keeping up the pressure that he wants to see that report, considering that we do know that costs have ballooned when it comes to that project here in Washington.
Absolutely. Tyler, thank you so much. That is Tyler Kendall there from Washington, D.C. Now, to other top stories trending on the terminal this morning. China has blocked Meta's $2 billion acquisition of AI startup Manus. The country's National Development and Reform Commission announced the decision in a one-line notice, saying the move was made in accordance with laws and regulations. It didn't elaborate further. Meta didn't immediately respond to requests for comment. Meantime, DeepSeek is pitching aggressively low prices, offering a 75% discount for its new AI model. The move intensifies competition across China's AI industry and could reignite a price war. And HSBC is reviewing a long-standing perk that covers around 95% of school fees for children of its Hong Kong bankers. Hong Kong is HSBC's largest market and is the only major hub where mid-level staff and above are entitled to the subsidy. Coming up, Mark McCormick of BMO Capital Markets sees a macro regime shift away from Goldilocks. He's joining us next. This is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
This is Bloomberg Brief. I'm Vonnie Quinn in New York. Investors gearing up for a big week of rate decisions. Here's what the week looks like. Bank of Japan on Tuesday, the Fed on Wednesday, and the ECB and the BOE on Thursday. Joining us now is Mark McCormick, Chief FX Strategist at BMO Capital Markets. So just broadly, Mark, are you expecting any surprises from any of these central banks this week?
No, I don't think you're going to see any surprises at all. I think the market thought the BOJ could move, and again, I think this one's much more focused on what the politics are and whether or not the government wants to see the BOJ move that quickly. So I think BOJ is on the sidelines. I think ECB and Bank of England, they're going to try to maintain a language that they keep hikes on the table, but I don't think it's very clear that they're going to hike, and I don't think there's any need for them to hike. And I think at the very least, if they do hike, it's going to be seen as a policy mistake, which will not be good for the growth outlook, in turn won't be good for the currencies. And I think the Fed is the one that I think is the most interesting because it's the most mispriced in my opinion. But again, I think what they're going to do is just kind of stay the course and follow the data and kind of stay in line with where the data expectations go. And that's going to drive policy decisions.
So explain why you think there's a mispricing. There is a bias towards easing still in this market. Is that unwarranted?
I believe it is. I think partly if you look at the element of a terms of trade shock is going to benefit the U.S. economy relative to others. And I think, again, at the same time, when we look at our economic indicators that we use to track the movements of currencies and other asset classes and asset allocation decisions, the U.S. is actually coming in a very good position. Data surprise has been deteriorating a little bit, but the U.S. has very strong economic momentum across the data. And we've also seen the market kind of upgrade their views on the outlook for the economy over the coming year. So relative to other G10 currencies, particularly in Europe, the U.S. looks really strong here. So when I see kind of what's going on in rates, when I see the market basically pricing in very aggressive rate hikes from the Bank of England and the ECB, this does not match what the outcome should be. So the outcome should be is the Fed should be on hold. You should price out the cuts. And if one central bank's going to hike, and they're going to do it because of good economic reasons, it's going to be the Fed. So that's not what's being priced in the markets. That's not our view. But I think the volatility around what the outlook is for central banks and how you look at front-end pricing is going to be much more important for the markets moving forward.
Yeah, if all that pans out, that would be a massive repricing across the board, Mark. So are you saying that there's no need to be concerned about the U.S. labor market? There isn't a huge AI reckoning coming, and we don't really need to be that concerned either about $107 a barrel Brent?
So I think what we need to be worried about, especially with AI, is before it becomes deflationary, we know it's inflationary. We know that it drives electricity prices higher. We know that the energy grid is not capable of maintaining the demand that's going to be pulled from it for data centers and for AI usage. So we do know initially that AI is going to be inflationary. The element that it could be deflationary is really a theory. It's something that markets are going to focus on. There's really no clear consensus. We have to see how this plays out. But the labor market, when you look at the economic data and you look at the labor market itself, it seems to be holding up. It seems to be resilient. So the point that I would make is you just do not need this aggressive easing in financial conditions in the U.S. that the market wants to price in, particularly when the U.S. is leading the equity markets now. It is one, when we look at how the market's traded since the start of this conflict, U.S. equity markets in tech are coming back. So again, the U.S. is pulling capital flows back in, and the market that we're involved in is a bit inflationary. So again, I think this is the one where if one central bank is going to be on hold, despite what has been a generally cooling labor market, it's going to be the U.S. economy, and it's going to be the Fed that doesn't need to see rate cuts.
Mark, would you change your mind if Kevin Warsh were to be confirmed in fairly short order? Would you then see a reason for an easing bias?
Not at all. I actually think, based on his discussion last week, he's actually a lot more, it's hard to characterize someone as being hawkish or dovish just based off one speech, but I think the context of the discussion was hawkish. And I think the market, again, wants to ignore that. I think the market's focused on a lot of dislocations. The first one being the essentially the second derivative of the conflict. The conflict is essentially in the market's expectations is winding down. The tail risks are reducing, but the macro shocks are just starting because there's a sequencing effect. So I think when I bring it back to Warsh, I think he's going to be what he's going to do is drive a framework for the Fed that's different. It's a regime change, but I think his underpinning of what matters to him is it's really going to be about whether or not, again, inflation in a supply-driven market is going to be something that the Fed can control. And again, the impact of supply and demand mismatch of what we're seeing, again, we're dealing with supply-side shocks since COVID. And again, to think about what impact the Fed could have on that by cutting rates, I think is not clear. So you bring it back to it, the first order effect of what we're going to be focused on here is inflation. And again, what we're seeing in our economic indicators that we run for FX is that the U.S. economic demand cycle is still relatively strong. So I would say I don't see Warsh coming in as being a bias going to be built in that's going to favor what the market wants to see, which is more cuts.
All right, and I guess that's all dollar positive. Mark, thanks. We have to leave it there. Really appreciate it. Mark McCormick of BMO Capital Markets. Coming up, inside a note from the gunman at the White House Correspondents' Dinner, and a look at what else is making headlines in your front page news next. This is Bloomberg.
Is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving some.
Yeah. Probably very fast.
Yeah. This is so exciting!
This season, we're along for the ride.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. It's time now for your front page news. First up, the New York Times leading with the attack at the White House Correspondents' Dinner. The Times says a man in custody wrote a note indicating potential targets and grievances. The note suggests the man was angered by the actions of the Trump administration, including what he called abuse in immigrant detention camps, lethal attacks on boats in the Caribbean, and the bombing of an elementary school in Iran. Next up, the Wall Street Journal reports a group of budget airlines, including Frontier and Avelo, is seeking $2.5 billion in government assistance in exchange for warrants that could convert into equity stakes. The ask comes as the administration is separately considering extending a lifeline to Spirit Airlines to help avoid liquidation. And finally, the Washington Post reporting utility companies shut off Americans' power to 13.4 million times, in fact, in 2024, and gas 1.7 million times. According to a federal report, the disconnections were most frequent in the South, with Oklahoma having the highest rate. Consumer advocates say the numbers signal a high rate of extreme financial distress among U.S. households. Let's take a look at these markets in your Monday session. It looks like S&P futures are pointed to a lower open. A weaker day for the dollar as well as we get set for a huge week of central bank decisions. And the 10-year yield at 4.31, a small bit of bullish steepening. Coming up, we're going to be speaking with Isabel Mateos-Delago.
Estava sitiada.
Nisso eu começo, eu tremia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering, and someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Nisho talia ki kon ahma ta chuara por no ahma le pues mancha le ni ay con mama nya.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Vernon in Florence, Italy, and this is Bloomberg.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. A new proposal. Iran has reportedly offered the U.S. a plan for the Strait of Hormuz to reopen. Official talks still at a stalemate. Clearing the path, Senator Tom Tillis drops his blockade of Kevin Warsh's confirmation for Fed chair. And a busy week of central bank decisions ahead. Also more than $28 trillion in U.S. market cap set to report earnings. So, how are we heading into the Monday trade? Well, Brent crude is now above $108 a barrel, so up almost 3%. That's a sixth day of gains if this continues. WTI above $96 a barrel. Goldman Sachs lifting its fourth quarter forecast now to $90 a barrel, up from $80, and in fact up a whole $30 since before the Hormuz shock. Morgan Stanley was already at $90 a barrel price target for Q4. If you look at the two-year yield, not seeing much movement today, but we are seeing a little bullish steepening in treasuries. Of course, this as hopes sort of gain that Kevin Warsh will be nominated, and pretty quickly the 2-cent spread now back at 52 basis points. And then let's take a look at futures, because they are pointed lower for the S&P 500, not so much for the Nasdaq 100. We've lots of Mag 7 on tap this week, their earnings and the hyperscaler earnings, most of them on Wednesday. The SOX is up 39% this month, by the way, so we'll be looking for anything like margin compression or anything like that to put a cap on recent rallies. The dollar index, touch weaker today. Let's get to some individual movers now. Here's Chloe Malley in London. Chloe.
Good morning, Vonnie. Sun Pharma is buying the women's healthcare company Organon in a $12 billion deal. So this will give Sun Pharma access to new innovative therapies and also expand its global reach. And for Organon, we are seeing that reflected in a big boost in the shares this morning, up more than 15% in pre-market trading. Moving on to Qualcomm, which is also in the green today after a report that OpenAI is set to collaborate with the chip maker alongside other companies to develop an AI-first mobile phone. And so we are seeing a lot of optimism around this potential collaboration, and that is really translated in the shares this morning, up quite strongly, almost 10% this morning. And finally, GE Vernova is down after being downgraded by BNP Paribas analysts, which have said that the growth momentum will be hard to sustain in gas turbines because most of the capacity has already been contracted through to 2030. And so there's limited scope now for that growth. And so we are down almost 2% on the back of that downgrade.
Chloe, thank you so much. As always, Chloe Malley there for us in London. Isabel Mateo-Silago of BNP Paribas looking ahead to the Fed's rate decision this week, writing, quote, with fears about the labour market easing and heightened inflation risks, the FOMC is likely to drop its easing bias and adopt a more symmetrical posture whereby its next move could be either a cut or a hike. In the near term, we consider the risk of a hike to be greater than that of a cut. Isabel joins us now. She's Group Chief Economist at BNP Paribas. The team has revised up their inflation forecast for the US to 3.3% this year. Isabel, is this primarily energy costs and the knock-on effects? And how bad could it get?
Yeah, so it's a combination of things. Obviously, the energy shock is an important part of the picture, but it's also the fact that the economy is looking pretty strong. And so there's not going to be, we expect, economic weakness or demand weakness restricting very much the ability of be it workers or companies to pass on these energy price increases. Moreover, this comes on top of the tariff shock, which had not been yet fully absorbed by consumers, that hadn't been yet fully passed through, as Chair Powell stressed at the last FOMC meeting. So there's quite a bit of inflationary pressures coming through the pipe, and not much by way of demand restricting the pricing power of economic agents. And so that's why we expect inflation to reaccelerate, and that's why the Fed needs to be very cautious in its messaging and its posturing.
Yeah, Isabel, why are we not seeing more demand destruction so far? I mean, we're 2 months in now. It's not like we got that much relief from oil prices, and certainly in the last few days, I mean, we're on day 6 now of gains once again.
Well, exactly. That's exactly why you're seeing the price gain, right? Because we're not at much demand destruction. And also, look, people have these price references in their head. They compare today's price level to the 70s or even to 2022. But let's not forget, the price of everything else has gone up as well. And so in real terms, the price levels for whether it be crude oil or price at the pump are not that high, and by most estimates, the kind of price of crude that you would need to see proper demand destruction is closer to 150 and above. So we're not there. I very much hope we don't get there, but that's why so far the impacts whether on oil demand or actually even activity, has been relatively modest.
So 160 and above, and would that have to be for a protracted period of time, Isabel?
Yes, absolutely. I mean, obviously, if it goes there for one day and then crashes, that's not much of an issue. But yeah, you would need to see oil at that level for a protracted period. And frankly, look, the scenarios at this stage are relatively bifurcated. Either in the coming weeks, the Strait of Hormuz is reopened and oil starts flowing again. We're not going to get back to normal in a matter of days or weeks, but at least, then it would contain the rise in oil prices, say on annual average to $80 or $90 per barrel, or the situation drags on, the Strait of Hormuz remains shut, and very quickly we start running into physical shortages and much higher prices for energy. And so it's not going to be a straight line from 90 to 150 or 100. At some point, if it becomes clear we're in the worst case scenario, then prices will spike and we'll see a much bigger impact on activity and indeed demand destruction.
Yes. What's your base case now on a Kevin Warsh confirmation, Isabel?
It seems a pretty straightforward story at this stage. I understand the Banking Committee is due to vote on his nomination on Wednesday. There's no reason to expect that this wouldn't go through now that Senator Tillis has said he would vote for his confirmation. And so, in principle, Kevin Warsh should be fully confirmed by the time that Jerome Powell's term as chair ends on May 15. There's leaves plenty of time, basically 2 weeks for the full Senate to confirm him. So I don't expect any surprises there.
Now, do you have any inclination at all that Kevin Warsh will be looking to gather support maybe for a rate cut at some point, or at least for quantitative tightening?
So look, we know what his agenda is. He wants to cut rates, he wants to shrink the balance sheets, and he wants to change very in depth the way the Fed communicates. I think some of these elements are going to find more support than others. So he's going to have to a little bit pick his battles. As far as rate cuts go, we've gotten cover. He's gotten cover even from Secretary Bessent last week saying, look, in the circumstances, maybe it's going to take a bit of time before rate cuts become appropriate. So I would be surprised, frankly, if he tried to push that particular change through immediately, given the inflationary pressures that we've been talking about. And instead, it should be he should find less resistance in the discussion around how does the Fed communicate, what kind of data and models do we use, and indeed starting the conversation on the balance sheet, even though that will not be quick either. But I don't expect that, he will take the risk of pressing hard for a rate cut from the get-go and risking being in a minority on the FOMC. That would be a strange way to start.
All right, Isabel, thank you so much. Very appreciate the conversation. Isabel Mateo-Silago of BNP Paribas joining us. Now to other top stories trending on the terminal this morning. HSBC is reviewing a long-standing perk that covers around 95% of school fees for children of its Hong Kong bankers. Hong Kong is HSBC's largest market and is the only major hub where mid-level staff and above are entitled to the subsidy. A top DOJ official has demanded that the National Trust for Historic Preservation drops its legal challenge to President Trump's White House ballroom project. He says the lawsuit puts the president's life at risk, citing the attempted shooting at the White House Correspondents' Dinner. The official added that a completed ballroom would allow the president to attend large gatherings without leaving the White House. Chevron CEO Mike Wirth says Venezuelan oil policy is moving in the right direction to attract foreign investment, but still needs some work. Weeks after President Maduro's toppling, Venezuela changed its nationalist oil policy to entice foreign investors. But Wirth says production needs to increase. Coming up, Iran reportedly proposes a plan to reopen the Strait of Hormuz. The latest from the Middle East next. This is Bloomberg.
technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Iran has offered the U.S. a new proposal for reaching a deal to open the Strait of Hormuz. This is according to Axios. The deal includes Tehran reopening the strait in exchange for the end of the blockade of Iranian ports on the part of the U.S. Now, the U.S. has yet to comment. Jumana Bersetchi is back with us from Dubai. Jumana, take us through the details that we know of in this proposal.
Well, Vonnie, on the surface level, this looks like the Iranians are coming back to the U.S. and saying, we will be willing to lift our blockade if you lift your blockade, i.e. they would have to do it at the same time. But actually, what Iranian state media is reporting, that is not the only condition that Iran has set. They've also talked about including a new legal framework for Hormuz, compensation for damage from the war, and guarantees against further military action just to proceed to the next round of discussions, after which they say they'll be willing to have conversations about the nuclear files. So the way this is being presented probably is a bit of a non-starter as far as the U.S. is concerned, not least because President Trump, even over the weekend, he gave an interview to Fox and he was saying that the U.S. naval blockade is actually quite successful in that it is curtailing Iranian oil exports and that he expects in the next couple of days that Iranian storage capacity will reach its limits, after which there is a feeling, at least, that the Iranian side will be hurting so much economically that they'll be more incentivized to come to the negotiating table. So that is the view from the U.S. And I should say that what Iran has presented over the course of the weekend, and it has been a big weekend for diplomacy for the Iranian foreign minister, traveling to Islamabad, going to Oman, back to Islamabad, now he's in Russia as well, presenting their side. But we haven't heard from the U.S. yet. Axios is saying there will be a situation room briefing later this afternoon. But the way the conditions are being presented as of now from Iran seem unlikely to fly with the U.S. in order to proceed to the next round of negotiations. So essentially, the stalemate is still there around the straits.
Yeah, and presumably that's why we're seeing oil rise for a sixth day once again, right, Jumana? Now, Araghchi, as you said, is in Russia at the moment. Why is he coordinating with Moscow? What is his reason for being there?
Yeah, well, it's a very interesting question because you can't say that Russia are a neutral mediator here, Vonnie. And actually, throughout the course of this war, there have been multiple reports suggesting that that Russia has actually aided Iran with surveillance technology, with drone technology, with intelligence as well, tracking down where key U.S. assets are in the region. So they're not a neutral counterparty over here. And at the same time, economically, Russia has emerged as one of the major winners of this war because of the effective closure of the Strait of Hormuz, higher oil prices, the lifting of those U.S. sanctions on Russian oil, at least temporarily. But it is interesting to note that the foreign minister of Iran has been making this big push around the region, not just in Pakistan and Oman obviously have a vested interest in the Strait as well, but with Russia too. And you have to think that with Russia, no matter what happens here, if there is a further round of confrontation, they will likely be involved too, in terms of what I was just describing before, intelligence assistance. And even if there is a diplomatic resolution, they will likely be involved as well. So it is a part and parcel of Iran's attempt to perhaps bring up more allies on their side once these conversations and negotiations with the U.S. kick off again.
All right, well, we'll see what the U.S. has to say next. Jumana, thank you so much for bringing us up to speed. That's Jumana Bersechi in Dubai. In Washington, President Trump speaks out after shots were fired at the White House Correspondents' Dinner over the weekend.
Well, what happened is it was a little bit me. I wanted to see what was happening, and I wasn't making it that easy for him. I wanted to see what was going on. And by that time, we started to realize maybe it was a bad problem, different kind of a problem, bad one, and different than what would be normal noise from a ballroom, which you hear all the time. And I was surrounded by great people.
Bloomberg's Tyler Kendall is back with us from Washington. Tyler, what's the latest on the investigation, and is President Trump curtailing any activities?
Well, Vani, at this point, no, President Trump is saying that actually he wants to see the White House Correspondents' Dinner be rescheduled within 30 days. We're not expecting much to really change in terms of his activities due to this event. Now, the investigation is in its preliminary stages, though the evidence so far has suggested that the suspect was indeed targeting Trump administration officials. In fact, a manifesto seen by Bloomberg News shows that the suspect wrote that President Trump was a, quote, traitor. Now, Cole Thomas Allen, the name of the suspect, he's currently facing 2 federal charges. He's expected to be arraigned here in Washington in federal court later today. But we did hear from the U.S. Attorney for D.C., Jeanine Pirro, who actually was at that dinner, who said that she does expect more charges to be added as the investigation unfolds. We're starting to piece together a little bit about how this came to be, including that the suspect traveled by train from California to Chicago and then to Washington before he checked into the Washington Hilton where this event was taking place, actually several days ahead of time. Vani, it is raising questions, though, broadly speaking, about security, including at this event, which happens annually every year in basically the same way in terms of security protocol, though we can say that the Secret Service has defended its actions, and President Trump did applaud how those agents responded.
Well, King Charles is heading to Washington. It hasn't affected that particular visit. Let's move on to Kevin Warsh, because it looks like his confirmation might be pretty smooth sailing at this point now that Tom Tillis is backing the vote. What's the process now, Tyler?
Well, that's certainly the hope by Republicans, Vani, because we know that Jerome Powell's term as chair ends on May 15th. So they want to get this process going to ensure that Kevin Warsh can be in place ahead of then, or in time for then. So what's going to happen this week on Wednesday, the Senate Banking Committee already has its planned vote. Kevin Warsh is expected to get to the 13-11 majority of Republicans on that committee. That will then advance his nomination to the full Senate floor. There hasn't been a full date set for that, but we would expect it to happen rather quickly, and he'll get that simple majority if all goes as planned.
Tyler, thank you so much. That's Tyler Kendall for us in Washington, D.C. Turning to technology, China ordering to cancel Meta's $2 billion acquisition of agentic AI startup Manus. We are getting an emailed statement from Meta now saying that everything was in accordance with all the rules and it doesn't expect to see any more difficulty. But let's get more from Matt Bloxham of Bloomberg Intelligence. Give us the background to this story, Matt, and why China might have a problem.
Yeah, so Manus, as you said, is an agentic AI startup, and as we know, the world is shifting very rapidly towards agentic AI as a kind of near-term future of that technology. And yeah, it's in an area that Meta's been looking to kind of boost its capabilities now. Manus was originally a Chinese-founded business, and it reincorporated in Singapore, but it's got Chinese founders, and those Chinese founders are in China, and they're being blocked from leaving the leaving the country. So I think clearly, you know, this is an issue about technology transfer from one superpower to another, and that's why we're seeing this Chinese clampdown. To be honest, it was a little bit surprising that this deal had been waved through initially, so it's not a big surprise that there's been this kind of pushback. I think it is a story that's going to kind of bounce around for quite a while, but you know, I think given that China is essentially blocked these founders from leaving the country, there's going to be a huge amount of pressure for them to kind of roll back on the deal.
Yeah, and again, Meta out with an emailed statement saying it completed the Manus transaction fully and in accordance with applicable law and anticipates a resolution to the probe. Staying in China, DeepSeek has slashed fees for its new AI model. A Chinese price war underway, I guess, Matt. Will this entice people to use, you know, DeepSeek's new model, or do Silicon Valley models still just far outpace the DeepSeek fresh model?
Yeah, just so this is the version 4. So I think in performance-wise, it is comparable to the kind of the US models, but I think what's going on more here is a huge rivalry in China between a whole raft of different AI models, and they need to encourage the developers to use this so they adopt it kind of going forward. So we're seeing discounts of up to 75% on the regular sticker price for the kind of the Pro API version. That's, you know, a short-term deal, but it's designed very much to get developers to engage it and then use it in preference over some of the other Chinese models like Qwen, for example.
All right, Matt, thank you so much. We'll continue to watch the DeepSeek story. That's Matt Bloxham of Bloomberg Intelligence. Coming up, it's a marathon this week, rate decisions and earnings in your week ahead. Next, this is Bloomberg.
To Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Alim, only on Bloomberg.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
So a busy week of earnings and, of course, central bank decisions ahead. Starting off with a Bank of Japan rate decision Tuesday. Then it's the Fed's turn Wednesday. Plus, we also get earnings from Alphabet, Microsoft, Meta and Amazon among those reporting Wednesday. And then decisions from the European Central Bank and the Bank of England on Thursday. And in the US Thursday, we'll get a fresh inflation print and also results from Apple. No one's taking holidays this week, that's for sure. All right, a few micro movers pre-market. Qualcomm higher. Business Standard reporting that OpenAI is exploring an AI phone in partnership with Qualcomm, MediaTek and Lookshare. Organon up more than 15%. Sun Pharma is looking to buy the New Jersey-based company in a $12 billion deal. And CrowdStrike has been upgraded to outperform at Mizuho Securities. Price target of $520, so another little bit to go. Here's your macro picture for the day. Futures wavering, dollar weaker, yields slightly higher. That's it for Bloomberg Brief.
Day 6 at the Mutua Madrid Open. Yannick Sinner powered his way into the round of 16 with a convincing straight sets win over Denmark's Elmer Moller. 7 aces and 16 winners in the victory, which extends his win streak at Masters events to 24 matches. And don't forget, you can watch all the action live daily and head on over to tennischannel.com to download the app.
Say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns. And a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
you're seeing kind of everyone, I think, look to, okay, what else can benefit?
If we didn't have this boom in tech, we would be looking at a much worse situation.
The geopolitical is just not factored into anything right now.
To maintain the optimism, we need to continue to see earnings coming through.
The stock market's been remarkably strong, and I think it continues to do very well.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Monday, crude inching higher. The White House and Iran failing to break the deadlock as one key senator is opening the door to Ken Walsh's confirmation the nation's capital reeling once again from an attempted attack on U.S. officials. We start this morning with a very warm welcome back to Lisa and Anne-Marie in the room on Saturday evening. I think we're all pleased to see you safe and well.
Yeah, well, right now we're looking at an evening that was torpedoed, and I think it's such a shame that we didn't have an evening that is done every single year for many decades. I will say the president came out with a sentiment that I thought was a nice one, which was that he hopes that this happens again in 30 days, because ultimately he wants to keep saying that one crazy person isn't going to torpedo the way we conduct our society. I think that everybody loves the sentiment. I don't know that everyone has a financial or emotional will to do it again, but there is this hope that it isn't going to wreck something that's become a tradition.
Well, during the chaos and confusion of whether or not the dinner was going to proceed, I spoke to a security official from the White House who said the president is adamant he wants to come back out. Obviously, he couldn't. Potentially, we'll see that in 30 days. Obviously, security is going to be front and center here. On one hand, the perimeter did work. The shooter, even though we didn't know it in the moment, the shooter did not make it to the ballroom, did not make it to that floor. But the shooter was staying at the hotel. Why wasn't the shooter's bags checked? Why wasn't there more security done on the outside perimeter, not just right before you go into the ballroom?
A lot of questions we need to answer. We'll catch up with Tyler Kendall a little bit later in the program. Also need to look forward to this. For financial market participants, the focus overwhelmingly on central bank decisions this week, Federal Reserve decision on Wednesday, and earnings from big tech through the week. And those big earnings all around Wednesday, Thursday, the majority of which land on Thursday afternoon.
Okay, just putting this all together, 44% of the S&P 500 market cap reports this week. If you think about the trillions of dollars that report with Amazon, as well as Alphabet, Microsoft, and Meta all reporting on Wednesday, and then Thursday you've got Apple, all of this coming together at a time where this market has rocketed higher, despite some of the concerns about the oil market on the hopes and dreams of AI. A key question for me is how will the market respond to increases in capital expenditure that do seem existential and frankly are all the more necessary as some of the component parts get more expensive.
And when it comes to the oil market, overnight, Goldman Sachs upgraded their fourth quarter forecast for Brent crude to $90 a barrel. It was $80 a barrel because right now, this morning, even though you're seeing some carrots in the likes of Axios, maybe there's potential for Strait of Hormuz opening, at the moment, it's not. It's still closed.
Hey, that's a real change. Not the 80 to 90. The change from when the war started. Goldman were looking for something $30 lower for the fourth quarter, and now you're looking at 90. That's the reality of high for longer. And you see that, I think, in longer dated prices in the oil curve as well. Bram, I know you're in the same place as me, focused on that. Just not the front month, but a futures curve, but the later months making new highs in the last week.
Yeah, $86.60 in Brent crude for the December contract. This is the key point. What is the longer-term trajectory for oil prices? Halima Croft of RBC had a great point also, saying one concern in physical commodity markets is that prices in the near term are not high enough to cause demand destruction. So you're losing that kind of cyclical response to the lack of supply that would normally damper some of the lack that we're going to be seeing later this year.
Futures right now negative by 0.1% on the S&P 500. Another encouraging story from Axios, shrugged off pretty quickly. Axios seems to be the carrot every Monday morning, and then some Iranian news agency becomes the stick later on.
Yeah, and Mohammed Ghalibaf over on Twitter was talking about the supply cards and demand cards. This caught my attention because basically it was a threat. Said the Strait of Hormuz is partly played right now, but BEM, Bab el-Mandeb Strait, unplayed. Pipelines, unplayed. Basically saying the key point of our leverage is the Strait of Hormuz, but we have other cards we could throw down.
We've got a big 60 minutes coming up. We'll catch up with Laurie Calvasino of RBC with stocks facing a pivotal week ahead. Norman Rule of CSIS on reports Iran is coming to the table. And Sonal Desert Franklin Templeton as Kevin Walsh clears a major hurdle to be named the next Fed chair. We begin this hour with stocks holding near record highs ahead of a critical week on Wall Street. Laurie Calvasino of RBC writing the US is a global safety trade in the context of the war and seems likely to continue benefiting as long as concerns about the war's duration remain elevated. Laurie joins us now for more. Laurie, good morning.
Good morning.
This is an important question. How war-dependent is this tech rally?
So, what we've said is that once the clouds clear, if and when they do, we wouldn't be surprised to see Europe make a move, right? That seems more like the recovery trade if the U.S. is the safety trade. However, I did a survey of my analysts in early April. So we did it after the ceasefire essentially started, a few days after that, conducted it for about a week and a half. And what we found was that my European equity analysts don't see a lot of value in their own market. And it's something that we've sensed, frankly, talking with European investors as long back as December of last year, and it's just this idea that you've had this nice run there. So I do sort of question how long a rebound trade could last. And what we said at the end of the day, if you look at it from the growth versus value sleeve, and growth value in the U.S. tends to mimic U.S. versus non-U.S., what we have seen is that the earnings story is simply there for the AI trade, for the Mag 7, for the growth trade. And whatever residual damage we have coming out of this conflict in Iran, even if we dial down the geopolitical hostilities, get the Strait opened, when we hear the energy community talk about how long it's going to take to rebuild things, all the damage that's going to be done, I don't really see that hitting the earnings of the AI and the tech trade that much. I do see it hitting things like materials. I see it hitting things like industrials. I see it hitting things like consumer discretionary and staples. That is the broadening trade, right? So I see that headwind, even if we dial down the hostilities, there for quite some time for that part of the market.
Are you suggesting the exuberance in chips right now is justified? It's rational?
Look, I try to be the calm voice of reason at both tops and bottoms. And, we certainly look at semis revisions. I've talked about this a lot in meetings. They are at peak-like levels. That always makes me nervous. I tend to be a little bit more of a contrarian by nature, but I have to admit that when I go back and look at the history of semis upward revisions, they can stay stuck at elevated levels for quite some time. So I'm watching that chart very closely to see if we get a hint of deterioration, and we're just not really seeing it right now.
What do you need to see when it comes to earnings, given the fact that we're going to get the gut check from some of these big tech companies to continue with this positive safe trade in a way for the U.S. tech companies?
So one of the things that I've noticed on the data, and Bloomberg Intelligence does a great job of tracking the Mag 7 versus the rest of the market. We highlight this data all the time in our meetings, but if you look at 2027 earnings expectations, you're actually seeing a little bit of acceleration in the growth rate for the Mag 7 versus 2026. And that's something that's just popped up over the last, I would say, month or two in the data. If you look at the rest of the market, it's still showing, some strength, but we're just really not seeing the rest of the market able to overtake that Mag 7 cohort. And so we're actually seeing the Mag 7 advantage versus the rest of the market expand in 2027. So we're looking at the 2026 numbers, obviously. It is probably a little too early to have a real handle on 2027, but at least what we're seeing in terms of the data so far, it is still really pushing that tech Mag 7 secular growth story and showing some strength there, and I think that is ultimately what's buoying the market.
Your colleague had a great note, Halima Croft, over at RBC, your company, talking about this sort of reaction function in markets that usually when there is some sort of shortage in an asset, you see prices go up, and that some of the forward messaging coming from the administration has suppressed where forward prices otherwise would be. So you don't have that kind of correctional mechanism. Are you getting more concerned that there is going to be an inflationary ramification from this that could curtail some of this enthusiasm? Because there's discussion about fiscal and because the strength hasn't enabled really that demand destruction.
So when we think about inflation and we think about how we model out earnings, what we do see is that inflation can often goose your revenue number. And I know that sounds a little bit perverse, but that's what we've seen historically in the modeling. Where inflation is really a problem, if you're looking at sort of market levels and that kind of thing, is on the PE multiple. And so we do our 12-month forward target. We do a monthly update on that. We have seen our valuation earnings model. We've input some new assumptions that are trying to bring in kind of a more onerous inflation environment, and it's taken some of the heat out of that model, but I'm still coming up with 77.59 if I use consensus earnings, haircut them by 5%, and then I put in for my market multiple a 3.3% inflation number for the first quarter of next year, 4.5 10-year yields, and no cuts from the Fed. And and that model was signaling well over 8,000 before, so it's a hot model, but I can still get there with the math if the earnings hold up, even if I pull the multiple down.
Laura, you noted that one company said, absent the uncertainty in economic conditions related to the Iran conflict, we would have raised our full-year guidance.
Yeah.
Convenient excuse, the Iran conflict, for some companies?
So, I know that's come up a little bit on some of the software companies, and, sort of my take on that is whenever we have sort of troubled industries, they will often sort of blame the macro. So I think that was one discussion we were having with people last week. I did notice a number of companies, and look, we didn't have nearly as many as we're having this week, but we had a lot this week. We did the best we could to sort of read through everything. And we found a number of companies also maintaining guidance. And I think what we have happening here, right, is we've got this really stiff headwind from the Middle East situation. It could continue to get stiffer, but because of hedges, because of inventories, because things have not really hit yet, right? Companies still are sort of selling this message that they can manage through, right? That may end at some point, but there are buffers in place. At the same time, you've also got these really strong tailwinds in some respects running into these headwinds. And so far, the tailwinds are ending up being a little bit stronger than the headwinds. That balance may change. But right now, it feels like the market is acting pretty rationally.
A final question. For someone who's maybe taken 12 months off and taken a long vacation, good for you, if you've done that, by the way, and you had to frame for them what's happened in this equity market, would you say one or two? One, we've rallied aggressively off a low from only 2 or 3 weeks ago, or two, we've done nothing since October. What would you tell them?
I think that we have chopped around, to be honest. I mean, I think that we have broken out to new highs in the S&P this year, and the week that was really getting started, I was on the road seeing clients, and they were just taken aback. It was just sort of a state of disbelief. I wouldn't say it was bearish, but I do think there was a sense of confusion, right? And we talked a lot about these U.S., non-U.S. issues, but I think the reality is that the market is actually acting pretty maturely, is acting pretty healthily. I think last time I came on the show, I think I said something like, take a deep breath. And I've been sort of saying that message, take it one day at a time. And I will say, when I've talked to some of my faster money clients, kind of the hedge fund crowd, I was impressed back during March that they really weren't doing a lot, whereas maybe 10 years ago in my career, they would have been trading the heck out of the short-term downside, but they had their hedges on. They were waiting to see what happened. The long-onlys weren't doing much. That's a very different maturity level than what I saw 10 years ago in my job.
You fancy that 12-month vacation?
I would love it.
Right. Laurie Cavacino of RBC. Laurie, thank you. You want a year off?
I mean, look, I think that, please, petition away, because I'm right there behind you. I love that people are telling us, take a breath, take a deep breath. You've got Jim Zelter, take a walk.
Take a walk, touch grass.
Essentially, touch grass. So, I think that the world, the stars are aligning, John. I think that's
I'll give you a great example of the fatigue setting in. For the last 2 months, we've talked about Monday morning starting on Sunday evenings. Let's stop this weekend. I didn't sense a buzz of people anticipating the open Sunday evening at all in quite the same way. There's a real fatigue that's clicked in with this story. The story is still important, but there's a real fatigue that's clicked in this market.
Not only that, I think that absolutely you're correct, but to add to that, to build on it, not only did you see oil prices tick up in futures, but so did stock futures, right? So did equity futures around the world. So people seem to be shrugging it off because ultimately they weren't trading in the same kind of tight correlation.
Crude this morning up 2%, just short of 108 on Brent crude. WTI at 96.40 with an update on stories worldwide with your Bloomberg Brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, good morning, John. A 31-year-old man will be arraigned today over Saturday night's shooting at the White House Correspondents' Dinner. The acting attorney general says the suspect was probably targeting Trump administration officials, but his exact motive is not yet clear. Iran is offering the U.S. a new proposal for reopening the Strait of Hormuz and ending the war. Axios is reporting the offer postpones nuclear negotiations to a later stage. President Trump is expected to hold a meeting with top security and foreign policy officials later today. Senator Tom Tillis is ready to advance Kevin Warsh's nomination as the next Federal Reserve Chair. Tillis says the Justice Department's decision to end a criminal investigation into current Chair Jerome Powell removes a threat to the central bank's independence. That is your Bloomberg Brief. John.
Vonnie, thank you very much. Opening the door for confirmation, but have we opened the door for Fed Chair Jay Powell to go to the exit? And that's a slightly different question.
Well, that's what I want to know. So obviously we're going to have a new Fed chair likely May 15th. Does this mean Jay Powell views this now as a time to step aside, no longer needs his governor's seat? Maybe we'll find out this week.
We'll have that conversation later this hour. Up next on the program, an attempted shooting in Washington, D.C.
Mr. President, do you know if you were the target of the gunman?
I don't know. It sounded to me, I read a manifesto. It's just these radicalized. We live in a crazy world.
Up next, we'll catch up with Bloomberg's Tyler Kendall, live from New York City this morning. Good morning.
astonishing day for US technology.
It's shaping the region's technology ecosystem. Asia's biggest tech news and innovation.
Welcome to Bloomberg This Weekend. I'm David Burke.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm election.
Hear it first on Bloomberg.
Equity futures pulling back from all-time highs. We're down just 0.1% on the S&P 500 following 4 consecutive weekly gains on the S&P. On the Nasdaq, up by 0.1% following a record 18-day winning streak for the semis going into a major reporting week on Wednesday. Some of the big spenders, the big customers of those chip companies.
And that's the key question to me, is how much are we going to see some of the large tech players continue to reaffirm acceleration in their plans to keep spending, just propping up that semi-trade that much more.
Let's get to crude. 5-day winning streak could become 6. Brent crude this morning just short of 108, up by 2% this morning. WTI up by 2 percentage points as well. Starting to see the tension rebuild. Not just at the front end of the yield curve, or rather the crude curve, but further out as well. You can see which market I'm used to talking about. Further out as well, to the latter summer months and deeper into the year, into 4Q.
This feels like a stalemate, and a lot of people are gaming out how much it could really take to reopen the Strait of Hormuz and then get production restarted, which is a reason why you see Brent trading at the highest levels in the December contract going back to the start of this conflict.
I want to turn to the bond market briefly. Yields a little bit higher by a single basis point at the front end of the curve. The 2-year this morning at around 380. Under surveillance this morning, an attempted shooting in Washington, D.C.
Mr. President, do you know if you were the target of the gunman?
I don't know. It sounds to me, I read a manifesto. It's just these radicalized. We started to realize maybe it was a bad problem. I was walking out. It was about halfway there, and they said, please go down to the floor. Please go down to the floor. So I dropped to the floor. I wasn't worried. I understand life. We live in a crazy world.
So here's the latest this morning. The suspect accused of opening fire outside the White House Correspondents' Dinner expected to be charged in federal court later on today. Bloomberg's Tyler Kendall joins us now for the latest from Washington. Good morning, Tyler.
Hey, John, good morning. Well, the suspect is facing 2 federal charges, though the U.S. Attorney for D.C., Janine Pirro, says she expects more to be added as the investigation unfolds. It's right now in its beginning stages, though preliminary evidence does suggest that the suspect, Cole Allen Thomas, was targeting administration officials. He was carrying knives, a shotgun, and a handgun. Manifesto reviewed by Bloomberg News shows he wrote that President Trump was a, quote, traitor. Now, the acting U.S. Attorney General for D.C., Todd Blanche, has suggested that Allen is not cooperating with investigators, though they've already been able to piece together some of his movements ahead of the planned attack, including that he traveled cross-country by train from California to Chicago to Washington before he checked into the event space, the Washington Hilton, several days ahead of time. There are a lot of questions here that still need to be answered when it comes to what security protocols are going to look like going forward, though the Secret Service has defended its actions. And, John, we can say President Trump did confirm that one Secret Service agent was shot, though he says that he has been fully recovered and that he was protected because he was wearing a bulletproof vest.
Tyler Kendall with the latest. Tyler, good to see you safe and well as well. Tyler will keep tracking that story for us throughout this morning. Also tracking the latest developments between Iran and the United States. The latest from Axios this morning. Iran gave the US a new proposal for reaching a deal on reopening the Strait of Hormuz and ending the war, with nuclear negotiations postponed for a later stage. This is the view from Norman Rall of CSIS this morning, writing the following. The most likely course over the coming week is continuation of the current blockade and indirect diplomacy. A narrow maritime arrangement remains possible. Norm joins us now for more. Norm, a warm welcome to the program. That last line, a narrow maritime arrangement remains possible. Norman, what do you mean by that, and what kind of arrangement might we see?
Good morning. And first, it's good to see Anne Marie here, and I'm glad that she is safe, and obviously the president and the other attendees. It's possible that some sort of arrangement to allow a limited amount of humanitarian goods could go through, but that itself remains unlikely. And here's why. In essence, the United States and Iran each see the Strait of Hormuz as not only the focal point for this, but their main pressure point over the other. We're now in a 3-clock contest. The United States sees the control over the Strait of Hormuz as its sole opportunity to squeeze the Iranian economy, and that's a real pressure point. Inflation is rising in Iran, and it's enduring real economic pain as its oil industry shuts down. But the Iranians know the war power situation is coming to a head this Friday. It's only a political issue in the near term for the president, but it's a real one. And of course, economic pressure in the world is coming forward. So you've got a situation where each side is in this viewpoint that the Strait of Hormuz is the central pressure point for each other, but there's just a narrow deal that is out there. But we're in essence negotiating on whether we should be negotiating, and the Iranians see the Strait of Hormuz as their chance to get out of jail economically.
Norm, nice to see you too this morning. Could this maritime arrangement mean, or is accepted by the United States, if Iran continues to have a toll and continue to control it, even if ships can pass through?
That's unlikely, and let me explain why. The United States sees that the only way that it's been able to bring Iran to the table is for meaningful talks has been through economic pressure and military pressure. Now, if the Strait of Hormuz is open, well, the first thing that's going to happen is, what is the purpose of the entire U.S. military presence in the region? Are we going to maintain 3 aircraft carriers in the region if there was no blockade? That's unlikely. So if the military pressure is removed, if the economic pressure is removed, what do you think the chances are that the Iranians are going to come to the table with any serious negotiating position? Now, they'll come to the table, and they have done this for years with multiple administrations, but as history has shown with the Iranians, they come to the table to talk. That doesn't mean they come to the table to talk about anything seriously, and the Trump administration, in fairness, knows this history quite well.
Mohammed Ghalibaf on Twitter was talking about supply cards that the regime could still use. The Bab el-Mandeb Strait, he says, is unplayed, as well as pipelines. Is this just a threat, or do you think that we could see real escalation?
Well, it's probably more accurate to say someone typing on Twitter in the name of Mohammed Ghalibaf is stating this. The Iranians do have the capability of resuming hostilities, but bellicose rhetoric has long been a mainstay of Iran's public diplomacy. It's a possibility, but at the same time, we have 3 aircraft carrier task forces in the region, which have an enormous military capacity to produce quite a significant amount of destruction against Iran's military and civilian infrastructure.
Norm, I'm curious about the economic blockade that the U.S. is engaging with and how much leverage it's giving the United States versus Iran, given the fact that it is starving them of much-needed dollars, and there's discussion about dissent among the ranks who aren't getting paid. Do you have a sense of how long Iran has to hold out versus the U.S. and its allies?
No, and that information is not going to be known outside of probably Iran and intelligence services. Now, Iran is going to hold that data very close. It doesn't want the world to see that the pain that is being imposed by the economic blockade, nor the military damage, is how serious that is actually being felt, because it's going to want to appear to be robust, defiant. Not much is happening, but the pain is genuine, and it's likely that the administration has a good idea of this, and for this reason is willing to hold off on negotiations. So you've got each side understanding the pain of the other. It's just that the Iranians can see the U.S. political pain because our system is open. For the United States, it's going to have to assess this through other means.
Norm, always good to see you, to get your reflections on the current state of things. Thank you, sir. Norman Rule there of CSIS. Crude this morning on Brent, just short of 108. Without extreme inventory draws, this number would probably be a lot higher. And that's the view of Goldman Sachs this morning as well. Extreme inventory draws are unsustainable. Even sharper demand losses could be required if the supply shock persists for even longer.
A lot of people have been saying this with something like 1 million barrels that are now withdrawn from the overall market as a result of these closure. And you have the trajectory right now, as we were hearing about late last week from the folks over at Goldman Sachs, the trajectory is for record low inventories. This gives a very low cushion and is part of the reason why maybe you haven't seen more of a disruption at the front of the end of the oil curve so far.
And it's why you're seeing an Axios story about maybe you can have some sort of maritime deal when it comes to Strait of Hormuz, but not actually a nuclear deal. Gasoline this morning, $4.11. Huge problem for the White House heading into the midterms.
Up next on the programme, we'll catch up with Stephen Schork of the Schork Group. On crude, still rising, plus Yahira has your morning movers. Qualcomm getting a boost from a potential partnership with OpenAI. Live from New York City this morning. Good morning. You're watching Bloomberg TV.
We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Four weeks of gains on the S&P 500. Believe it or not, the longest weekly winning streak going back to October 2024. Equity futures this morning pulling back from all-time highs, down just 0.1%. On the NASDAQ, big week for the NASDAQ, and by 0.1% this morning, heading into a lot of earnings later this week. 4 names accounting for about a quarter of the index coming up on Wednesday. Before we get to all of that, we've got to talk about the run in chip stocks. 18 days of gains for chips, up another 10% just last week alone. Nvidia this month, And April's not finished yet. Nvidia's up 20% almost this month. That's more than $800 billion of market cap added to that single name.
Hitting a record high after really not neglecting to do so over the past number of months, despite some of the record highs in the overall indexes. That chip run, the 18 straight days, it is up 39% in that period of time.
Crazy.
Do you see the affirmation of that run when you see the capital expenditure plans of some of these big tech players? Does that give it more wind, or is the bar now so high? It's sort of buy the rumor, sell the news, and I think that's going to be one of the more interesting aspects of this week.
40% run for chip stocks. Just amazing. With this taking place in the commodity market, that's what's insulating the equity market stateside. Looking at crude this morning, Brent up every single day last week. Over that 5-day period, higher by some 16%, and up again this morning by 2 to around 108. And as we keep talking about this, it's not just the front end of the futures curve. It's the longer end of the curve as well, starting to price in higher for longer.
There is a feeling of boiling the frog here, that the longer this goes on, the more we could hit some sort of key thresholds where it gets a lot harder to bring oil back online. And frankly, the shortages are becoming very real. And that is what a lot of strategists are looking at. Citi's Stuart Kaiser came out and said, ultimately, we could hit that tipping point where suddenly it becomes this concern of the stock market. Right now, it isn't, but it very well could be, and we might be getting close.
Well, this Goldman story is talking about what prices will be like in the fourth quarter if we have extreme inventory draws, which if the Strait of Hormuz continues to be shut for a prolonged period of time, we will have those draws. It's about $30 higher now for their fourth quarter adjustment than it was before the conflict began.
It was around 60 for the fourth quarter, and now it's an average of 90. And that's up from a previous forecast of 80. These are big revisions that keep clicking in. In the bond market, 2s, 10s, and 30s, we can spend some time on the future of the Federal Reserve a little bit later this morning. Let's just sit on the 2-year. Yields basically unchanged, up maybe a single basis point to around 380, 378, 66 this morning. As we count you down to the up and about 3 hours away, let's get you some single names, some morning movers. Yahira has more. Hey, Yahira.
Hi, John. Chips could be up again today. Given this move here in Qualcomm shares are up 10.5% in the pre-market on a report that it could be working with OpenAI on smartphones, something we know OpenAI has been interested in ever since it acquired Apple legend Jony Ive's startup last year. But even though this is just a report and still early days, it's enough to get investors excited about the potential of an OpenAI smartphone. And that same report is pushing Apple shares lower, down 1.5% on the concern that OpenAI can push into the hardware market and become a direct challenger to Apple, where consumers might opt for a smartphone built around AI from the ground up. And we end on the car rental company Avis. Those shares down 2.5% in the pre-market after a 70% plunge over the last 3 sessions. But remember, this stock had run up some 600% in just a matter of weeks, that largely due to a short squeeze. But we are seeing a bit of an unwind here, but it's a move very reminiscent of the meme stock days. John?
Yahira, thank you. What a wild ride. More from Yahira in the next hour. On our radar this morning, Iran signaling it may be willing to accept an interim deal with the US. Axios reporting Tehran will reopen the Strait of Hormuz if Washington lifts its naval blockade and postpones nuclear talks. Elsewhere, the president recounting his evacuation from the White House Correspondents' Dinner, telling 60 Minutes his policy decisions may put him in greater danger.
This appears to be the third attempted assassination on your life. Why do you think so many people may be trying to kill you?
I've done quite a bit of research into the word assassination, and they go after consequential presidents.
Your policies are also controversial. Is that part of it?
Well, I don't think that way. I don't think in terms of what they are. I just think of what they are for the country.
The FBI and Secret Service investigating a potential motive for the shooting. And finally, Republican Senator Tom Tillis is ready to advance Kevin Walsh's Fed chair nomination. Tillis saying the DOJ's decision to end its criminal investigation into current Fed chair Jay Powell eased his concerns over Fed independence, which raises a question not about Kevin Walsh's future, but now about Chairman Jay Powell's.
If you were thinking that this was going to be a boring Fed meeting on Wednesday when Chair Powell gets to the podium, I can say it will not be, and this will be the ultimate question. What is your plan? Do you plan to stay on? What is your threshold? I know he will have written answers to this, but every journalist in there does not care what his view of forward interest rates really looks like. They care about his future and what the composition is going to look like, and ultimately, he will have to respond in some capacity.
There was one line at his news conference that's going to be repeated into Wednesday, with transparency and finality. So when we heard from the U.S. District Attorney Jeanine Pirro, she said the following: would not hesitate to restart a criminal investigation should the facts warrant doing so. Have we wrapped this up with transparency and finality?
Well, the way Senator Tillis talked about it, he said that he's been given assurances by the DOJ that they are stopping when it comes to the probe. But the Fed Inspector General is pursuing a separate probe when it comes to the cost overruns and seeing if there was anything egregious when it comes to the building renovation. But he feels like he has enough from the DOJ to pursue a yes vote on Wednesday at the Senate Banking Committee to make sure Kevin Warsh goes through. You know, I tried to talk to Jeanine Pirro about this at the White House Correspondents' Dinner before all the chaos with Tyler Kendall. She just wanted to talk about fashion. Then when I said, well, actually, I came over here to talk to you about the DOJ, what's going on with Kevin Warsh and Jay Powell, and she goes, oh, do you want to know about that? And then walked away.
That meets the bar for Senator Tillis. The question I'm asking is whether that meets the bar for Fed Chair Jay Powell, who could remain on the board for the time being.
Is he trying to keep leverage to get it completely dismissed in some capacity where he isn't going to have liability after the fact? And does he sort of preserve his immunity by staying on the board? All really reasonable questions, all should be asked. And frankly, do we get the transparency and directive at this Fed meeting about what exactly is going to happen?
Chairman Powell in the hot seat, looking forward to that on Wednesday afternoon. Let's turn back to the commodity market. Crude rising for 5 consecutive days with the US-Iran peace talks at a standstill. Stephen Schock of the Short Group writing the smart money has already exited and the crowd hasn't noticed. Producers are locking in $90 plus prices. Barrels are already sold into 26. Stephen joins us now for more. Stephen, welcome to the program. Let's pick up on that line. The smart money has already exited and the crowd hasn't noticed. Just build on that for us, please.
Yeah, absolutely. So since the start of the conflict 8 weeks ago, we saw a rise in open interest, a rise in trading and positions, long positions being held by hedge funds and proprietary or trading desks, institutional investors. But net 8 weeks into it, the hedge funds are only net long now 45,000 contracts where we were before the conflict. Given that we've had a 50% rise in oil prices, we're seeing a very de minimis reaction now by the hedge funds. So it looks like the hedge funds did participate in this. They did ride this up, and now they've moved to the sidelines. The same with the other side of it, the other reporters, large speculators. Their position is effectively zero since the start of this. That they came into this at a certain length, and they're no longer today than they were 2 months ago at the start of the conflict. So that smart money, being the large speculators, have moved to the sidelines right now. So they certainly participated, but they're no longer participating at this time. So they've moved to the sidelines, keeping their powder dry, waiting for the next headline to make their next move in the market. But clearly, they're out of the market, out of the run at this point.
Stephen, have we moved away just slightly from the headline roulette that we had been experiencing for a number of weeks, where suddenly this feels like a stalemate, this feels like a higher for longer situation, where there is destruction in terms of just the facilities as well as potentially in demand coming from over in Asia? Are we reaching that tipping point?
Oh, absolutely. Now, the difference here than it was 2 months ago. 2 months ago, end of February, March, when this began, global demand for oil on the calendar is at its weakest point. This is when the refineries are shutting down. They're buying fewer barrels. They're getting ready for the summer demand season. Well, it's late April. A couple more weeks, we'll be at Memorial Day. Peak demand season for gasoline, for diesel, for jet fuel. So that hammer is about to hit the market. So perhaps on the speculator side, they're sitting there waiting for this hammer to hit. But we are 3 to 4 weeks before we hit the peak demand season. And this is what likely has been keeping a cap on prices, just a lack of demand, both from demand destruction because of higher prices, but also the normal seasonal demand destruction that we see in February, March, and early April. But that's about to change. So absolutely that we're looking at a market now higher for longer, certainly through the rest of this summer into the third quarter is the play at this point.
And Stephen, to reiterate that point, I mean, John and I have been talking about the forward curve in oil futures and how it does seem to be increasing the cost over into December with $90 a Brent almost at one point. You're talking about how producers are locking in $90+ a barrel for the remainder of this year. How long could you see that type of price level persisting?
Oh, absolutely. Well, that is one of the caps. That's one of the positives in the market where producers, when we look at the CFTC data, have sold in WTI approximately 200 million barrels of oil. Now, they're not going to produce that, but their hedge desks are well prepared for this. So there is going to be a significant amount of oil production coming to the market to offset those hedges. So certainly when we're starting to look at the back end of the curve, this is kind of the signals that we are getting now when we look at the spread relationships in that term structure of forward prices. Oil prices now going into the fourth quarter, which again, now we get to the point where we're coming out of the peak season into a lull in demand, but certainly we're looking at now $90 a barrel, now becoming more of the norm as we look forward through the end of this year.
Stephen, you say Gulf Coast products are running on fumes heading into Memorial Day. How much higher could we see U.S. gasoline?
Yeah, absolutely. So that is the real concern. And it's a really interesting phenomenon because now we have, of course, the Gulf Coast refinery epicenter, which the majority of that production gets put on pipelines that get sent up into New York Harbor, the Colonial Pipeline. And we also have domestic vessels that do transport barges into New York Harbor. But we've waived the Jones Act. So now you have foreign flag vessels that are allowed to load product in Houston and move it into the East Coast. And that has accelerated because the access of that ability to move oil out of the Gulf Coast has accelerated a significant downturn in inventories in that region at the most important part of the year. So how high can we go? I believe on the previous segment, you quoted gasoline prices, national average around $4.11. Well, 3 years ago, we were at over $5 a gallon at this point. We're not going there yet at current pricing. The market has priced it in, but certainly if we start ticking higher, about every $1 higher of crude oil translates into about 1.9 to 2 cents at the pump for the consumer. So right now we are certainly pushing up to the levels of 411. We calculated possibly 2 months ago, we calculated 425 national average coming into the summer. That was holding the status quo. So at this point, the answer to that is if oil prices hold in this range, mid-90s to 105, 425, 440, 450 is likely the highs we are looking at. So it all depends on where oil prices are going at this point.
Stephen, do you think this administration could go back to the drawing board and potentially make sure there's an export ban heading into the midterm elections?
Yeah, I've started to hear that now, and it's a very scary proposition at this point. To look at in an export ban. Now, if it's an export ban on crude oil, well, why are we doing that? Because a lot of the crude oil we produce, we don't even consume. We can't maximize not at our refineries. So we want to keep that trade open because what we do is we produce high quality oil, sell it at a premium, and then replace it for our refineries with a lower quality, lower priced oil. From a trade balance standpoint, that's a no-brainer. But I've heard rumblings now about an export ban on products. This is a political event economically, from a market standpoint, from a trading standpoint. It is just a doom loop that will ultimately push prices even ultimately higher. But from a political standpoint, it doesn't matter if you're on the right or you're on the left. Stupidity knows no political bounds. So we saw some pretty dodgy moves in the past administration. I wouldn't put it past this administration to do something because why would they do that? Politically, they can say, aha, you see, we exported product, we put the ban on these products, but prices are still going higher. So who are you going to blame after that? It's going to be those greedy oil companies you're going to blame, not the whole market mechanism that you're playing around with. So it is a possibility. You can't rule anything out in this market these days.
That can get messy and messy quickly. Stephen, thank you, sir. Stephen Schulk there of the Schulk Group. Crude on a 5-day winning streak. We can make it day 6. We've got gains today, rising for a 6th consecutive day. Brent crude, 106.81, up by more than 1% this morning. With an update on stories elsewhere this morning with your Bloomberg brief, Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. President Donald Trump saying Saturday night's shooting justifies the White House's need for a new ballroom. Last month, a federal judge ordered construction stopped until the president gets approval from Congress. The DOJ filed for the lawsuit to be dismissed following the shooting. DeepSeek is pitching aggressively low prices in an attempt to intensify competition across the Chinese AI market. The company is offering a 75% discount to developers using its new flagship model, V4 Pro. A group of budget airlines, including Frontier and Avelo, is seeking $2.5 billion in government assistance. The Wall Street Journal reporting the airlines would offer warrants that could convert into equity stakes. And that's your Bloomberg brief. John.
Hey, Vonnie, thank you. More from Vonnie in about 30 minutes' time. Up next on the programme, confirming Kevin and Walsh.
I am prepared to move on with the confirmation of Mr. Warsh. I think he's going to be a great Fed chair. So this will allow Mr. Warsh to move on with his confirmation on time.
Will it allow Chairman Powell to move on? Someone desire Franklin Templeton joins us next.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Equities on the brink of turning positive on the session so far, just about unchanged on the S&P 500. Positive on the Nasdaq, up another 0.15%. Under surveillance this morning, confirming Kevin Warsh.
I am prepared to move on with the confirmation of Mr. Warsh. I think he's going to be a great Fed chair. So this will allow Mr. Warsh to move on with his confirmation on time. And then Mr. Powell will have to make his own decisions at some point in the future about when and if he leaves the board before the end of his 2028 term expiration.
So here's the latest this morning. Kevin Warsh clearing a major hurdle to become the next Fed chair after the DOJ dropped its probe into the central bank. The Senate Banking Committee set to vote on Wednesday. Sonal desire Franklin Templeton joins us now for more. Sonal, good morning.
Good morning.
We can get into the future of the Federal Reserve under Kevin Warsh in just a moment. I just want to get through the Federal Reserve current chair, Chairman Powell, and what's going to happen to him. So some key dates. So May 25th is when his term finishes as Fed chair. 2028, you can stay on the board as a Fed governor. Which date do you think he's going to choose here?
You know, number one, I don't know. It really depends on what he wants to do. But number two, I'm not sure it matters. It really doesn't matter. This notion that somehow the current Fed chair is the only thing standing behind complete loss of credibility of the Fed and whatever else lies ahead, I think that's misguided. I think that the institution is relatively strong and enormously dovish. So I don't think that it's just Jay Powell who stands between.
Enormously dovish. Does that change with the change of one man then?
No, I don't. I actually, you know, so again, this entire focus on loss of credibility for the Fed seems to really focus on the idea that this is what is going to cause the Fed to lose credibility. And I would argue the Fed actually did it to itself when it monetized fiscal deficits of close to 25% of GDP over a 2-year period. I'll just repeat, 2021, 2022. So everything since then is the Fed trying to regain credibility. And I don't happen to think that Kevin Walsh is going to change that dynamic.
Well, there is this question about whether he is going to be dovish, whether he's going to cut rates even in the face of inflation that potentially is stickier for longer as a result of what's going on with oil prices. Do you agree with that? I mean, do you think that this is ultimately someone who, even though he has been hawkish for most of his career, will skew dovish in the face of political pressure?
So I would say if he does skew dovish, I would be surprised, because the biggest thing he's talked about is the idea of taking monetary policy back to its orthodox roots, which means you don't buy long-end treasury. If the US Feds, if the Fed's overall balance sheet had expanded at the average pace of nominal GDP, we would be looking at a balance sheet of around 1.5 to 1.6 trillion today, as opposed to closer to, what is it, 8 trillion? So we're looking at somebody who's taking the Fed back to its roots. And I think that's, on balance, what is more important. Will he cut rates? I think if the situation demands it. Right now, I'm not calling for more Fed rate cuts this year, based on fundamentals.
So where does this leave you in terms of your market expectation? Because listening to that, I could make two ideas. One, if he really is going to be hawkish potentially based on what he's done in the past, or at least trying to reframe the Fed around its old framework, well, then 2% inflation remains 2% inflation. I would buy long bonds, because ultimately that would be a very different scenario than, say, a dovish Fed. If this is someone who's not going to be buying long-term bonds, on the other hand, that's potentially a pressure. Where do you line up on that?
So right now, I'm not buying long bonds here, because I don't think long bonds are yet fully pricing what I think is going to happen. And you've got to look into a multi-year period here. And I hear that where I disagree with Kevin Walsh is his idea that productivity, stronger productivity growth is necessarily going to lead to a lower, call it a neutral nominal Fed funds rate. I don't actually agree, because that Fed funds rate is a combination of inflation and long-term productivity. So the idea that the disinflation from productivity is going to be enough to make up for the increase in productivity, I'm not sure that works. I'm not sure that the round of productivity increases we're going to get this time will necessarily be disinflationary. So what I mean by this is 2% productivity growth, 2% inflation, 4% Fed funds neutral rate. I'm not sure we're at 2% inflation, and I actually think we're going to get higher than 2% productivity growth. So if anything, I think neutral Fed funds is higher.
Right, but this Fed has shown it's willing to cut interest rates even without 2% inflation.
Oh, absolutely.
So wouldn't he be able to make a case to this group, the FOMC?
He could, but not right now, and I don't think not this year. Essentially, I don't see oil prices, and this is a headline issue, I totally get that, headline issue. I don't see oil prices coming down. We estimate around 25, 35 basis points of inflation for each 10% increase in oil prices. You easily, comfortably get closer to 4. Now, I get it, they're supposed to see through it, but after the period we just came through in 2022, 2021, I doubt that this Fed is going to be cutting into that.
You said something that actually you could argue that the neutral rate's higher than where it is currently.
Yeah.
Is this a Federal Reserve under Kevin Walsh that you could see hiking as its next move?
Only if we thought inflation was significantly higher. I see this Fed frozen next year. Could we see Fed funds higher? It's possible. It's not my baseline right now, but I'm certainly not anticipating additional cuts from 3 to 2.
Let's go there. What would make it your baseline?
Sorry?
What is significantly higher inflation? What is that? Going from 3 to 4, 4 to 5? What is that?
So to me, it's more 4 to 5. 3 to 4, I believe they probably look through. You start going to 4 to 5, you're looking at second round.
Do you think this labour market's strong enough, tight enough to generate that kind of inflation?
You know, the labour market is pretty balanced, and I think it's improving. It's not deteriorating here. The data which has come out is all hawkish. It's a very difficult situation for anybody to come in and start cutting.
Sonal, great to see you, as always. Sonal Desai there of Franklin Templeton. This labour market, the data we've seen more recently, has been pretty decent in the US economy. The only outlier seems to be the confidence figures, the sentiment numbers. I really struggle with the sentiment figures. The idea that UMich consumer sentiment has never been lower in the history of that survey going back to the late 70s. Think about everything that's happened in between over the last 40, 50 years.
I can't imagine that people felt much better in 2008, maybe in October, after Lehman Brothers had fallen, and the real question about the mortgage overhang. Look, a lot of people have disregarded the sentiment figures as something that they put into their models and then reject when they get other data that seems to contradict it. And people are looking at things like Neil Richardson saying, which is that actually you are seeing hiring pick up, to Sonal's point, and those are the metrics that people are really going to keep a closer eye on.
When it comes to the sentiment figures, it's basically become somewhat of a political poll. And that's really what it is. It's showing sentiment about politics. Do you agree with the president and his policies or not?
Youth employment picking up as well. It's good to see you. Seen some of that data?
Are you kidding?
Very
I was getting very excited. I'm like, only 4 more years. Just hang in there.
You need them to get paid, right?
I need them to get paid at the other side. They're not going to bankrolled by me.
Coming up on the programme, it's good news. We're catching up with Russ Kostrick of BlackRock, Henrietta Trays of Vader Partners, Jonathan Krinsky of BTIG, Colin Martin at Charles Schwab. The second hour of Bloomberg Surveillance, just around the corner.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in 1.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
it is going to be, I think, very tough for the Fed to change their stance.
We do think the Fed will still get in at least one, if not two cuts by the end of this year.
The focus the next couple months will absolutely still be inflation data.
Our view is that you're going to get demand destruction in some way.
I'm increasingly worried that you're seeing pressure on the consumer.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now. The price action, your scores look like this. Unchanged following 4 weeks of gains on the S&P 500. All-time highs on the NASDAQ and up another 0.2% this morning. Going into a week full of tech earnings. Let's get to Wednesday and the week ahead. On Wednesday, we have got the likes of Amazon, Microsoft, Meta, Alphabet. Thursday, get a sneak peek of Apple and what's happening over at Apple HQ. In the meantime, you've got an 18-day winning run on semis that could become day 19, thank you Qualcomm, and a run keeps building.
And it really is predicated on the idea that spending is existential and will keep going. Do we see that 40% rally continue, given the fact that likely these tech giants are going to talk about that? Just to put into perspective how big of a week it is, $28.8 trillion of market capitalization is how much the companies that are reporting earnings this week account for in the S&P 500. Just on Wednesday alone, it's $14.3 trillion. So this really does give us a sense, A, of the resilience, and B, of just how high the bar is for these names to continue to be the safe havens.
They are these secular tailwinds guiding and driving this equity market. These are the cyclical headwinds that we'll be talking about throughout the week as well. Brent crude, WTI, Brent crude around 107, WTI around 95, and another gain this morning. Brent up every single day last week and up again this Monday morning.
What says to me is that the market is now conditioned for these Sunday night news stories that potentially a deal is on the horizon, but it's actually not. And I'm talking about what came out last night from Axios, saying that Iran, through Pakistani mediators, gave the U.S. a new proposal for reaching a deal on reopening the Strait of Hormuz and then basically putting on the back burner when it comes to the nuclear file. At the moment, that is not the case in terms of what is actually happening on the ground. The Strait of Hormuz remains shut, and that is why you're seeing firms like Goldman Sachs coming out and saying we are going to see higher for longer crude.
Speaking of doors shutting, the door is officially shut on a merger between American Airlines and United Airlines. Just getting a statement from the United Airlines CEO, Scott Kirby, just moments ago.
Yeah, he's saying this is a very personal, it's a very different kind of press release, which is first person. Over the last 2 weeks, there's been a lot of commentary about a potential merger between United and American. And to be direct, here's what happened. I approached American about exploring a combination because I thought we could do something incredible for customers together. He was confident with this combination. He was hoping to pitch the story to American, but they declined to engage and instead responded by publicly closing the door. And without a willing partner, something this big simply can't get done.
It goes on, the statement does, and we'll bring you more headlines from it, but ultimately it raises the question, something can't get done with American, but can something get done with someone else in the sector?
And it seems like there's an open door given the fact that budget airlines have their hands out to the government looking for some sort of bailout. Can you see a wave of consolidation? Is this administration amenable to things that perhaps the previous administration was not? That really is the question. As we see other announcements for mergers, there's a huge wave of mega mergers that has been emerging in 2026. Does the airline industry enter in stage left?
What I find is interesting is this potential United America, as I was calling it. To John's point, maybe there is just consolidation elsewhere, and we had an airline analyst on talking about the fact that maybe if they want an in when it comes to JFK, they would need to look at something like a JetBlue. What I find interesting about this statement is that not only is the CEO here talking about this potential and how it's very personal, he went himself to go pitch this, but goes through the benefits of what the combination could have produced, potentially an appetizer for maybe another airline.
I'm just eyeballing this, but 2/3, maybe close to 80% of the statement is about a rationale for further consolidation in the sector.
Yes.
Which to me, yes, closes the door on American, but leaves the door wide open to a combination with someone somewhere down the line.
Yeah, JetBlue, someone that people have talked about, right? Who are the other airlines that might be potential suitors, or that clearly this is the ambition over at United?
United this morning down by 0.5%. More on that sector a little bit later. Coming up this hour, we'll catch up with Russ Kostrick of BlackRock. Heading into a big week for tech earnings, we'll speak to Henrietta Trays of Veda Partners on another potential plan to reopen the Strait of Hormuz, and Colin Martin of Charles Schwab as the path to Kevin Walsh's Fed nomination clears. We begin this out with stocks at record highs ahead of key tech earnings. Russ Kostrick of BlackRock writing the following: we've been increasing our equity exposure, adding back US tech, which is attractively priced relative to the broader market. Russ joins us now for more. Russ, welcome to the program. This is a question people struggle with. Is the outlook for the equity market now really better than it was before this war started?
Good morning, Jonathan. I don't know if it's better, but it's still resilient. The reality is we probably are going to see different drivers than we were expecting back in January and February. And as you remember, back in the beginning of the year, late 25, it was all the broadening out trade. It was about a better than trend economy, pushing up cyclicals, value, small caps. And over the last 3 months, that narrative has changed and really has gone back to a lot of what we were talking about in 23, in 24, which was a market where earnings are strong, but a lot of that strength is being driven primarily by tech and adjacent names.
Russ, the price of the story, 18 days of gains for chips could become day 19. We haven't seen runs like these since the early 2000s. Why is the price of the story still attractive?
Well, first of all, you've never seen earnings like this. I mean, you look at what's happened right now for this earnings season, tech earnings growth expect to be around 29%. Broader market, half of that. The median stock, half of that. So this is an environment, again, where the earnings are really being disproportionately driven by not just tech, but by a relatively narrow part of tech, particularly AI-related, the hyperscalers and semis. But the other thing worth noting is that, yes, we've had this run over the last 2-3 weeks, but really since last summer, tech repriced. And you look at the relative PE of technology companies, the S&P tech sector, relative to the broader market. Earlier this spring, it got down to the lowest we've seen in 5 years. So obviously some of that value has been taken up with the rally, but they did get cheap as investors abandoned the sector and the space for other themes like cyclicals.
Russ, do you think that the bar is pretty high for earnings this week, or does it almost not matter and people are going to look instead at what the forward look is for CapEx and just generally what the demand really seems to look like?
It certainly matters. And again, you know, to be clear, this rally is predicated on the notion that this part of the market is going to outgrow everything else. So you're going to need to, one, deliver on Q1 earnings. People are going to be looking at guidance. I think the CapEx story is interesting because we've gone through sort of several reaction functions by the market. Back in 23, 24, early 25, the market applauded some of these huge CapEx numbers. Then in the back half of 25, you had some skepticism creep in. Is all the spending going to be worth it? I think we're starting to go back to a world in which people are looking at that strong CapEx as a sign of confidence. And that's something else, as you point out, investors are going to be focused on.
This is a fascinating point, Russ. So you think that the early read on Tesla tripling their CapEx budget and then getting punished in the market afterwards was an anomaly, not necessarily a trendsetter for what we can expect from the other tech giants?
I think it's a little bit of a different response with Tesla than the hyperscalers, because again, you're talking about a different business model, and you're also talking about this broader question about AI adoption.
Russ Kostrick of BlackRock there with the latest, looking out to the equity market at all-time highs on the S&P 500 and the NASDAQ. Can you make the case things are better now than they were before the war? That's where the market is, ultimately, at all-time highs.
Well, some people would speculate that the CapEx that was not rewarded necessarily by the market wasn't even rewarded in the stocks that would benefit the most from it because people were moving on from the tech story and were concerned about it. And suddenly now they're coming back around as they look for other things that they can do that isn't dependent on headline roulette. And so suddenly people feel better and they look at the re-rating and they look at the fact that earnings have continued to gain. So from that perspective, yes. I do wonder whether Russ's last point there was correct, and I think it's a really interesting one, which is that if we see big CapEx spending, that it will actually be rewarded in a sign of confidence once again by the markets, not akin to what we saw from Tesla, and that I think is a really interesting
Would you
point.
like to play headline roulette? Is that the game you'd like to play? We play it every Monday morning, so why not?
Not particularly, but sure, go ahead.
Usually going into the weekend talks are happening, and then over the weekend talks don't happen. And then you open up on Monday morning, and there's usually a report, I'm sorry, Axos, but it's usually from you, about how close we are to a potential deal. So this is the latest from that publication. Iran gave the US a new proposal for reaching a deal on the reopening of the Strait of Hormuz and ending the war, with nuclear negotiations postponed for a later stage. That last piece of it is the most important piece of it.
Right, because the nuclear talks would obviously take months, maybe even years, when you look at history. How long did the JCPOA take to come together? How long did the Biden administration speak to the Iranians, their entire administration? And then Trump, too, spent a year talking to them about nuclear, and nothing ended up happening on that point, which is why we are here today. The key, though, also to that is that obviously Iran knows their leverage, and it's the Strait of Hormuz, and that's what the president wants open.
Crude at the moment just short of 107 on Brent. WTI at about 95. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. A 31-year-old man carrying multiple guns and knives charged a Secret Service checkpoint at the White House Correspondents' Dinner Saturday night. One officer who was wearing a bulletproof vest was shot and was taken to a hospital. The acting attorney general says the suspect was targeting members of the Trump administration. Domino's Pizza reporting first quarter results that missed analyst estimates. The CEO of the pizza chain saying the company is facing, quote, an intensifying macro and competitive environment. Domino's is hoping to open 1,000 new stores globally this year. United Airlines CEO saying its pursuit of merger talks with American Airlines has ended. In a press release, Scott Kirby writing, I approached American about a combination because I thought we could do something incredible for customers. American declined to engage. And that is your Bloomberg brief. John.
Vonnie, thank you. I suspect they still think we can do something incredible for customers, combining with another airline in the sector.
And to me, my question is, how big is their emphasis in the international revenues that really are going to drive profitability going forward, and how much are they trying to pick up domestic gates? And that will depend on which airline they really set their targets on.
Up next on the program, we'll head down to Washington, D.C. Peace talks on hold.
We have all the cards. We'll deal by telephone, and they can call us anytime they want.
The ceasefire remaining. Will you continue the ceasefire?
Haven't even thought about it yet.
Up next, we'll catch up with Henrietta Trace of Theta Partners, live from New York City this morning. Good morning.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
This week, tons of tech earnings. Check it out. Alphabet Wednesday, Amazon, Meta, Microsoft, Apple later in the week. The gains so far this month, Microsoft up 15%, Meta up 18%, Alphabet up 20%, Amazon up 27. Some major moves for big tech.
And you've asked a really good question throughout the morning, which is how much have these companies actually gotten better in terms of their prospects, and how much have people actually flooded into these names to haven, and could they actually lose clout should there be a resolution to the war in the Middle East and people change their focus back to a broadening out or some other trade?
So one or two things I'd point to. There are many, but here's one or two. One, it's refocus minds on the things that they have confidence in, this over everything else right now. We'll get to the everything else in just a moment. And two, it was odd coming into the new year when you saw the big spenders, the hyperscalers, ramp up spending. And we went through those major CapEx figures, CapEx intentions for the biggest companies on the planet, and you didn't see a move in NVIDIA. And it just carried on moving sideways and doing nothing. That was kind of strange.
And so now people are waking up to the idea that that money has to go somewhere and be spent somewhere. And guess what? That's why we want to own semiconductors. And the reason why we've seen an 18-day stretch of 39% gains in that particular area. Can that continue? And at what point do they start to care about what's going on in the rest of the world? That remains a question. I keep thinking about the conversation we had last week with an analyst who pointed to supply chain constraints within the chip universe. Do we start hearing about that on the calls? And could that stymie this idea that it is completely isolated in a glass box away from everything else happening?
We mentioned this repeatedly last week. It's not a disconnect. It's a time horizon difference. The tech story's in the future, a better future. We hope. The present story, not a good one right now. And this speaks to that. Brent and WTI, front month of the futures curve. Close to 108 on Brent earlier on this morning. Up every single day last week. Up again so far this morning. Building on those gains, not just at the front month, but also in the latter months as well. That tension coming to the surface.
Right, because we're seeing extreme inventory drawdowns. And even though the United States has been relatively insulated, you are seeing the shocks that have moved through Asia and have moved through Europe. And at the moment, even though you do have this Axios report that maybe the Iranians are saying we could do some sort of maritime negotiation on the Strait of Hormuz, you have Mohammed Ghalibaf talking about actually we have more levers we can pull when it comes to pipelines we can hit or the Bab el-Mandeb Strait we can hit. So it's not looking optimistic, especially when on the ground the facts haven't changed.
Under surveillance this morning, peace talks on hold.
We have all the cards. We're not going to spend 15 hours in airplanes all the time going back and forth to be giving a document that was not good enough. And so we'll deal by telephone, and they can call us anytime they want.
Ceasefire remaining. Will you continue the ceasefire?
Haven't even thought about it yet. They offered a lot, but not enough.
So here's the latest this morning. Tehran reportedly proposing an interim deal to reopen the Strait of Hormuz, pushing off nuclear talks. Bloomberg's Tyler Kendall has the latest with more. Good morning, Tyler.
Hey, John. Good morning. Well, at this point, it appears that the negotiations remain at this stalemate, though Axios is reporting that Iran has presented through Pakistani mediators this fresh proposal that could include a reopening of the Strait of Hormuz in exchange for the U.S. lifting its naval blockade. The thing is, this White House has maintained that that's not going to happen. In fact, CENTCOM confirmed over the weekend that it had intercepted another U.S.-sanctioned vessel that has carried Iranian oil, and officials have outlined to us that they view the blockade as leverage, especially if it appears that Iran is now pushing to postpone dialogue when it comes to its nuclear program. In fact, Iranian state media put a little bit more of a finer point on this fresh proposal, including that it has some other points of contention in it, including that Iran would like to see a new legal framework for the Strait of Hormuz, compensation for damages, and also some sort of pledge that the U.S. and Israel would not attack Iran again. Now, despite all of this, John, President Trump still maintains that diplomacy can be a viable option, even as he pulled back on sending his special envoy, Steve Witkoff, and his son-in-law, Jared Kushner, to what was expected to be planned talks in Islamabad over the weekend. But as you heard him say there, he's now suggesting that maybe peace talks could happen over the phone, telling reporters that Iran can either come to us or they can phone us.
Tyler Kendall with the latest in Washington. Tyler, thank you. To build on that, Henrietta Trace of Vader Partners writing, it's hard to see how the Strait reopens for business, absent a military escalation, which President Trump has been trying to avoid in recent weeks. Henrietta Trace joins us now for more. Henrietta, welcome. What does that mean for the diplomatic effort ongoing as we speak?
I think the diplomatic effort is extraordinarily complicated, and I really like to bring it back to tax policy because I think it makes so much sense. So long as the IRGC, which is a state-sanctioned sponsor of terror, has the ability to collect a toll, and EU nations, any Western banking country has to go through the strait and potentially pay a toll or pay a tax, that is the end of the story. That cannot be permitted. I've spoken with international nations, international business groups. They will not engage in that communication and that tax component. And so those negotiations are incredibly tricky. I wish that there were more deputy level negotiations going on. That would give them something to build off of, give a reason for JD Vance to spend those 15 hours on a plane that they just don't have right now. So we're in this stalemate for a very long time. And you're going to see the inflationary impacts of it for as long as that's the case, and then well after.
If the people you're talking to say a toll is not permittable, then what could potentially be acceptable?
That's sort of why I say I don't see a path forward that doesn't include a military component or a really expanded coalition that brings in the EU and also China to have a negotiation with Iran that allows them to move away from controlling the strait, which is both cheap and inexpensive and easy for them to do at this current time. And that's why they've been in control of it for so many days now. I think that we either need to see more military escalation, which the president is averse to at this point, or we need to get EU and China in the game to a greater extent.
But at the same time, this White House is definitely focused on rising gasoline prices. On Friday, we were talking about the waiver when it comes to the Jones Act. When you talk to members of Congress, what are they prepared to do?
There's a flurry of amendments that are filed across all kinds of inflationary pressures. So there's a ethanol fuel blending amendment that will be attached to the Farm Bill that the House is going to vote on this week. There are a whole host of fertilizer-related amendments because those prices are going through the roof. And according to the Farm Bureau, 70% of U.S. farmers have not bought their fertilizer for the next planting season. So there are a number of small-scale efforts at the House and the Senate level to get some price controls. But the big two are really a gas tax holiday, which will not be included in this reconciliation bill, but could theoretically be done via executive order if President Trump really wants to push the envelope, or imposing an export ban, as y'all have been talking about this morning.
This is something that I'm sure bond investors are listening to and saying, oh, no, not again, because ultimately what ends up happening is if there are fiscal responses and levers that are pulled, then people keep spending and prices will stay high and go higher, and suddenly it becomes a stickier kind of consequence. How much discussion is there about that type of economic ramification in Congress?
It's weird. I've been on the road for 2 weeks now with investors, and I hear in the litany of reasons to be optimistic, always some sort of allusion to a fiscal spend, a fiscal package. It makes sense. We're doing a reconciliation bill. And remember, the last one was $3.5 trillion of fiscal spend, including a big thing that we talk about when we're considering how consumers can handle either the tariffs or the higher gas prices. We've got the One Big Beautiful Bill. People are getting money back. I think investors are primed to understand that reconciliation means spending. So that maybe makes sense. But this reconciliation bill that they're working on right now does not include any fiscal stimulus. It's anywhere between $70 and $140 billion of spend just to keep ICE and DHS open. But there's already talk of a third reconciliation package. And I don't think there's going to be much in the way of fiscal in that one either, although there will be, maybe a $300 billion price tag associated with it. But it's this weird contrast of the street expecting D.C. to do something to help the U.S. consumer. And then, as you point out, bond markets who are like, please don't.
Well, there's a question about the political appetite right now to give some sort of support. Is there some kind of fiscal discipline here, or is this just a lack of support for making it easier to continue the war? I mean, which is it? Because, it'd be great if people came out and said, wow, they found fiscal religion. On the other hand, it does seem like there just is a sense that, please, resolve this already.
Yeah, I mean, don't go so far as to say fiscal religion. We have a real debt crisis in the United States, and that's not something we're resolving right now. But as you go into the midterm elections, you have a lot of Republicans, particularly on the House side, who want to see fraud, waste, and abuse trimmed. Jody Arrington, the House Budget Committee chairman, has a $180 billion, tweaks that he'd like to see that would streamline things like the earned income tax credit. We're not talking about changing the retirement age or fixing tax policy in the country. That's nowhere right now. That's not happening.
Henrietta, when you travel around with investors and you're talking to them, are they at least breathing a sigh of relief when it comes to the future of the Federal Reserve?
Yes, definitely. Obviously we're glad to see that the White House capitulated to Senator Tillis, and Senator Tillis in response has said, okay, I'm fine voting forward Kevin Warsh here. But expectations on the street have come in not because of Warsh and not because of the positive developments in terms of his advancing his nomination, but because of the war. There's a lot of confusion on the street, quite frankly, about why gas prices are so low when we haven't seen material demand destruction in the United States, things like 5% less than what we had at the start of the war, and the war continues and the strait remains closed. The strait remaining closed is a compounding, cascading thing, and we're just waiting for the data to hit. That's really the vibe I get from investors. And the war component is fantastic, but you can't cut rates in a rising inflation environment. You know, when Lufthansa's cutting off 20,000 flights and Air Canada's canceled flights to JFK for the next 5 months. I mean, you can see the cascade coming, and investors are basically just waiting for it.
But just quickly on the Fed, the Inspector General is still going to be pursuing a separate probe. Can that potentially muddy the waters?
I actually expected it to muddy the waters so plainly, and the reason I say that Tillis and the president negotiated a ceasefire of their own and an off-ramp here is that there is plenty of room, and Piro's own statement made it clear that if anything warrants, they'll reopen this investigation. You know, my conversation with Senator Tillis strongly suggests that Jay Powell will stay at the Federal Reserve for some period of time after May 15th. So I think maybe that's the backstop that he's relying on now, and I think Powell's comfortable with that. I think Senator Tillis has been given those assurances, and again, as you know, a lot of the members on the Senate side, in the Banking Committee and elsewhere in the conference, really like the idea of ensuring fiscal independence for the Fed, and they appreciate what Senator Tillis has done for the last couple of months here.
Henrietta, thank you for your input. Henrietta Trays of Vader Partners. It's making Wednesday afternoon a little bit more interesting for the Federal Reserve and Fed Chair Jay Powell. This morning, things are interesting for one specific reason. It's Qualcomm. It's up in a pre-market by 13% so far this morning. Chips have had a major run. There's a rumor, I think you can call it a rumor, based on a report that maybe you have some kind of tie-up with OpenAI. And that stock is absolutely exploding higher so far this morning.
Yeah, it's interesting because OpenAI has been both a liability and a boon to a lot of the chip makers, given the fact that people were worried about cyclical types of financing. Right now, we seem to be back in boon phase, which might give a tell to how people will trade on Wednesday.
Nasdaq futures up by 0.2% so far this morning. Up next, we'll catch up with Jonathan Krinsky of BTIG with chips on a record-winning run. Live from New York City, you're watching Bloomberg TV.
Tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Ahmed, only on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gurr.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
Equity futures just about unchanged on the S&P 500. Record winning run on the NASDAQ and the chip stocks, the SOX. The chips index, the Philadelphia Semiconductor Index on an 18-day winning run over that period, up by 40 to 50%. This month alone, Bramo, you keep giving us the number. This month alone, up by something like 40% for that index. Unreal.
Yeah, it's just been a moonshot. And some people could say, well, what took so long? This is the catch-up trade. And then you see things like Qualcomm this morning coming out and seeing another boon at the potential of a tie-up or some sort of agreement with OpenAI. And you wonder, maybe this has more to go, because ultimately it is the one area that people can keep investing in. And if Russ Kostrich is right, that people reward some of the big tech names for spending that much more, well, some of these names might be to the moon.
13% move. Yahara's going to have more on that for you in just a moment. Let's turn to the commodity market. Brent and WTI, big run here as well. Up every single day last week for Brent. Up again this morning by just 0.5%, 105.89. No sign of any diplomatic breakthrough over the weekend.
And remember, we were supposed to see talks this weekend, and they were pulled. J.D. Vance, Steve Witkoff, Jared Kushner were supposed to go, and then it was just Steve Witkoff, Jared Kushner were supposed to go, and then those talks ended. The president saying, I'm not sending my envoys there to have these very long flights, and then nothing materializes. Axios is saying there's potentially a deal on the table. Put the portfolio of nuclear down the road. That's going to take months, to maybe even years, to get to some agreement. But let's discuss the Strait of Hormuz. And even then, the market isn't really buying it this morning.
Let's turn to the bond market briefly. 2s, 10s, 30s. Yields up just by maybe a basis point or so. On 2s at the moment at 378. On 10s at 430. It's amazing how much of a sideshow the Federal Reserve has become. It's not the center of attention for the week ahead in quite the same way it has been in months gone by.
Even with the drama, because ultimately people are looking at what the Fed could potentially do to affect this economic cycle. They're as clueless as everybody else, and they're trying to track exactly the balance of risks. They're subject to potentially oil prices remaining higher for longer, and a real question about the employment figure that seems to be actually firming up. So it's a sideshow because they're not going to do anything, and it's a sideshow because people can't game it out. Throw that in the bucket of uncertainties.
Jobs day, not this Friday, by the way. It's coming next Friday. Gonna have to wait another week longer for that. All right. 2 hours away from the opening bell. Let's get you some single names, some morning movers. Yahara has more. Hey, Yahara.
Hi, John. We have a few earnings to get through. We start with Domino's. Shares are falling 3.8% after same-store sales growth came in well below expectations, with the CEO pointing to a tougher macro environment amid rising competition. And analysts say that the pressure could pile on for this name because it is more exposed to lower income consumers who, as we know, are getting squeezed by those higher energy prices. Turning to another earnings story, Verizon, it was a beat and a raise for that name, so shares are up 3.6% in the pre-market, the largest U.S. wireless carrier, surprising the markets with a gain in phone subscribers when analysts were expecting a loss. So that's showing some early traction under a new CEO who just took the helm 6 months ago. And we end on Qualcomm, the chip maker, up nearly 14% in the pre-market on this report that it is teaming up with OpenAI to make smartphones. This is something we know that OpenAI has been interested in ever since it acquired Apple legend Jony Ive's startup last year. And while this is just a report and still years out, investors clearly excited about the prospect of OpenAI smartphones. John?
The parabolic move in chips continues this morning. Yahara, thank you. On our radar this morning, Iran offering a new proposal for reopening the Strait of Hormuz. Axios reporting the deal hinges on the U.S. lifting its naval blockade and postponing nuclear talks. Elsewhere, President Donald Trump praising the Secret Service following the shooting at the Correspondents' Dinner. The president addressing the delay of his evacuation.
What happened is it was a little bit me. I wanted to see what was happening, and I wasn't making it that easy for him. I wanted to see what was going on. And by that time, we started to realize maybe it was a bad problem.
The suspect in the shooting is set to be arraigned later on today. And finally, a high-stakes earnings week on deck for the Magnificent Seven on Wednesday. Results from Microsoft, Amazon, Meta and Alphabet, with investors seeking updates on AI spending. Apple rounds out results Thursday after the close.
I'm incredibly interested in Apple in particular, given the fact that they now have new leadership and potentially need to show some bold moves to really take them into the next cycle. More importantly, I question how high the bar is heading into this earnings cycle, given the fact that these have been the haven names. Do we see some sort of embrace of any kind of optimism in a new way, given the fact that people seem to come around to the idea that this is probably real and it's probably the best bet that you have right now, given all the uncertainty everywhere else?
I feel like these earnings need to confirm or justify the rally that we've seen. And if they don't, how much do the concerns then seep back into the market about what is actually going on when it comes to the conflict? Because the facts on the ground when it comes to the straight up moves have not changed.
Well, to Lisa's point, to some extent, they've been amplifying the move in chip stocks. You call them the haven names. I think that's really important. Can't buy bonds right now if you're worried about inflation. What can you lean on? What do you have a high degree of confidence in? And a lot of people seem to be turning to the tech story once again.
I love the idea of the market as a human who doesn't have a lot of attention, and the attention span can only really focus on one or two things at a time. And it feels like right now international noise is becoming noise because ultimately it's just fuzz. You can't really analyze it or get an edge. So people are going and over-analyzing what they can get an edge on, and tech very much is rife with pockets you can analyze, and people are going wild.
The run continues. It might become day 19. Chips extending a record run with 18 consecutive days of gains. Jonathan Krinsky of BTIG writing, well, we've been wrong on calling an end to the semi-run. We think the window for a meaningful downside reversal is very close. Jonathan joins us now for more. Jonathan, welcome to the program. Let's just start with a big, important question, just to reflect on things. How reminiscent is this of some of the price action we saw into the early 2000s top?
Well, it's in some ways it's the closest we've probably seen since then. On the other hand, there's many metrics you could look at that say we're well away from the extremes we saw at that point. So, you know, it depends what you're looking for, but certainly it's the closest we've probably seen since then.
Well, let's compare it to, say, where we are relative to the 200-day moving average, Jonathan. How big is the gap now? And when was the last time it was this wide?
So we closed Friday about 48% above the 200-day moving average on the Philadelphia Semiconductor Index. That is the widest since 2000. But just for perspective, we got to about 100% above the 200-day at the peak in 2000. But on the other hand, there's some other things to look at, such as the rate of change over the last 18 days. And when you look at that 18-day rate of change, it's the biggest into a 52-week high on record. And I think that the telling part is a lot of times when you see these big surges, see these big 18-day surges, they come in bear markets. They come after meaningful drawdowns. And, you know, to put it in perspective, the second biggest move was in June of 2000 off of, you know, after you already had about a 60% correction in the semiconductor index. This is coming off just a mild 15% correction that it didn't even break the 200-day. So it is quite literally the definition of a parabola. And we've been saying for the last few days that parabolas end only in one way, and that's equal and opposite fashion to the direction they came from.
So I'm wondering about the other technical factors behind that. You said that normally this only happens after a bear market. Some people might argue that there was essentially a bear market, not necessarily in actual price level, but the fact that people weren't investing in this sector, even with some of the promises of spending by the big tech names. How much are you seeing people now fully invested or over-investing on a technical flows backdrop?
You know, look, I don't think you could say that people weren't investing in semis. I think you saw this rotation within semis. I think that, you know, the kind of the two leaders last year, this time were kind of NVIDIA and Avago. Those peaked out in the summer, but then as that was happening, you had this big rotation into the memory names, the DRAM names, so names like SanDisk and Micron, and those kind of carried the baton for a while. And then now we're kind of seeing everything rally. And that's also another sign when you see names like Qualcomm this morning that's been kind of a dog in the semis, some of the analog names that really haven't done anything for the last year or two, and even those are getting a bid. That's usually the sign that the sector in question is kind of on its later innings. And again, this type of move into a new high is what is the literal definition of a parabola. We saw it in gold in January, February. We saw it in a single name like Avis Budget last week. So we've seen this story before. Again, I don't think this move ends in a shallow sideways consolidation. It could go a bit higher. We're seeing that this morning, but ultimately you get a pretty sizable retracement when following these type of moves.
Jonathan, do you feel like this sector is isolated in, you can call it parabolic moves, you could say bubble-licious types of behavior, going wild, I mean, whatever you want to characterize it as. Do you see them as isolated, or do you see other pockets of the market that seem to be trading in tandem and have similar characteristics?
Yeah, so one of the things we looked at is the high beta momentum long index put out by Goldman. And that basket really contains a broad based basket of the AI names, whether it's electrical components, the optical names, infrastructure. We actually put out a chart of Caterpillar overlaid with the semiconductor index, and it's well over a 90% correlation over the last couple of years. It's essentially the same chart. So there are a lot of names in this AI theme that are exhibiting similar behavior. And again, it doesn't mean that the final top in the AI trend is here, but certainly this sort of price appreciation is vulnerable to a near-term correction, again, in equal and opposite fashion. So, the fact that we've seen a 40% move in the last couple weeks in some of these names, it's likely to give back a large portion of that.
Jonathan, you're basically saying that it's anything that touches AI.
I don't know about anything, but certainly a lot of the most popular and well discussed and known themes among AI are certainly having a big rally. But yeah, I wouldn't say anything, but there's a lot of touch points here that are certainly having this trend.
Jonathan, that line you keep repeating, and it's in your research as well, equal and opposite. Equal and opposite. Why does it have to be that large?
I mean, again, just look through our history. Gold we saw in January, and silver we saw in Avis Budget, where the stock went from 150 to 850 and then back to 200 in 3 days, right? So that's just the way that markets work when you have this kind of I would call it an unnatural advance the last couple of weeks, right? I mean, I don't think we've ever seen any asset or anywhere go the entire month without a down day, and we're 3 days away from that with semis. We saw something similar in Meta stock last February, early February, where it was up 20 straight days. And that's just the way when something goes that amount of time without a pullback, that's unnatural, and it only ends by kind of a reversal of that. That's just what we see throughout history. So again, it doesn't mean we're going into a bear market for semis, but I would expect a pretty good retracement once this kind of blow off completes itself.
Jonathan, appreciate your time and your perspective. Thank you. Jonathan Krinsky there of BTIG. An interesting note over the weekend.
I just wonder if Jim Zelter were here. Take a walk, touch grass.
I'm not sure if Jim's talking about a parabolic move in chip stocks when he makes those comments.
But there are a lot of people who feel like there is something substantial that has changed, and we haven't seen earnings like what we've seen so far. We could potentially get spending plans. That said, when something goes parabolic, I mean, all of our antennas go up, and we're all used to looking for black swan moments, and so maybe this could be something that gets reversed.
And not a single down day for that sector through April so far. First quarter felt like a lifetime. April's just gone like a flash. What's that about?
I can't really tell you, because
April's gone really, really quickly.
Maybe it's just sort of, if you're on a hike after like the 15th mile, you no longer think about life anymore. You just sort of keep going, and then it goes quickly. So maybe it's something like that.
It goes faster as you get older, right? So maybe the first quarter just aged us all.
We're still in April.
And now time's just flying by. Right?
I don't know.
Maybe
well, the fact that we've got time to talk about this means that, clearly it is flying. No, I take your point.
We've got things to cover, important things, I'm told. Let's give you an update on stories worldwide with your Bloomberg Brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. The man accused of storming the White House Correspondents' Dinner spent years acquiring his weapons arsenal. Cole Thomas Allen sent a lengthy manifesto to family members that was seen by Bloomberg, where he appeared to blast President Donald Trump as a, quote, traitor who committed crimes. Iran is offering the US a new proposal for potentially reopening the Strait of Hormuz and ending the war. Axios is reporting the offer postpones nuclear negotiations to a later stage. President Trump is expected to hold a meeting with top security and foreign policy officials later today. Elon Musk says he's nearing his goal of turning X into an everything app. He plans to launch a new financial services tool called X Money this month. The banking and payments platform would offer 3% cash back on eligible purchases, a 6% interest rate on cash savings, and free peer-to-peer transfers. That's your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thank you for the update. Up next on the programme, cleared for confirmation.
I am prepared to move on with the confirmation of Mr. Warsh. I think he's going to be a great Fed chair. This will allow Mr. Warsh to move on with his confirmation on time.
Colin Martin and Charles Schwab joins us next.
Is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop. I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets. Take a look at how we're faring when it comes to Asian markets.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Futures unchanged this morning on the S&P 500. On the Nasdaq, we had some weight to it, up 0.2%. Qualcomm, what are you doing? Up by double digits in the pre-market on a story. I stress a story. Connected them to OpenAI, and the gains continue.
Yeah, and it's specifically with a new kind of phone device. So this is where Qualcomm really surges. And the whole idea of people matter. Johnny Ives, the person who really designed the iPhone, coming in and working on this with OpenAI and Qualcomm, leading to a 13% gain after the gains we've already seen, which is just giving you a sense of the moonshot.
It's going to be day 19 potentially for the semi-index here stateside. In the commodity market, Brent and WTI look like this. Brent crude around 106, up by about 1% this morning. WTI higher as well at 95. Going into the Fed's next meeting this Wednesday, a lot to look forward to. Under surveillance this morning, cleared for confirmation.
I am prepared to move on with the confirmation of Mr. Warsh. I think he's going to be a great Fed chair. So this will allow Mr. Warsh to move on with his confirmation on time. And then Mr. Powell will have to make his own decisions at some point in the future about when and if he leaves the board before the end of his 2028 term expiration.
So here's the latest this morning, the confirmation of Kevin Warsh clearing a massive hurdle ahead of Fed Chair Jay Powell's potential final rate decision leading the central bank. Colin Martin of Charles Schwab writing, this doesn't change our monetary outlook for the rest of the year. We expect 0 or 1 rate cut by the end of the year. Colin joins us now for more. Colin, good morning.
Good morning.
Plenty of drama. Are you saying it's not that relevant for the look ahead, for the look out, for the outlook?
Not in the short run, no. I mean, it's a committee of 12 voting members, 19 full-time members, and clearly the shift has been to a wait-and-see mode as opposed to a we need to cut. There were only a few officials who were in the cut mode. Myron, who is giving his seat up to Warsh when he gets confirmed, and Waller has shifted a little bit. So our math doesn't change. There's plenty of officials who are worried about, the stickiness of inflation, the impact of higher oil prices. So I think it'll be a pretty high bar for Warsh when he comes in to build consensus around the idea of rate cuts anytime soon. So with that outlook, an extended pause, maybe they cut by the end of the year, but for the next several meetings, probably just wait and see.
This from Andrew Honhorst of Citi just moments ago. It makes guidance from Powell at this week's meeting less market relevant. Goes on to say, if anything, we see modest hawkish risk on Wednesday. What does hawkish risk look like this Wednesday?
I'd say the risk for an extended hold, we saw in the last meeting that there was a discussion about the two-sided risks and maybe the need for hikes. I don't think most officials are there right now, but I agree that Powell's comments are going to be less focused on his view and more about what the committee's saying. I think he usually does a pretty good job of representing the committee, but his views are not going to be as relevant after this meeting. I do expect a lot of the questions from the various journalists in there might be more about him and his outlook, whether he stays on or not, than versus actual monetary policy. But he'll do his usual tap dance around it and be tight-lipped about what his plans are.
Yeah, it'll be more of an Oprah episode than really an FOMC meeting. I am curious from your perspective, though, how you would respond if there is somebody at the Federal Reserve who does not want to necessarily cut rates and you start to get fiscal stimulus to try to offset the potential hit to consumer spending as a result of what we're seeing in the oil market?
In that situation, we probably see higher yields. If we see more fiscal stimulus in an economy that's doing okay. The last 2 quarters, a little bit choppy, but I think overall the labor market's relatively stable. If we got fiscal stimulus that then could give a boost to spending, I think maybe you see yields move up a little bit from here.
I feel like this market is asleep, the bond market, and I don't mean in a bad way. I mean happily, like on vacation, touching grass and taking walks. It feels like, you could throw everything you want at this, whether it's issuance from governments, whether it's potentially a drama at the Fed, whether it's an oil price shock, whether it's massive, potential capex coming from big tech. Everyone's fine. It's just, basically flatlining. Can you understand why?
Well, I think overall the factors that we saw coming into the year are still very much in play. And to your point, we have been very much range bound right now. The 10-year has been between, say, 4.25% and 4.5% for a handful of weeks right now. Inflation is still sticky. Fiscal concerns haven't gone away, and we've seen a move up in global bond yields. I think the market's probably looking for some sort of catalyst right now. I don't know what that catalyst is, but the idea that maybe oil spikes even higher to pull yields up, or maybe we start to see cracks.
I'm sorry, I'm laughing. A catalyst, you got 15. Which one? Seriously, what could actually shake this market that does seem to be bulletproof?
Yeah, I think that's the million-dollar question. Right now, the market seems to be very calm. Even all markets, stock market, bond markets, about everything that's going on in the Middle East right now. I worry that the longer it goes on, the higher oil prices remain elevated, which means higher gas prices here, lots of input prices. That can weigh on consumer spending. It can weigh on business confidence. We've already seen it weigh on consumer confidence and business confidence. I worry that the length of this results in more downside risks. I agree that so far that has not come to fruition. Stocks keep going up. Credit spreads remain low. Treasury yields are in a tight range. I worry that there's more risks to the downside if this continues to go on.
When it comes to the Fed drama, can we just sit on this one thing that we do know is going to happen? The Fed Inspector General is going to be looking into the probe. With that hanging over the Fed's head, could Powell step aside?
That's another $1 million question, and we've been talking about that with our team at Schwab of how does a potential lawsuit for Powell play into his decision-making, but the short answer is I just don't know.
He said it would need to end with transparency and finality. I've got no idea what he ultimately does. By his own metric that he set for us at the last news conference, I'm not sure if the events of the last week met that bar for him to step aside and move away from the Fed board.
Yeah, does he give some sort of new litmus test for exactly what will be his characterizations for what could make him leave?
He can maybe massage it a bit and say, well, since the DOJ is dropping it and I trust the Fed Inspector General, I'm happy to move aside and go on retirement and golfing, et cetera. But I do think he has to offer some clarity at this meeting, given we are 2.5 weeks away from when Kevin Warsh will be the next Fed chair.
I hope he takes the off-ramp in the same way that others have taken the off-ramp, because don't we all want to move on from this mess and this drama around the Federal Reserve?
What I find amazing is the market already has. The market doesn't care. I mean, honestly, it seems like people are saying, okay, Kevin Warsh is going to be there at some point. Jay Powell will leave and go on vacation. Good luck to you. And in the meantime, we're looking at a Fed that's basically sidelined. It seems like the market doesn't care. And I think that is actually really important, even with inflation expectations going forward. Not budging, really, away from that 2.2%.
But will the market care if Jay Powell comes to the podium and says, I'm going to keep my governor's seat till 2028? That'll be a lot of drama.
I think that makes it more controversial than it needs to be,
Yes.
which is why I think, take the off-ramp, head to the exit. Let's move on. Let's focus on the data. Data's been okay. Data's been all right. It's been better than okay. Jobs data's been really good. ISM PMI's been fantastic. Park you, Mitch. If you didn't have you, Mitch, and you focus on everything else, data's been good.
If you're a Fed chair and you want to look back and said, mission accomplished, and things are looking good, probably the better time to say, okay, I think I'll go hit the golf course.
Right?
I think so.
Colin, thank you. Appreciate it. Keep you out of that. Colin Martin at Charles Schwab. Keep you safe. Less controversy. Move on. We all just want to move on. I'm pleased the DOJ has moved on. I hope the Federal Reserve can just move on with new leadership that is going to be confirmed by the Senate and gets overwhelming approval by most establishment figures in the world of economics.
Yeah, I just wonder what will actually shake this market in any capacity whatsoever. I mean, what scenario would actually give this market pause that either there's going to be a real loss of Fed independence in some capacity, whatever that means, people say that it already has happened on the margins, whatever, versus also wondering when inflation really starts to get unmoored. How high is the bar to hike rates again? And that, I think, is going to be an interesting question.
That's the most important question. What does Kevin Warsh stand for? What's his reaction function? Does he make an argument to reduce interest rates, or is he open to tighter policy in the future? They're the kind of things we need to focus on in the months to come. Coming up, we'll catch up with Kristen Bidley of Citi Wealth. We'll speak to Olivia Wassenaar of Apollo, Greg Decker of EY, and Dan Niles of Niles Investment Management.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment, but I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Vernon in Florence, Italy, and this is Bloomberg.
You're seeing kind of everyone, I think, look to, okay, what else can benefit?
If we didn't have this boom in tech, we would be looking at a much worse situation.
The geopolitical is just not factored into anything right now.
To maintain the optimism, we need to continue to see earnings coming through.
The stock market's been remarkably strong, and I think it continues to do very well.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now, and your price action of scores look like this. 4 weeks of gains on the S&P, looking to add to those gains this morning, up by another 0.1% on the Nasdaq, just about unchanged on the S&P 500. Later this week, a week full of central bank decisions, punctuated by the Federal Reserve on Wednesday. And through the week, after the closing bell on Wednesday, tech earnings pick up in a big way.
Yeah, it's the central bank of the world, which is big tech. You've got the G7, all G7 nations reporting when it comes to the central bank meetings. But then $28.8 trillion of S&P 500 market cap reporting this week. This really is where all eyes are. Again, how high is the bar for big tech, given the fact that they've been the haven place and the place everyone's been hiding out amid a lot of volatility, at least in headlines?
The bar seems very high, almost to justify the rally we've seen. Jim Reed of Deutsche Bank over the weekend was talking about the talk of an AI bubble from last year has receded for now. The powerful growth story continues to propel the sector forward while significantly offsetting macro and market concerns around the war. What if they don't reach that bar? Does the market then go back to the concerns of macroeconomics and what is happening in the conflict?
Qualcomm in the pre-market, just adding to that rally for the chip sector. 18 days, a record could become day 19. Qualcomm in the pre-market is up by 12%.
And this comes in the heels of discussions or reports of discussions with OpenAI on a smartphone. This is interesting on a number of levels. Qualcomm specializes in some of the smartphone components. They would be working with someone who designed the iPhone, Johnny Ives, formerly of Apple. And then a real question here about the monetization of AI, the commercialization of some of these products. This gives an opening to the idea of how products can get into our worlds that actually have some of these details. And that, I think, is what people are getting excited about.
It's been such a crazy run for this sector. It's just insane. The gains we've seen, we haven't had a down day for this month so far, which is crazy. And then you hear from Jonathan Krinsky of BTIG, just focused on the technicals, that this needs to end in the equal and opposite direction. That's what he's forecasting here. A major move in the other direction.
Yeah, and ultimately, I mean, I did get some messages while he was talking. Someone called him Cranky Krinsky. I mean, there is a sense that people felt like, fairness, like just because he was coming out with a negative projection, but there's this idea that there could potentially be...
I don't think you can dress that one up, Bram. It's pretty brutal.
Okay, but I don't think so. I think it's important to show the technicals. Let's move on.
You want me to move on? I'll set up the next hour? I'll do that. All right. Coming up on the program, lost it. We'll catch up with Kristen Bidley of Citi, heading into a busy week on Wall Street. Greg Decker of EY expecting the Fed to hold steady on interest rates. Dan Nars of Nars Investment Management previewing major mega-cap tech earnings a little bit later. Still lost it, by the way. We begin this hour with stocks stalling. Still lost it at all-time highs and crude rising. Kristen Bidley of Citi Wealth writing the following: use volatility as an opportunity to lean into structural themes tied to energy independence and sovereignty, supply chains for the next generation of AI implementation and fiscal spending. Kristen joins us now for more. Kristen, good morning.
Good morning.
Not tying your outlook to this cycle. What's the reason for that?
Well, I think, okay, so if we look at where the market's trading right now, there are a lot of comments around at all-time highs, can this sustain? The reality of it is that being close to all-time highs is actually normal, that the market is trading generally 50% of the time within 5% of an all-time high. So we have to look through to the actual earnings and fundamentals and say, can that support that? Which is why I think this is a monster week. We need to say, okay, if earnings continue to grow, we've had 8 consecutive quarters of double-digit earnings growth in the US market. If that sustains, then certainly this investment is going to sustain, and then we're going to see the market climb higher.
We hear these kind of words a lot. Anchor yourself to structural themes, secular tailwinds. I do wonder how cyclical some of these secular stories are, which might not make sense, but let me pick a single name.
Let's do it.
Say Meta. Meta's a great example of that. That's quite a cyclical company, dependent on a lot of ad spending, and I wonder how well it stands up later this week.
Yeah, so if you broaden it out to the, let's call it Mag 7, Great 8, Elite 8, I think we just have to go back to this earnings story and then say, okay, these hyperscalers and where they're investing, do they have the money to continue to do that? So you have one part of the equation that's that. Then you lean into the fact, where's this money going? I think that was something we were talking about at the beginning of the year that we seem to ignore entirely. It wasn't about the war in Iran. It was all about, where is this money? Is it too much? What is the ROI? People are holding companies accountable for that ROI, but we have to remember that's flowing through into the economy, whether it's infrastructure, whether it's energy. So a lot of these kind of secular growth trends, we want to follow the flows.
Russ Kostrich of BlackRock earlier was saying that the market seems to have moved on from punishing some of the big tech names for announcing some of the big spending plans. Do you think that that's true, that we're going to see that this earnings cycle as well?
I think you're either on one side or the other side of this trade. On one side, you're saying, okay, we're becoming impatient and we want to see the ROI. On the other side of the equation, it's actually, are we in early innings? And I think the truth of it is, you have these hyperscaler companies who have strong balance sheets, yet they've started to use debt to be able to finance a lot of this. However, they are continuing to deliver on earnings, funding all of this investment, and then I'm in the camp of, this is really early innings when we look at the productivity gains and what this could mean, not just this quarter or this week, but really looking out to 2030 and beyond.
Do you see any scope for some ramifications from the war in the Middle East, given the fact that there's a question about helium, about chip transportation, around security issues? I mean, how much do you think that could bleed into some of these earnings reports that we get?
So I think this is something when I was talking about what the market was talking about in Q1, then the war in Iran, the market seems very uni-focused, that you can only have one narrative at once. And so right now, we're not discounting any of that. That I think what the market is looking at is, what is the probability of a re-escalation? And the market's completely ignoring that this is something that could drag on for an undetermined amount of time. So what I would say to anyone who is worried about that, you have to make sure that you're diversified in your portfolios, and you have to make sure that you're taking advantage of hedging strategies, because we could see some volatility if we don't have a resolution to this conflict.
What do you like in terms of diversifiers?
So actually very traditional diversifiers. So I'm going to sound very boring in this response. But when we look at fixed income, staying on the short end of the curve, intermediate duration, high in quality, the duration of our fixed income portfolios is averaging around 5.5 right now. But I also think staying kind of on the short end of the curve and cash equivalents, you're getting a decent yield there right now. So I think that's an important part of the portfolio. I think gold as a ballast to portfolios, that's something we've been talking about for quite some time. It's not a huge position.
It didn't really work in the beginning of the conflict.
It didn't work at the beginning of the conflict, but it also ran up so much. And it was such a substantial run with a lot of retail participation. So some of that was deleveraging, shaking out some of the broader bid and chasing that trade. But as a solid core position, I think it absolutely makes sense.
Why do you think it will start to work again? What are the forces that will generate returns?
So I think there's a couple of things. One, continued kind of central bank buying. We've seen that. Diversification away from the dollar. We still see a little bit of that activity as well. And again, it's not one of those things where we're saying it's a bullish play on gold. It's a portfolio diversifier.
It's funny how many conversations we've had 2 hours and 10 minutes into the program and hardly talked about central banks. We've talked about the future of the Fed with regards to Chairman Powell versus Kevin Walsh, but not really talked about it as a relevant factor in the outlook for the equity market, is it?
I think rates are certainly a relevant factor for the outlook of the equity market, but I think the equity market is also saying, okay, we're going to get used to what could be a higher than pre-pandemic rate environment, a higher than pre-pandemic inflation environment, and we're not going back to those levels, so we have to start valuing companies in line with that and really kind of pricing out rate cuts for this year. I think there's like another bull case, though, for the U.S. equity market that we're not talking about, which is a supply-demand component. So we can talk about fundamentals, we can talk about earnings growth, but when we look at the supply-demand factor, there is a lot less equity than there was before in terms of companies staying private longer, share buybacks. There's been a de-equitization of the market. And then you look at the demand side is also very, very strong in terms of all of the new participants that have come in. So you have another factor of people really eager to get into this market and buy.
Given all of that retrenchment, does it make sense that people are talking about tight central bank policy at the same time that you have a re-equitization of the market with all the IPOs planned for later this year?
Great question. I think time will tell. I think the re-equitization of all of the IPOs, we need to actually see them come to market. We have seen that pickup in activity overall. That will be quite healthy, and it's actually another kind of catalyst for market activity and action that we saw on the back of bank earnings. A lot of activity, not just from the trading side, but also the deal-making side, which is net positive.
Kristen, good to see you.
Good to see you too.
Citywell, thank you for being here. We could see some major IPOs later this year. SpaceX, OpenAI, Anthropic.
Yeah, and it changes the dynamic that Kristen was talking about, where it had been a shrinking pool of equities with all the buybacks and people saying private for longer. Suddenly it's going to be a massive expansion with the biggest IPOs we've ever seen. Do people rise to the occasion and say it's a buying opportunity? Does it become a potential technical headwind? Most people seem to see it's the former, not the latter.
Savita over at Bank of America believing this might be a headwind for the market later this year. We'll see. Let's get you an update on stories worldwide this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. A 31-year-old man carrying multiple guns and knives charged a Secret Service checkpoint at the White House Correspondents' Dinner Saturday night. One officer who was wearing a bulletproof vest was shot and taken to a hospital. The acting attorney general says the suspect was targeting members of the Trump administration. Senator Tom Tillis is ready to advance Kevin Warsh's nomination as the next Federal Reserve Chair. Tillis says the Justice Department's decision to end a criminal investigation into current Chair Jerome Powell removes a threat to the central bank's independence. United Airlines CEO Scott Kirby says the company's pursuit of merger talks with American Airlines is over. In a statement, Kirby said he approached American about exploring a combination, but they declined to engage. The CEO said he saw combining as a chance to create the best airline in the world for customers. That is your Bloomberg Brief. John.
Vonnie, thank you. Appreciate it. More from Vonnie in 30 minutes' time. Up next on the programme, the Morning Calls. Plus, we'll catch up with Olivia Wassenaar of Apollo on opportunities in reliable energy. From New York City this morning, good morning.
astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
We are 3 to 4 weeks before we hit the peak demand season, and this is what likely has been keeping a cap on prices, just a lack of demand, both from demand destruction because of higher prices, but also the normal seasonal demand destruction that we see in February, March, and early April. But that's about to change. Higher for longer, certainly through the rest of this summer into the third quarter.
That was Stephen Schork of the Schork Group. You see higher for longer in the futures curve throughout this morning. You've seen it building now for a while. So take the front month of the futures curve. We'll take WTI, we'll take Brent. Check it out this morning. Brent around 106, WTI at 95. Brent up every single day last week and up again this morning. But it's further out where things are getting more and more interesting. Not just later in the summer, but towards the back end of this year. You've now got Goldman this morning out with a report saying they now anticipate the fourth quarter will average $90.
Yeah, and that's $30 above where they thought before the war began at $60. That was the expectation. This, to me, is the more interesting aspect. And this is the boiling the frog aspect of this conflict. The longer it goes on, the more people are saying there are going to be structural deficiencies that are going to be hard to fill over the longer term and do mean that oil prices are not going to go back to where they were potentially anywhere in the near term.
Well, Goldman is talking about extreme inventory drawdowns if the Strait of Hormuz continues where we are now, this prolonged shutdown. This is why so many people I talk to feel like the market is broken, because what you see on your screen is not matching up to really how dire it is when it comes to the physicality.
It's not upending this equity market run, that's for sure. 4 weeks of gains on the S&P 500 this morning, just about unchanged. On the Nasdaq, up a tenth of 1%. Semis, 18-day record daily winning streak, could become 19. Thank you, Qualcomm. Qualcomm up by double digits in the pre-market on a story of a potential tie-up with OpenAI, up 11% this morning.
Yeah, and a discussion about creating some sort of smartphone imbued with AI. I want to know more details about this. This is actually really interesting on two fronts. Number one, how much this fuels another round of the semiconductor that is tied more to the smartphone product, which is Qualcomm. And two, what does this do for Apple if it is true, given the fact that the person behind this is Johnny Ives, the person who designed the iPhone, and the fact that Apple has a new CEO who is going to have to take that company into the future at a time when a lot of people have said they've been somewhat behind on the AI trend. So to me, this actually is a particularly interesting report that I want to get more details on.
Not enough attention on that Thursday report coming from Apple, so looking forward to their earnings later on this week. That's some of the price actions, some of the themes this morning. Let's get you some morning calls. First up, Mizuho downgrading Adobe to neutral, seeing intensifying competition. That stock is down by 1.7%. Your second call from Piper Sandler raising its price target on Blackstone, noting management's positivity on IPO activity for the year. Stock just about unchanged so far today. And finally, BNP Paribas downgrading GE Vernova to neutral. That stock's had a massive run, predicting more difficulty sustaining growth momentum. That name is down this morning by a little more than 1%. Let's talk about the ongoing closure of the Strait of Hormuz, sending fuel prices higher and highlighting the need for reliable energy. Olivia Wassenaar, global head of the Apollo Infrastructure Group, writing, we see rising need for investment across midstream, LNG and power infrastructure, areas where private capital is increasingly playing an important role. Olivia joins us now for more. Olivia, good morning. Good to see you.
Good morning. Thanks for having me back.
Is it fair to say, and I think it's important to touch base with you on this issue, that this shock in the Middle East is not upending investment, it's accelerating it?
It is. I mean, I think we're all looking at a few things. We're looking at redundancy, right? We're looking at the current infrastructure in the Middle East and maybe where there are gaps, right? You're looking at things around existing pipelines. How do we max out existing pipelines? How do we think about where there's potential for new pipelines? Can you restart old pipelines? People are beginning to talk about things like rail again. So I do think in the Middle East, there's this real focus on redundancy. In the rest of the world, we're looking at where can we compensate. We announced a deal last week for a large Canadian gas infrastructure platform. We believe Canada is a really attractive market right now, especially if you look at what's going on with Canada LNG and access to Europe, access to Asia, really sort of a big part of the broader sort of value chain there. So we are very actively investing in other parts of the energy infrastructure globally.
Well, let's go through the global backdrop and the deals right now. You mentioned Canada. We had EDF over in the UK, RWE in Germany, offshore wind, Ørsted, I believe, as well. I don't want you to pick a favourite baby, but right now, is there a theme that really gets your interest out of all of those right now, of those deals that you think are the ones to watch?
We've really been investing heavily in Europe. We do see this theme around making sure we're giving, again, real redundancy and growth in European power infrastructure. So we started RWE around the grid. We looked at EDF around nuclear. And now we're really focused on offshore wind with the Ørsted deal. I mean, this is a tremendous project. If you look at the number of homes it's going to power across the UK, it's really tremendous. And we're also thinking a little bit about, how do you give really reliable, long-term power to supply to areas that have previously been really dependent on oil and gas from places like Russia and the Middle East.
You have a great lens because in having these discussions and these investments, you have to work with policymakers pretty closely to understand exactly what their appetite is and getting clearance, et cetera, and permitting. Have you noticed a change when it comes to Europe in particular as they try to accelerate some of their reliability given the supply shocks that have come to them from all angles over the past couple of years?
Absolutely. I mean, we saw sort of the first start of this in 2022 around the Ukraine crisis, right? And that was the first time you saw sort of a pan-European focus on, okay, how do we make sure we're really more prepared longer term? Now with what's going on in the Middle East, you had a big announcement out of Europe last week saying we've got to focus on two things. One, short term around how do we really help the consumers? And then long term around how do we look at better permitting, faster permitting? How do we speed up electrification? How do we speed up things like batteries, which are going to help smooth out intermittency, right? So there's really such a big focus within Europe on how do we make sure that we're taking this reliance away from other areas of the world.
The fact that everybody wants to build at the same time makes things a bit complicated. How much are you experiencing shortages of things like turbines and engines and the actual pipes and things of that nature, given the fact that everyone is trying to do this at the same time at a time of potential supply chain constraints because of the Strait of Hormuz being blocked?
Absolutely. I mean, it's a real issue, and it's something that we're all grappling with. If in the U.S., for example, if you do not have your sort of components around a new gas plant supplied, you're looking at 5 years, right? That's a long period of time to get to really get the new components in place. So this supply chain is just compounding. And when we look at what we're going to see around the rebuild in the Middle East, whenever this conflict is over, that is only going to add to the need for some of these components.
Every single Middle East country is coming out now basically saying, we want what the Saudis have. We want an east-west pipeline. We want to be able to bypass the Strait of Hormuz. Can you get the appetite for that kind of investment when Iran and the IRG still remain a threat?
I do think you're going to need to see some stability, but you saw it out of the EU last week saying, hey, how can we help with investment in the region to really, again, help this redundancy piece? When you look at pipelines, that's helpful for crude, but when you look at things like refined products, like jet fuel, for example, and LNG, these are things that are not going through pipelines. So we need to think of other ways to be able to transport these and really ensure that security.
To get that confidence, though, it's not even just for oil and gas. There's all this money put to data centers, and people now are talking about them having to go underground. Do you still see the optimism for people wanting to be invested heavily in this region?
I do. And the offer on the data center side was very clear for a while, right? I mean, if you look at it, there was cheap power in the Middle East. There was abundance of land. There was lots of local capital. And for many years, this sort of real perceived political stability. You've sort of taken the last point of that off. I do think you still see the other components there, but there is going to be a little bit of confidence coming back to the region before you see people really wanting to reinvest in this AI phenomenon.
You don't have to worry too much about the political cycle in certain parts of the Middle East, and that's a different conversation. With Europe, maybe you do, and with the US as well. How relevant is the political cycle to some of these decisions?
You see it a lot around, for example, renewable energy, right? And we've certainly seen, I mean, I've been investing in renewable energy for 25 years. You've seen real sort of booms and busts over time. What I will say is it begins to be tied more into security than it ever has before. I mean, again, as we look at Europe, right? This sort of dependency, whether it's on Russia or on the Middle East, and all of a sudden looking and saying, what can we do internally? What resources do we have? We have sun, we have wind, right? These are things that we continue to build up internally. We can look at electrification. So we're, again, less reliant on these commodities coming from other parts of the world.
Do you think there is a bigger focus now on abundance? I just wonder to what extent the conversation really has changed. Lisa mentioned that. It seems to me that everything's become very polarized, that for certain political groups, particularly in Europe, they believe everything that is fossil fuels or touches fossil fuels is bad, and everything that's renewable is fantastic under any situation, in any circumstance. And for whatever reason, the other side sees it completely differently. Do you think we have got some kind of moment here where we can just accept we need something from both worlds? We need abundance.
I think that's absolutely spot on. Right now, you're looking at a crisis, right? And everyone is trying to figure out how do we fix this, right? If you look at Europe, Europe has spent about $25 billion over the last few months since the war started to get the same amount of energy supply they had before. So they're looking at it saying, gosh, you know, rather than making this highly politicized, let's figure out, again, how we can have homegrown energy supplies so that we're not dealing with these massive price shocks going forward.
And energy bills have been moving in the wrong direction, particularly in places like the UK.
Yeah, and that's the reason why you see, for example, some pension funds that previously couldn't invest in the fossil fuel industry suddenly allowed to invest in the fossil fuel industry because they're realizing, wait a second, you know, we kind of can't deal with all of these things at the same time, and we need the returns.
Made some stupid investment decisions, or rather stupid policy decisions in Europe for quite a while.
Going forward, how much does this change exactly what this looks like, and how quickly can you enact some of these things? I think that the supply chain constraints are actually a really, really thing. So I was talking to someone who was building a power plant, and they said, we can't get the engines. We can't get the things.
GE Vernova, we mentioned
GE Vernova. Yeah. Right. I mean, that's the main constraint for GE Vernova, is that they can't get the materials quickly enough to build all of the engines and the turbines that people want. When you're dealing with that kind of issue, how quickly can you become reliant on yourself? And that, I think, is going to become increasingly political.
And there's a rush for the whole world to get their hands on the same stuff. When it comes to Europe, though, the own goals. Remember, they restarted coal and wind down nuclear when Russia invaded Ukraine. Nuclear at one point was supplying 20%, 25% actually more of Germany's electricity.
Crazy. Olivia, good to see you. Thanks for being
nice
here.
To you as well.
Thank you so much. Thanks for the update. Olivia Wassenaar there of Apollo. Up next, Greg Deco of EY on the path ahead for the Federal Reserve. Plus, Yahira has your morning movers. Another look at Qualcomm this morning. They're stopped in the pre-market up by close to 11%.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Equity futures right now in the S&P pulling back from all-time highs. We're negative by about 0.1%. Similar move on the Nasdaq 100 this morning. Within the Nasdaq, some major moves, particularly from the likes of Qualcomm. Let's get you an update on some single names, including that one. With your morning movers, Yahira has more. Hey, Yahira.
Hi, John. We start with Qualcomm. As you said, shares are soaring nearly 11% in the pre-market on this report that it is working with OpenAI on a smartphone, something that we know OpenAI has been interested in ever since it acquired Apple legend Jony Ive's startup last year. But John Kriske to you all earlier, flagging a warning sign in semis tied to this name, saying that when even laggards like Qualcomm start catching a bid, it can signal the rally is close to its final innings. But for now, it is going strong, and it is showing up in names like Micron and SanDisk, both up in the pre-market after a bullish call from analysts over at Melius Research. They initiated coverage for both with a buy rating, saying that there is no denying that memory is becoming a core part of the AI story, and they could see demand for years to come. And we end on Verizon, which just had earnings. Shares are up 3.3% in the pre-market. It was a beat and a raise over there. The largest U.S. wireless carrier posting a gain in phone subscribers, surprising the market, which was expecting a loss. Also, this showing that there is early traction under a new CEO that just took the helm 6 months ago. John?
Yahira, thank you. Thanks for this morning. Looking ahead to a big week ahead, including lots of tech earnings coming on Wednesday and Thursday. Also on Wednesday afternoon, a Fed rate decision and Chairman Powell news conference. Bloomberg's Mike McKee joins us now with a preview. Good morning, Mike.
Morning, John. Can you believe we're here? This week, Jay Powell's last news conference as Fed chair probably. It looks that way after the developments over the weekend. Tuesday, we start with the Fed meeting, and then on Wednesday, we get the decision at 2 p.m. and at 2:30, Powell's news conference. And because Kevin Warsh is likely to be approved by the Senate Banking Committee earlier that morning, it would mean that there are not going to be any questions about who's going to be chair pro tem. But it very well could be that the first question asked is, are you going to stay on as a governor? Because the Fed's not expected to do anything. Going to leave rates alone. There's no summary of economic projections, and there is no dot plot. The question then becomes, when does Warsh get actually confirmed by the Senate? They have to wait 24 hours under Senate rules, so it could be Thursday, but they've got an awful lot going on the Senate floor, including trying to get the DHS funding through, the reconciliation bill. And so it may be a week or two or longer before they get there, but he should be confirmed by the 15th. It's also the central bank week around the world. Celebrations in Canada and Japan, the Bank of England, the European Central Bank, 4 big central banks, including the Fed, 5 central banks, and none of them at this point expected to do anything because we're back to talking about what's Donald Trump going to do about Iran, and nobody knows. So for now, everybody is on hold. We do have A big backloaded week of economic data might help the Fed make a decision, but it all comes after the meeting. On Tuesday, we do get consumer confidence, but Wednesday, things that don't matter as much, trade, housing starts, durable goods. Thursday, though, income spending and the PCE inflation index expected to rise because of oil prices. The employment cost index, they want to know what's happening with wages in this situation. And first quarter GDP, fourth quarter GDP revised down to just a 0.7 gain. How much more do we get in the first quarter? And of course, jobless claims. And then we kick off May on Friday with ISM manufacturing. A lot of interest in whether AI is still propping that up. So a lot going on this week. I'm not sure at the end of the week how much different things will look, but it is going to be very interesting, especially to say goodbye to a guy who's been chair of the Fed for 8 years.
Well, let's talk about whether we're actually going to say goodbye to him. As Fed chair, yes, but on the board, a different question, Mike. Transparency and finality. The chairman's own words. Do you think we met the bar for that at the DOJ?
Yeah, I don't think so, because Janine Pirro appended her comments by saying she would feel free to refile criminal charges if there is anything in the IG report. And we know, since there was nothing in the first time she was looking at this, that she might just make something up. So for Powell, I suspect he will want to stay on until the Inspector General's report is out at least. That could come quickly because they've been working on it since last July. And maybe he wants to stay on through the election to see what happens with the control of the House and Senate and what legal jeopardy he might find himself under.
Mike McKee, thank you. Looking forward to the news conference and your questions that will be presented to the chairman Wednesday afternoon. Greg Dacko of EY writing this: the Fed will keep rates unchanged this week. That's the boring stuff. Even once Walsh is confirmed, is the fun stuff. Powell may remain on the board as governor to preserve a degree of institutional continuity. Greg joins us now for more. Greg, good morning.
Good morning, John.
What do you mean by that line, institutional continuity? Is it needed?
I think so. I think it's very much needed at a point where we are facing financial difficulties in terms of what's happening in the Middle East, where there are questions around the direction of economic travel, and where this type of transition in terms of Fed leadership is likely to carry a number of potential institutional changes. We know Fed Chair Powell has been very clear about the need and the desire to preserve that institutional credibility, and at a time when there's going to be likely increased political influence, even if not direct, indirect, in terms of the way the Fed is conducting policy, that's going to be critical. And I think that's going to be the key reason why Fed Chair Powell says that he will stay on as governor for the foreseeable future.
Do you think Wednesday's the appropriate time and forum to communicate that?
I think he will distance himself from communicating that at the press conference. We saw it last time around when he was very clear as to what he would do should there not be a nominated Fed chair to replace him. He would stay on pro tem. But the key question as to whether he stays on through the end of his governor term, which lasts until the end of January 2028, is likely to be an open question, which he'll likely communicate via a statement that will be made apart from the press conference.
You said that this is a particularly important part for the central bank, given potential disruptions. Every market analyst that comes on seems to think very much the other way, that central banks are almost the least relevant they've been in years, and that, frankly, they just need to remain on hold, and everything else will do the work for them. Why do you disagree?
That's the policy angle, and that's very right in terms of how policy is conducted. Policy is not going to change much. We heard it from Mike McKee in terms of the different policy statements that will come out from the different central banks around the world. We're going to see most central banks be on hold because we're facing a supply shock, and central banks don't like to deal with that, so the best way to deal with it is essentially not do anything in terms of policy. But when it comes to the institutional framework, when it comes to a Fed chair nominee that has said that inflation is a choice, I think that's a different type of question. It's a policy question. It's an institutional question, excuse me, as to how the Fed will conduct monetary policy in that environment. Now, we know there's an FOMC committee. We know it's not just one person deciding on policy. But I think when it comes to the potential for influence on the Fed's structure, on how the Fed is organized, on how the Fed sees any type of forecast, on whether inflation is a choice, those are all questions that are institutional, and I think Fed Chair Powell will want to preserve some institutionality in terms of how he guides policy.
What you're saying is really interesting, and is something that I haven't heard before, which is the reframing of the Federal Reserve and the reshaping of it that a lot of people say Kevin Warsh plans to do. He says himself he plans to do, shrinking the balance sheet and using Fed policy a little bit differently, that Fed Chair Jay Powell, when he leaves as that position, will want to stand as governor to have a say in exactly how the Federal Reserve gets reshaped. Is that correct?
That's absolutely correct. If you remember in 1948, very few of us do, but in 1948, Fed Chair Eccles stayed on the Fed board as a governor, and he stayed on for 3 years. Why? Because he wanted to ensure Fed independence. And during the war and after the war, the Fed was pressured to buy government bonds to finance the war. That him staying on the board for another 3 years led to the Fed Treasury Accord, which gave the Fed today's independent framework. I think Powell will want to do the same in terms of preserving Fed independence.
1948 was a very different time. We were coming out of the war. Was there more agreement around that than now? And a lot of people would view it as much more controversial.
Well, I think the Fed independence is very important in terms of what it does to Treasury yields. And we are in this environment where interest rates are remaining higher. I think one of the key characteristics of today's financial market is that despite the Fed having eased monetary policy for the past 2 years, we continue to see long-term rates higher than they were when the Fed started to ease. And it's not just a U.S. story. It's a Canada story. It's a European story where long-term rates are staying higher. I think we want to preserve the risk of this type of situation where there is a sentiment of political influence on the Fed that pressures up long-term rates, and anytime there is some kind of shock, like the Middle East shock, we see further rises in long-term rates.
But if Powell stays, doesn't he look political?
He doesn't look political in the sense that he's staying on as a governor, and while it's not been done...
But that's not president. He'd be breaking president of the Federal Reserve.
Yes, but he'd be staying on as he is allowed to do as a governor. So it's not necessarily political in the sense that he's doing something that has a political motivation. He's been very clear about his intentions to stay on the Fed and avoid any type of political influence on the Fed. So staying on is not necessarily a political move in that it prevents any type of political or perceived political influence.
Doesn't that get confusing for market participants if Jay Powell, governor, comes out and gives speeches while Kevin Warsh, now chairman, is supposed to be leading that communication effort?
Potentially. I mean, there is going to be communication issues, but we've heard from nominee Kevin Warsh that he wants to reduce the amount of communication. He wants to have more discretion on policymaking when it comes to decision at the Fed. So I think having another voice at the Fed that preserves that stability in terms of the institutional framework is not necessarily a bad thing for market participants. If you think about it, there is a risk that we have less communication, less transparency, less forward guidance, and more anticipation of what might happen in an environment where perhaps we're going to see AI-driven productivity growth leading to lower inflation, which is the Kevin Warsh's main argument in terms of easing monetary policy. So I think it preserves some stability.
The intentions are good, the consequences are unknown. That's kind of where I'm at right now. I understand the intentions behind it, but it could create a dependency issue. The thing that I don't quite understand with the chairman, and I hope someone would ask him in the news conference, the things that he's worried about aren't priced in this market at all. Lisa's talked about this. Inflation expectations have been really well anchored throughout all of this. So either Chairman Powell's really off base, or the market's priced very badly, because I don't think inflation expectations are anchored because they believe Chairman Powell's staying around forever. I think they're just anchored because they believe in the institutional resilience of the Federal Reserve. Is someone getting something wrong here?
Perhaps, but let's also take a look at the Middle East conflict and where oil is pricing in terms of the financial pricing and where the real barrels are being priced. I mean, that's another major disconnect in terms of how financial markets are anticipating the Middle East conflict will evolve. So I think we have to be a little bit careful with the pricing because there is always going to be some institutional credibility. I mean, remember, this is the FOMC. It's not just one person deciding on policy, deciding on the institutional framework. It's a consortium of individuals that come up with a consensus as to policy, as to the institutional framework. I think the fear right now, and this is a mathematical calculation in terms of how this will play out, is that we end up with a situation where we have more governors that are essentially Trump nominees and that do not hide away from this political influence in reshaping how the Fed is structured. So it's not necessarily an on-off type of bet. It's there are this many odds that we may see the situation where we have more Trump nominees that lean in a certain direction in terms of reshaping how the balance sheet process is conducted, how the institutional framework is conducted in terms of communication, in terms of potentially the 2% target. A number of things are on the table right now.
This was thoughtful. Greg, appreciate your time. Thank you. Greg Jacker there of EY. Equity futures slightly softer. We're down 0.1% on the S&P with an update on news worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. Iran's foreign minister is meeting with Russian President Vladimir Putin in St. Petersburg as talks with the US remain at an impasse. Iran has signaled it might accept an interim deal where it reopens the Strait of Hormuz in exchange for Washington ending its blockade of Iranian ports. Eli Lilly has agreed to a $2.3 billion cash deal to buy Ajax Therapeutics. Lilly is ramping up its efforts to build a portfolio of breakthrough cancer therapies. This follows a $7 billion deal Lilly reached last week for cancer research startup Kelonia Therapeutics. If you're dreading your next trip to JFK Airport, some exciting news may potentially lift your spirits. Aviation startup Joby is planning to fly electric air taxis between JFK and Midtown Manhattan. The plans are described as 100 times quieter than helicopters, and if all goes well, passenger flights could begin as soon as the second half of the year. That is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Appreciate the update. Up next, we'll set you up for a busy week ahead. Plus, we'll catch up with Dan Niles of Niles Investment Management with a preview of big tech earnings from New York City. You're watching Bloomberg TV.
We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast. Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up to the minute news whenever and wherever it happens. I'm Chevrian in Seoul, and this is Bloomberg.
This sort of price appreciation is vulnerable to a near-term correction. The fact that we've seen a 40% move in the last couple weeks in some of these names, it's likely to give back a large portion of that. It doesn't mean we're going into a bear market for semis, but I would expect a pretty good retracement once this kind of blow off completes itself.
That's one view. That view is Jonathan Krinsky's of BTIG on a record run in the chip sector and why he thinks it's going to correct in equal and opposite fashion. Equity futures this morning, negative by 0.1% on the S&P 500, just about unchanged on the Nasdaq. Heading into this week, and what a week it's stacking up to be. This is your week ahead in our trading diary, taking place a little bit later on this afternoon. President Donald Trump meeting with King Charles at the White House. Tomorrow, earnings from UPS and JetBlue. JetBlue gets a bit more interesting, given American Airlines has dropped out of the race to be acquired by United Airlines. United still might be interested. We'll talk about that through the week. Wednesday, a Fed rate decision, followed by a Chairman Powell news conference. We'll also get a Senate Banking Committee vote on Kevin Walsh at some point in the week, hopefully. Plus earnings from Amazon, Alphabet, Microsoft, and Meta. Thursday, another round of jobless claims, core PCE, and results from Apple.
Yeah, look, big tech, first and foremost, is going to be the main event for this week, given the fact that this entire rally, this record rally that we've seen has been predicated on results being really good and announcements. I do wonder whether we get some interesting political intrigue. And then I actually am interested in the data. I know, call me crazy, but I want to see if inflation is ticking up and if wages are ticking up as well. Torsten Slok of Apollo putting out a note this morning saying if you look under the hood, wages are starting to pick up. They're creeping higher. They're listening to you.
Yes, ask for a pay rise. Every single time, that's what you should do.
Yeah, wage price spiral. Personally, John's result.
Better than
the worst
the
they
opposite,
can say
right?
is no.
100%.
Come on, the worst they can say is no.
Exactly.
Guys.
Exactly. Wage price spirals. The only person who has a problem, the only people problems with wage.
Chat-based AIs. But what you saw at the end of November of last year was this product come out called ClaudeBot that then morphed into OpenClaw on January 30th, and that's the beginning of agentic AI, and that requires 10 to 100 times more tokens than what you had with these chat-based AIs. So if you need that many more tokens to perform that, you've got another big uplift in demand from that. And you saw an indication of that last week with Intel's results and how well it's done. And I've written about that starting back in March on how microprocessors was the next bottleneck because agentic AI required all this orchestration. If you, Jonathan, say, hey, go to the SEC website, pull this data, go to Bloomberg, pull this other data, go to Yahoo Finance, pull this other data, and then put it all in an Excel spreadsheet, that's a lot of different API calls, a lot of different things you want it to do. And so the bottlenecks keep switching, but it's also a ton more tokens versus just asking it a basic question. So I think that's why you've got another surge coming in the chips sector. And obviously there's going to be some pullback, right? You had 18 up days over which the semiconductor index peak to trough was up 49%, 47% on closing basis. If you look at the other streaks, there were 4 of them between 2014 and 2017. They ranged from 10 consecutive up days to 15. The gain was between 8 to 9%, not 47. So, will you get some pullback? Sure, 5 to 10%, easily see that. But I think the chip sector probably ends the year higher than where it is right now.
Dan, would you agree with Russ Kostrich of BlackRock, who came on earlier and said he thinks it's going to be a different kind of reaction in markets to any CapEx plans announced by some of the big tech names, that it frankly will be rewarded again rather than punished?
Well, he's going against what we just saw last week. I mean, if you look at Tesla, the stock was up in the aftermarket. Remember, Tesla beat the revenues, they beat the EPS. And then when on the call, they said, yeah, we're going to spend $25 billion in CapEx, not $20 billion. The stock then rolled over from being up to down. And I think it finished the week down somewhere around close to 5% or so in a solid week for the market overall. So that gives you kind of a hint of how the market's thinking about this, which is it cares about cash flow. And you just saw it with one of the Magnificent Seven. So that's, there's a whole slew of risks. So on the one hand, I think all these companies are going to beat the March quarter. The problem is the guidance, which is why I don't particularly want to have much involvement with any of the names, because would it surprise you to hear how close rates on big deals were a problem? Because don't forget, the market was at a 52-week low, I think, on March 30th. And so for some of these software companies, you could have an issue with that. You saw that with ServiceNow. Semiconductor prices skyrocketing, impacting margins going forward. Oil impacting shipping costs for companies that care about that, like with an Amazon, or ad budgets where you hear either Google or Meta saying something like, well, because of the uncertainty, these big consumer packaged good companies have pulled back a little bit, or the pull forward in demand because prices have gone up so much, that impacting the second half of the year. And you heard that from Intel with relation to their non-AI related businesses. So these are all things that, yes, are they all going to put up great numbers? Absolutely. Could you have a real problem with guidance that causes all these stocks on average to go down on the other side of it? By the way, these 5, they went down 1% on average after they reported results the next day, the prior quarter. And so that's something you need to think about. And after this massive run, I really am going to back away from most of these, with maybe the exception of, Google, which is my favorite.
Dan, just curious quickly here, how much do you see one particular name as more exposed to some of these potential risks, in particular, higher oil and shipping costs?
Yeah, I mean, I think it varies, right? With things like higher oil, obviously that matters for Amazon's logistics business more. Memory prices matters for a company like Apple a lot that ships those. Ads, obviously, it's Google and Meta. So I think for each one of these, and for close rates, you've got that affects software the most, which would impact potentially Microsoft. So for each of these names, it's a different risk profile. And they, the Magnificent Seven are up 20% on average since March 30th. The S&P is up 13%. As we talked about, the SOX is up 47%. And so I think for right now, I'm looking for some kind of minor correction. And the way I've phrased it is, this is a lot like 1997 or 98, where you had the macro scare off the Thai currency crisis. S&P went down 11%. Then you had the scare in 98 off the Russian bond default. S&P went down 19%. But it finished both of those years up 31 and 27. Once you got through that, I don't view Iran much differently from a longer-term basis.
Dan, interesting framing. Appreciate your time, sir. Dan Nels there of Nels Investment Management. A lot to unpack there. There are obvious secular tailwinds supporting this market right now, and Dan was talking about what's going to happen with agentic AI and how supportive that will be of some of the things that are supporting this rally in chip stocks. It's the cyclical components of some of these stories that I think we have to focus on going into the Wednesday reporting season for these guys. And that's the ad sales at Alphabet, the ad sales at Meta. Just how well has that held up in the face of this uncertainty worldwide?
Yeah, as Kristen Bitterly was saying earlier of Citi, essentially people can only focus on one thing at a time, and they're focused on the AI promise over the longer term. There will be some sort of blowback and repercussions from what we're seeing in the real world that we could see reflected and potentially penalized.
Exactly. Or higher oil prices may be starting to bite, supply chain risk, a lot of questions even for the tech names.
Coming up tomorrow, looking forward to catching up with John Stolfus of Oppenheimer, the General Motors CFO, Paul Jacobson, Seth Carpenter of Morgan Stanley, plus Lindsay Pieksa of Stifel from New York City this morning. Good morning. Thank you for starting your week with Bloomberg TV. This was Bloomberg Surveillance.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
A cidade estava sitiada.
Isso eu começo, eu não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home they are suffering, and someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
30 minutes until the start of the cash trade, looking for some direction. I'm Matt Miller. Danny Berger is off. Bloomberg open interest starts right now. This is what will likely give us direction this week. A make or break week for earnings. 5 of the Mag 7, together worth nearly $16 trillion, are going to put AI-fueled gains to the test. And the Fed tops off a packed week of central bank decisions as the Senate moves to vote on Kevin Warsh for chair. It could be Powell's last meeting. Plus, a new proposal. Iran has reportedly offered the U.S. a plan to reopen the Strait of Hormuz, with official talks still in limbo. In terms of what we're watching this morning, these companies are going to report earnings. Meta, likely to not do a whole lot of anything. Amazon, looking to put out a boost. Alphabet, actually, we could see earnings there drop double digits. And then Microsoft, looking to continue with its Azure growth. None of them are doing a lot in the pre-market, but $16 trillion in big tech earnings will come out this week. It'll give investors a read on whether the AI rally that we've seen, 25% plus for a lot of these companies since March 30th, is sustainable. Apple also reports this week. Shares in Apple fell as Qualcomm rose on analyst comments that OpenAI may use Qualcomm to help develop an AI smartphone. This could be that product we've been waiting for after Johnny Ive teamed up with OpenAI. Let's discuss the big week for earnings with Bloomberg equities reporter Alex Semenova. I'm pleased to say she's here with us at the desk. So, Alex, a ton coming out this week, and there's a lot of dispersion here, right? Because none of them have NVIDIA type, 80, 90, 100% earnings gains, but some of them are looking at maybe 20%, some of them maybe a drop of 10.
Yeah, put very simply, Matt, this week is the ultimate test of 1, whether the stock rally is justified, and 2, whether or not it is sustainable and can keep going from here. 181 companies in the S&P 500 are reporting results, bringing the tally to about 2/3 of the index. But as you mentioned, I would go as far as to argue it's really about those 5 companies, 5 of the so-called Magnificent 7 stocks. That is $12.6 trillion worth of companies reporting just on Wednesday alone. So obviously, these companies have led the 13% rally in the S&P 500 from the March 30 bottom, and investors will want to see confirmation from them. They will want to see good news from them. That whole group has really been leading this market higher, and option strategists at Stifel actually said that with volatility and correlations now down from the war, the market is in a fragile calm that is susceptible to spiking on any kind of macro shock, and any friction in those companies could be that very macro shock.
Spiking on a macro shock or on a Truth Social post, right?
Exactly.
Because we've seen this market really driven by the posts. A lot of people making a ton of money who seem to know the information before it comes out in Truth Social. What's the story with the Trump swings that we're seeing here?
Yeah, so we all know that we're at the helm of whatever the president posts on his social media platform, but we were actually able to quantify it. Fundstrat Research ran some nice data for us, and they found that the 5 biggest up and down days in the market since Trump took office last year have all been driven directly by him. That is highly unusual and unprecedented for any president. In fact, they found that no president has orchestrated this many up and down days in any 12 presidencies going back to 1981. So for context, that shows just how vulnerable the market is to what he says. Now, paradoxically, actually, when you look at volatility, the average of the VIX is about 19.3 since inception, and it's in line with Trump's second term. So very interesting to see how he's driving these big up and down days, but volatility as a whole actually hasn't been more pronounced.
All right, looking forward to more of that reporting. Alex Semenova writes about stocks for us on the BN side. Now, Senator Tom Tillis has dropped his opposition to Kevin Warsh's nomination to lead the Federal Reserve, clearing a key hurdle for the vote. Senator Tillis speaking on Meet the Press yesterday.
I am prepared, and with the assurances from the Department of Justice that the case is completely and fully settled, that the appeal would only be used to potentially abrogate or change the ruling for administrative purposes, not as a basis for reopening the investigation. I am prepared to move on with the confirmation of Mr. Warsh. I think he's going to be a great Fed chair.
Joining us now is Mike McKee, Bloomberg's international economics and policy correspondent. So he says he accepts the assurances of the Justice Department that this investigation is fully settled, or at least Jeanine Pirro's part in it. Isn't he worried about the threat that she made in her post?
Well, he doesn't seem to be worried about it, but the question is, what does Jay Powell think about it? And the Fed's not expected to do anything this week, so maybe the first question is just that to Jay Powell. It is a big week for the Fed, with the Fed meeting on Tuesday and Wednesday, a decision at 2 o'clock Wall Street time on Wednesday, and then at 2:30, the Powell news conference. Could be his last, because of course the Senate Banking Committee is going to move forward his nomination to the floor. Now the question is, when can it go to the floor? They have to wait 24 hours by Senate rules, but the Senate's got a lot going on right now, the reconciliation bill, things like that. So maybe a little longer before the actual confirmation vote, but it looks like he will be confirmed by the 15th of May, when Jay Powell is ready to end his term.
So we don't expect any decision, we don't expect any movement in terms of rates at this Fed meeting. Which way are they leaning, and what kind of dissents are we going to see?
I don't think, well, I was going to say I don't think you'll see any dissents, but Stephen Myron that's built into his job description, so he probably will. But at this point, nobody knows what's going on. It's a big central bank week. We have the Bank of Japan, the Bank of Canada, the Bank of England, and the European Central Bank, and none of them are expected to do anything this week because nobody knows what Donald Trump is going to do, as Alex was talking about, and what the price of oil is going to be going forward. So everybody's on hold until they get more information on that, which is why we probably spend more time talking about Powell's future than anything else. And by the way, there's also one other thing on Wednesday. It's the next Supreme Court decision day. We're all waiting for the Lisa Cook decision. If the Supreme Court has a sense of humor, they have the opportunity to do the funniest thing that day. The experts say that's probably not going to happen on Wednesday, but we got to keep our eyes open.
All right, Mike, thanks very much. Michael McKee will be keeping his eyes open for all of us. You're going to Washington?
Yes.
I imagine he is going to Washington for the Fed meeting. Axios now reporting that Iran has offered a new proposal to reopen the Strait of Hormuz and extend the ceasefire. The plan would delay nuclear talks until Washington lifts its blockade. Joining us now is Anne-Marie Hordern, Bloomberg's chief political correspondent, co-host of Bloomberg Surveillance. So basically, the Iranians want to reopen the Strait of Hormuz. That way they can keep making money.
Well, they want the blockade to end, the U.S. blockade.
Right, and then they would also open it from their side, because it's like double blockaded right now. But they would put the nuclear question off until later. But that's what President Trump wants first and foremost, right?
Right, and that's also what the Iranians have been doing for years, putting the nuclear question off, kicking the can down the road. Obviously, after the JCPOA, there was maximum pressure of Trump won, and then the Biden administration came in, and there was basically just talks about talks for years. And the Trump administration tried last year for these negotiations regarding nuclear, and this is how we ended up in this spot right now. So what Axios is basically saying, that this is potentially something they could talk about, lifting the blockade, putting a nuclear port file to down the road, which would take months, if maybe not years, to come to an agreement, likely if history is any perspective. The problem is right now, the president doesn't seem willing to have this blockade. I do think what's interesting, though, is this obviously comes off the heels of those negotiations that didn't happen this week. At one point, it was supposed to be the vice president leading the negotiations, and then it was just Steve Witkoff and the president's son-in-law, Jared Kushner, going over. And at the end of the day, none of the talks happened. The president said, I'm not going to waste their time just to hand off documents when it takes hours to get there, 15, 18 hours to get to Pakistan. So right now, it does feel like these talks are even at an impasse.
All right, so that's issue number one. Number two is what happened over the weekend. You were in Washington, right, for the White House Correspondents' Dinner, and there was a shooter who it's my understanding, stopped at the first level of security. What was your experience there?
Right, so just briefly, my experience was I did hear gunshots. I went to the floor, as mostly everyone did, and there's a lot of confusion that took place. It is right for you to point out, though, that the shooter was stopped out on the outside perimeter, didn't make it to the ballroom, didn't make it to the floor that the president and all these journalists and basically his entire cabinet, as well as the vice president, were there in the room. Secondary, though, there's going to be tons of questions now about the security in general. This individual was likely staying at the hotel. How was he even able to stay at this hotel? Baggage not checked. Why wasn't more done on the outside perimeter when you have this level of a gathering? And potentially we're going to hear more today. The FBI Director Kash Patel was speaking to some reporters earlier today, said there will be a briefing later today. Also, this is the alleged shooter will be in court today, so we will have more information as the week goes on.
All right, Anne-Marie Hordern, thanks very much. Glad you and everyone else made it out of there safely. Bloomberg's chief political correspondent, co-host of Surveillance, Anne-Marie Hordern. Check on what's going on in the markets right now. In terms of the pre-market moves, not so much. We're looking at a slightly negative trade here. S&P futures, NASDAQ futures down about 0.1% as we see a continued gain in oil. That had turned around a little bit after talks of an Iranian deal started to float out into the market yesterday evening, but now we're back to pretty much no movement on futures. The 10-year yield also not moving much at 431, 432. Let's get a look at some of the single stock stories we're following for you, because there's a lot to talk about this week. Eli Lilly buying cancer drug developer Ajax Therapeutics in a deal valued up to $2.3 billion, and that stock also not moving. Domino's posted a smaller than expected increase in comparable sales, citing growth, competition, and economic challenges, but that really disappointed investors. At least in the pre-market, those shares are down 7%. Verizon reported a surprise gain in phone subscribers and raised its full-year outlook as Wall Street analysts expected a drop in subscribers, and as a result, the shares are up in a slightly down market, 1% in the pre-market. Coming up, Microsoft changes up its deal with OpenAI. Details on that next. This is Bloomberg Open Interest.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly. Welcome to my workplace. Do you feel pressure? Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
this global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving something.
Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Let's get now to high interest. Look what's making headlines around the world. Flying taxis are coming to New York City for 10 days only. Joby Aviation is planning to test flights between JFK and Manhattan using quieter electric air taxis with no passengers on board. I mean, what's the point in doing it for 10 days? Anyway, the company says the goal is to show cleaner, quieter travel and to speed up FAA approval. If cleared, commercial rides could launch later this year. Budget airlines are seeking a $2.5 billion relief package from the White House as jet fuel tops $4 a gallon. In return, the group is offering convertible equity stakes. The request comes as the war pushes up energy prices and talk of industry consolidation grows. And China is blocking Meta's $2 billion AI grab. Regulators abruptly blocked Meta's acquisition of the startup Manus, citing national rules but offering no detail. The move signals Beijing's tightening grip on tech exports and talent as it escalates U.S.-China tensions. Meanwhile, Meta is scrambling to unwind a deal that obviously is already in motion. Shares of Microsoft are down just slightly here, 1% and change on breaking news. It amended its deal with OpenAI, saying the OpenAI license is now non-exclusive and it's phasing out part of its revenue sharing plan. Bloomberg Tech co-host Ed Ludlow joins us now. So Ed, just give us the details on what we know so far.
Yeah, I think the easiest way to do this is state what the net effects of the amended agreement are. The first is that OpenAI can now basically run and sell any of its products on any different cloud. They had already done deals, for example, with AWS earlier in the year, but that's now more codified. Microsoft has access to OpenAI's underlying technology through 2032, but because the license is now non-exclusive, anyone can now have similar rights and do similar deals with OpenAI. So that's interesting, right? The stock fell pretty profoundly in the moments after the red headlines, down 4%. It's now paired some of those declines. The bit that's a bit confusing is that Microsoft will stop paying OpenAI. Microsoft stopped paying OpenAI a share of revenue, and how that was working was any revenues that Microsoft generated from a technology that had OpenAI's technology integrated into it, they would then share with OpenAI. But the reverse continues, so OpenAI continues to make payments to Microsoft, which is its biggest investor, largely because of the obligations OpenAI has to Microsoft for ongoing access to compute and Azure, and all of that codified back in October of last year. So basically, it's now open market. OpenAI can do business with others. Microsoft is less restricted as well, and the market's taken a moment to make sense of it. I hope that helps.
It does help, and we're going to be hearing a lot about these companies this week, so I'm really looking forward to earnings on Wednesday and then on Thursday for Apple. A related story that is driving Qualcomm shares higher today. OpenAI may be working on a phone with, I guess, Qualcomm chips in it. I seem to recall a very famous Apple employee going to OpenAI maybe a year ago, Ed, I think it was Johnny Ive, right, to make some kind of device. Is this what we're expecting? Is this that device? And what do we know about it?
So Ming-Chi Kuo is an industry analyst at TF International Securities, and he also has a reasonable following on X. He put a very short research note out on X saying that according to his supply chain checks, Qualcomm and MediaTek are working with OpenAI to provide the silicon for some kind of device or handset, and that is the reason that Qualcomm is up so significantly. We knew from an OpenAI announcement in January that they were basically trying to establish a US supply chain for a wide range of things that included devices. We don't have full spec of what this device is, but you're absolutely right that OpenAI did a partnership with Love From, which is the agency that Johnny Ive, the former chief designer at Apple, set up when he left the iPhone maker. And that's as far as they've got. The details in this analyst note are very thin, but basically it seems to be OpenAI getting its supply chain in order for some kind of device. And Qualcomm, of course, is the largest maker of smartphone processors. So that's the logic there.
All right, really fascinating threads here, and looking for the whole story. Ed, I'm looking forward to your program, Bloomberg Tech. Ed Ludlow talking to us about what's going on in tech, and it's going to be a week where that's really our big focus. Joining me at the desk is Rebecca Patterson, the former chief investment strategist at Bridgewater. She's now a senior fellow at the Council on Foreign Relationships. Plus, we're going to talk a little bit about the Council on what is it?
Economic
Education,
yes.
CE, which I heard you talking with Tom Keene about on radio earlier. But first on AI, this is all starting to take real shape, right? In terms of the actual demand for the products, what the products are, the revenue that they're generating. But the CapEx still looms so large for me. I saw a stat today that a handful of Mag 7 companies are going to spend $650 billion in CapEx next year.
This year,
up from like 400.
Yes.
So a massive jump from an already massive number.
Yeah.
Is it worth it, you think? Or we're not looking at a redux of 2,000 with the fiber rollout?
That's a great question. We don't know. I mean, one of the challenges with this is that the technology is changing so quickly. We can't rule out that in 2 years' time, 3 years' time, I don't even know the time frame, there couldn't be another breakthrough that changes the energy needs. That could leave us with data centers that are just, assets we don't need anymore to the same degree. There could be a quantum breakthrough. There's so much that could happen that just to extrapolate what's happening now and assume that's where we go, I think is a little narrow-minded. But you're right, $650 billion in CapEx, and that's just from 4 of the companies, so the actual number is much bigger for the whole ecosystem. That is a huge amount of private sector stimulus going into the U.S. economy, and it's one of the reasons that the stock market is holding up so well. It's people betting on this structural story with AI, that it's going to create new industries, create much higher productivity growth that supports the broad economy. And they prefer to be in a structural story than a cyclical story right now because of the uncertainties with the war.
Yeah, I mean, we have seen since March 30th, a number of these stocks come up another 25+%, right? Okay, we saw a dip of about the same size for some of them, Microsoft specifically, in the beginning of the year. But why are investors willing to sell $3 trillion and then buy $3 trillion worth? I mean, it just seems that these moves are too massive to be happening so fast.
It does beg the question if we've had some structural changes underpinning the market. And I don't have the data to be able to confirm this, but if I had time to dig into this, what I'd be looking for is what % of this volume is coming from retail investors who tend to be shorter term horizons. What percentage of the market right now is being driven by algorithmic investing, which can react to a tweet or a Truth Social post and can be much more short term? My guess, and this is a guess, is that we have a relatively bigger part of the market being driven by those very short term flows right now. And remember, Matt, we've seen this. They've been conditioned, right? After COVID, after Liberation Day, buying the dip has paid. And so I think that's also part of it, is this short-term memory of the market that's telling you everything's going to be fine. The president certainly wouldn't let this war go on into a midterm election. We'll resolve the conflict. Prices will come back down. The economy is supported by AI, but also by tax refunds coming through, and a job market that's stalled but not deteriorating. So people have income, they're spending. It makes sense that the market's here, but I agree with you. The volatility, these ups and downs, begs the question, what has changed?
All right, well, there's a heck of a lot to talk about, so it's great to have you here. Rebecca Patterson is going to stick with us. We'll ask her to put on her CFR hat for a while. We'll talk about the CEE as well. Economic education, vitally important if we want, well, this market for sure, but also this economy to continue to grow. Coming up next hour, we'll discuss demand for rare earth elements needed to power AI technology with the CEO of Critical Metals as well. That energy piece is a huge one. This is Bloomberg Open Interest.
This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm election.
Hear it first on Bloomberg.
Quick check on futures ahead of the opening bell. We're looking at red, but it's not too bad, right? 0.1% is the drop on the S&P futures, on NASDAQ futures, on Russell futures. Dow futures down a little bit more and still trading under the 50,000 mark. We're going to come back with the opening bell, the New York Stock Exchange and the NASDAQ market site, and more from Rebecca Patterson. This is Bloomberg.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. We have an incredible week ahead in terms of earnings, in terms of central bank decisions, in terms of racing. And so we're going to get through all that for you right now. You can see futures down about 0.1% on the major averages. You hear the opening bell at the New York Stock Exchange. And probably the most important race this weekend, well, I don't know. It depends what you're into. If you're like motorsports, you're going to see F1 to the extent that is still a motorsport. We're going to talk to Ayo Komatsu of the Haas F1 team. They're fourth in the Constructors' Championship. Their driver, Ollie Behrman, I think is seventh in the standings right now. So that'll be interesting. I'm actually going to Miami tomorrow to get ready for that race. And then if you're into horses, if you're more of a horse person, the Kentucky Derby this weekend on Saturday. I think it's been called the fastest 2 minutes in sports. Churchill Downs ringing the opening bell down at the NASDAQ market site. If you're into the markets, the big race that we're going to be watching is in big tech earnings. You've got a ton of them. $16 trillion in big tech earnings out this week, which is going to give investors a read on whether this AI rally, especially the rally we've seen over the last 3 weeks, is sustainable. We also have Apple reporting earnings on Thursday. All these come after the bell, by the way. So Wednesday after the bell, all those that you just saw. Apple Thursday after the bell. And then I put Qualcomm in here because of the report on the OpenAI phone. They're getting, as Ed Ludlow just told us, Qualcomm all lined up for their supply chain for whatever device they're going to come out with. And as a result, Qualcomm shares are up big. Let's bring back Rebecca Patterson, a former chief investment strategist at Bridgewater, who's now a senior fellow at the Council on Foreign Relations. And let me just ask first your take on the markets having hit all-time highs again on Friday. And it's been an incredible rally this April, even though we're in a war that feels like it's starting to turn into a quagmire, right? It could be a ceasefire where we just shoot at each other for the next, hopefully not, 10 years. But what does it mean to you in terms of markets?
I mean, there's a huge disconnect between the foreign policy and military types and the investors. When I get on Council on Foreign Relations calls with my colleagues there, it's pretty dark, right? The Strait of Hormuz, even if there's an agreement tomorrow, it's going to take weeks and weeks to open it up, another few weeks to normalize shipping, and it could be years before all the damage, especially in places like Qatar, are fixed. So there's that time lag. But then when you look at the investment community, they're looking at an economy in the United States that's still growing around 2%, so maybe a little bit below potential, but decent. Unemployment rate is still relatively low. The labor market's stalled, but it's not deteriorating. Consumer, especially at the upper end, is still spending. And there's buffers, right? So we have a buffer in the form of tax refunds helping consumers. We have buffers with all the strategic reserves being used to keep the oil prices from rising further. As long as that's all in place, and of course, you just mentioned the structural technology story, people feel okay about continuing to have their money to work. And the question is, which one of these things wins? It depends on how long the strait is closed, right? The buffers will be pushed down. The tax refunds are finite. The inventories being run down on oil are finite. So it's a matter of time. If we can reopen the strait quickly, we can get through this with relatively small hits to global growth. The longer it lasts, the greater the risk. But we're seeing it already. Germany just cut its GDP forecast by half. Asia is already rolling out emergency fiscal measures, rationing. Thousands of flights around the world are getting canceled because of jet fuel. So it's coming. It's just not here yet.
So I wonder how much the AI CapEx story, which seems to be driving these markets, is going to drive our economy, because we talked about the numbers. They're absolutely massive. You've got the one big, beautiful bill that's, I imagine, helping to drive that, right? Are we set up for not just a data center build out, but also a manufacturing resurgence?
I mean, we are seeing manufacturing surveys improving, and it's all the data center and AI adjacent businesses, small and large cap, benefiting. The question I'm asking is, let's get to the next leg of this, adoption, right? So we have the development of AI, and that's supporting growth. But at a certain point, investors are going to want to see revenue. They're going to want to see data showing that more companies are adopting AI and starting to get that productivity benefit. Those numbers are still really low in the United States. And to me, the most concerning piece is that if you look at surveys of people around the world, advanced economies, including the United States, are much more negative about how they view AI affecting their own personal financial fortunes. So they're worried about losing something, losing their job, having lower wages maybe because of AI. Emerging markets are much more positive. They see this as a way to leapfrog and have better growth. But if you have a population that's overall cautious about AI, how quickly will that adoption roll out? And if that goes longer than expected, that alone could be a hit to some of these companies.
I mean, the real question that I keep asking, I guess since this war started, and the way that the circle has to get squared is, we still see in the financial side earnings expectations so strong. I mean, double-digit earnings growth throughout this year, right? I'm looking at expectations for S&P earnings at $328 over the next 12 months. On the other hand, I would imagine oil is a huge input in terms of cost, right? So when those buffers get drawn down, how much is that going to hit earnings expectations in the U.S.? And also, I mean, worldwide matters because S&P 500 companies count on foreign purchasers for like 40% of their revenue or something massive like that.
Yeah, right. No, we are exposed to the rest of the world to a degree, so it will matter. And again, I think the clock is ticking, and we probably have a few weeks. I do think it's hopeful, the news we heard overnight, that Iran is considering opening the strait if they can, start moving away from uranium in the short term. I'm not sure if the administration would go for that. But if we don't see that happen, I agree with you. I think you're going to see earnings expectations, especially for sectors that rely on energy, food, fertilizer, any of those derivative products. I think those earning expectations will start going down very quickly. Remember, we've both lived through Brexit. Go back a decade. The market was fine until the day before the vote. The day after the vote, things collapsed. I think sometimes investors say, okay, I know there's a probability out there, but I don't know how to price it. But then when the event is confirmed or you see more evidence of that risk, then you get these sharp corrections. I'm not saying it will happen, but I think that's the risk.
Well, you perfectly guessed my next question. I was going to ask why strategists are still so bullish, given that it could happen that the Strait of Hormuz remains closed. Remember, we're not the only ones who get to decide, right? The Iranians also have a vote here. So even if President Trump says, all right, I'm done with this, let's open the Strait of Hormuz again, the Iranians could say no.
Right, and they have realized now what powerful leverage this is for them. Originally, they thought uranium was their leverage. I think this is as powerful or maybe more so in terms of getting what they want out of this. And it's not clear that they're going to be able to strike a deal quickly. And again, reopening the strait isn't the matter of a handshake or a tweet. It's also removing mines. It's normalizing processes. It's going to take a while.
All right, you're going to stay with us.
Great.
We're going to get back to the tech conversation because it looms so large in this market. I want to get a quick check before we do that at what's going on in markets right now in terms of the live cash markets. We still see a bit of a drop, I guess 0.1% on the S&P right now. But the important thing to look at will be the breadth. So on Friday we had an all-new record, of course, but it was driven by a very thin slice of the market. We now have 320 stocks gaining, almost 180 down. So that's at least good news, even with the unchanged level here. NVIDIA right now rising almost 2%. That adds alone 10 points to the S&P 500. And you've got Micron and Intel and Qualcomm and SanDisk. So all of these chip makers continue to buoy this market. It's pretty amazing, SanDisk as well, to see chip makers in the top 5 spots in terms of adding points. That's how I had this move screen set up, in terms of adding points. On the downside, you've got Apple, Microsoft, and Tesla. So 3 of the Mag 7 there, as well as AMD and GE, Vernova, bringing us down, Broadcom as well. So go ahead and make it the Great 8 that are kind of weighing on us as we wait for these earnings. Remember last quarter when we got Microsoft saying it had 38% growth in its Azure cloud services. That was a disappointment to investors, and the shares sold off to the tune of 10% on the following day. So you've got to have some pretty big numbers to satisfy investors out there. In terms of the industry group breakdown, energy leading the way as crude continues to rise. We've got utilities and financials coming back. Financials have been one of the worst performers year to date. Industrials, healthcare, and communication services, those are the hyperscalers. Consumer discretionary down right now, as well as consumer staples. And this is where you could see that oil price coming in to hurt earnings expectations. Coming up, 5 of the Mag 7 stocks we've been telling you to report this week. We'll look at the most important data points traders are watching, including cloud revenue. This is Bloomberg Open Interest.
We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Versace in Beirut, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg. Time now for our top call. Some of the analysts' action and focus this morning. First up is Bernstein downgrading Campbell's, saying its soup and snack brands are struggling to gain traction, leaving the turnaround story still unproven. Next up, Melius Research is starting both Micron and SanDisk as buys. The firm says memory chips are a key part of AI, and as a result, demand should stay strong for years, which will help those companies see stronger. Can they get any stronger margins? Finally, Northland Securities downgrades AMD, saying Intel is catching up and TSMC's work with NVIDIA is making it harder for AMD to grow margins. And that sets us up nicely for a conversation about tech. This week, 5 of the Magnificent 7 stocks report earnings. Their results will determine the direction of the market, which is heavily reliant on AI stocks and really memory chip makers as well. For more on this, let's bring in Bloomberg Intelligence Head of Global Tech Coverage, Mandeep Singh. Rebecca Patterson of the Council on Foreign Relations still with us. Mandeep, Rebecca and I were talking about the markets. I walked over and looked at the move screen, and it was all chip makers on the rise. And they've already had such an incredible run, right? Is the SOX index still looking at the longest streak of gains ever? And how much stronger could their margins really get?
Well, as long as we remain supply constrained, which all of these companies said last quarter, they would have grown faster, like Microsoft, 38%, they would have grown faster had it not been for the supply constraints they faced on the chip side. So that's in part a reflection of what's going on with the SOX index and memory prices. Clearly, we know there will be no new capacity added anytime soon, so that's what's driving the memory prices. But look, overall, I expect, especially the infrastructure cloud side, they should see a bigger contribution of AI workloads. So just to put it in context, traditionally, these cloud businesses grew 20% or somewhere around that. Now they are growing almost 40%. In the case of Alphabet, it's close to 50% growth. A lot of that delta between that 20% and 50% is AI workloads, and that's where you want to see which company has got margin expansion. Alphabet showed margin expansion last time. It's because of their TPUs and their own LLMs, and that's what I think Street will care about the most is how much are these companies growing and what's the contribution of AI workloads, and at what margins is it coming when it comes to these Mag 7 names.
By the way, I just looked at the SOX index. 18 days of gains. Today we're, oddly, I see the SOX index down a little bit today, but massive, massive run. Rebecca, what do investors make of that? I mean, at some point they've got to miss, right?
Well, at some point, right. I mean, if expectations keep rising, at a certain point, you can't keep up with them. I mean, I just keep thinking, you mentioned the word constraint, and I'm thinking, okay, earnings this week, clearly that is the focal point, but we get beyond that, and then what? And I keep thinking about constraints with the U.S.-China summit planned for mid-May. We still are very dependent on China, even though we're working very hard to decouple in terms of rare earths. And so how important is that going to be as a constraint coming from that meeting?
Well, I mean, look, the overall point is you can't have like NVIDIA GPU supply or Micron chip supply added to the system anytime soon. So with that limited supply, and we have seen, these LLM companies like Anthropic add almost, $10 billion in revenue just in a month. So from that perspective, the token consumption is taking off, but the capacity isn't being added. And there are no near-term fixes when it comes to adding capacity, no matter what happens when it comes to the negotiations that are going on at the geopolitical level.
Yeah. By the way, the cash burn at some of these companies is getting big, right? I think Alphabet is expected to have a drop in earnings. Are they burning like $13 billion a quarter on cash? Meta is expected to have pretty much unchanged earnings, and their cash, free cash flow has come down to, I think, $4 billion, which is low for them. What are you seeing in terms of the dispersion here?
Yeah, so look, I mean, from a CapEx perspective, you already know the number, $700 billion in aggregate for the hyperscaler. That could be revised upwards. So to your point, you know, free cash flow drag may be there. But I also expect a lift to top line. So that's where I go back to the comment I made. Like, these cloud businesses are growing 40, 50%. They used to grow 20, 25%.
It has to be more than 38%, right? Because that was a huge disappointment last quarter for Microsoft.
Yeah,
it's got to be more than 38%.
Got to be more than 38%. And that's where, you know, they will get a pass like a Meta. Yes, they are raising their CapEx, but they're also growing their top line 30%. So investors won't mind as long as they keep getting that lift to the top line. These are giant, you know, revenue bases where they're able to grow 30, 25, 30% on top of that. And I think that's what's most impressive.
You know, Mandeep runs our technology coverage for BI because he's smarter than pretty much everybody here, certainly than me. But how do you push back? How do you push back on this kind of optimism? Because I don't have the brain power to do it.
I mean, one of the things I've been looking at recently in context of the war is the amount of sovereign wealth fund capital coming from the Gulf states to the U.S., specifically into the tech ecosystem. I mean, the U.S. has been the biggest recipient. Last year, the number went parabolic. And if you have Saudi Arabia and UAE in particular that need cash quickly because they don't have the budget surpluses as much this year, Saudi Arabia has a deficit, could they slow that money coming to the U.S., even if it's just for a year or two? And then you have to see these companies tapping debt markets more. And we could have a repeat of, was it Meta, right? Last October when it tapped the debt market and its stock sold off. That's something I'd keep an eye on as a risk tied to the war. Now, I don't know if it'll change anything structurally, but tactically, it could dampen sentiment a lot, I think.
Yeah, even we saw that with the Oracle CDS spreads last year. So, look, there are always risks, but when it comes to the demand side, we can see the numbers in terms of token consumption or, you know, what these companies are adding in terms of revenue that they are adding monthly on a monthly basis. And from that perspective, it's hard to question, you know, what you're seeing in terms of the product usage. Yeah. Now, you could argue some of that usage maybe for unproductive use cases. We'll find out over the course of the next 10 to 12 months. Not all of that spend is going to result in productivity. Right. And that's what we'll have to figure out. What is the normalized demand versus what is experimental and what will pull back over time.
Is my Claude a research assistant making me productive, or is Claude helping me pick restaurants in Tokyo?
Yeah.
Different outputs for GDP.
I would be more, I think, positive on the enterprise use case than on the consumer use case. Yeah. I think with consumer use cases, we know it's going to take a while to build those connections and really make sure that customers are willing to pay for it, because we have to remember this is very compute-intensive market. And it's expensive to run that compute, and not everyone will be willing to pay a $1,000 subscription for these tools.
Right, and the enterprise is a question. I mean, they're all focused on trying to get as many companies to really revamp their processes with AI, rather than just, I'll do a back office thing here, a customer thing here. They want them to just rethink your entire business to have more caught market share, so to speak, captured market share. And I'm not sure how quickly that happens. I know they're all trying to do it. Yeah. You see some evidence of it, but will they get far enough to meet the expectations baked in their stocks? Again, I have more questions than answers. We need you for the answers.
And look, you're bringing up great points, but I think right now everyone, because they keep calling out compute constraints, that's where it's not going to suddenly be a shock where suddenly nobody wants to use these LLMs anymore because, you know, they find them to be unproductive. It's more about, okay, we probably don't need as much as we thought we would, and that experimental use cases can come back. But I think
I'm doing Matt's job.
Yeah.
what about mythos? So you say there's not going to be a risk that suddenly people stop using them, companies stop using them. All right, what if China announces tomorrow it has its own version of mythos? What if there is a cyber risk that goes from 0 to 10 overnight? I would imagine a lot of companies are going to say, we're going to pause, right? That to me has become a more probable risk, still low, but a probable risk than existed a couple weeks ago.
Yeah, so that's why you see open source adoption. No,
I like it.
You're very optimistic.
We need
this. But that open source adoption, there is a reason why it's low. Why are companies using proprietary LLMs? Because of that open source risk. So from that perspective, I mean, yes, there are vulnerabilities out there, but we also know these LLMs can help you detect those vulnerabilities.
Yes.
And so you have to find that proper use case, but there is no doubt that, companies want to use it. They have to face, this environment where you could have your data stolen, and that'll make you slightly risk averse. But that doesn't mean if you're not going to use it, no one else will.
Yeah.
All right, I have to wrap him up now because we have to go to a commercial break. But I want to just point out that you could be using AI for your Council on Economic Education, or the kids could learn how to implement that
100%
into their planning.
I mean,
and it could be a whole different world in 10 years.
I think AI is a frenemy. It's your best friend, and it's potentially an enemy, depending on how it gets used. But to your point on Council for Economic Education, we're trying to make sure every American student graduates high school understanding basics of economics, personal finance. We are absolutely looking at how should AI influence teaching, influence how people think about finance and personal finance. So it is a big part of what we're doing.
All right.
It has to be.
Important, very important work. Mandeep, thank you very much for joining us. Mandeep Singh, head of our tech coverage at BI, and Rebecca Patterson, senior fellow at the Council on Foreign Relations. Thank you so much for your time.
My pleasure.
This is Open Interest.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
Insight with Haslinda Amin, only on Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
Coming up in the next hour, I just saw Kelly Cobley offset. She's going to share her thoughts on consumer confidence versus market sentiment. Plus, Soundpoint Capital, Steve Ketchum joins us on private credit redemptions. Tony Sage from Critical Metals talks about their Greenland expansion, and we'll talk F1 with Ayo Komatsu. This is Bloomberg.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
The men who police say stormed the White House Correspondents' Dinner over the weekend in Washington will appear in court today for the first time. Cole Allen was a guest at the Washington Hilton, says ABC's Pierre Thomas.
Sources telling us that Allen allegedly snuck down 10 flights of stairs to go undetected before suddenly dashing toward that security checkpoint where he confronted police. In the note, he allegedly refers to himself as Cole, friendly federal assassin Allen.
That note, allegedly sent to his family before the attack, describes grievances against the Trump administration and expresses how, if necessary, he would kill from the highest-ranking official to the lowest, including any Secret Service member that got in his way. And now it's on to Iran, where officials are offering to reopen the Strait of Hormuz in exchange for a lifting of the U.S. naval blockade.
Democrats are pushing for an end to the conflict, and Iran has proposed new terms for a deal, but officials tell us they fall well short of the administration's red lines.
ABC Chief Global Affairs Correspondent Martha Raddatz. Nearly 24 families in North Texas are now looking for places to live after a pair of tornadoes touched down over the weekend.
2 people were killed in the tornadoes, including a 69-year-old woman whose mobile home was destroyed. First responders say many others were hurt.
When everything is over, my brother had to dig my parents out of the debris.
Grayson Allen lives in the hard-hit community of Runaway Bay, northwest of Fort Worth.
My dad has a fracture in his neck. My mom had a broken back.
One of the twisters was an EF1, the other ranked EF2, with winds reaching 135 miles per hour. Jim Ryan, ABC News, Dallas.
More than 30 million Americans from the plains to the Midwest are on alert for severe weather today as well. It'll be King Charles's first state visit to the White House. He and Queen Camilla will be there today. The king will address a joint session of Congress and attend a state dinner. You're listening to ABC News. questions about a man sentenced to die this week.
Thursday is execution day in Texas for James Broadnax, a black man whose rap lyrics were introduced into evidence before an all-white Texas jury. His attorneys say doing that biased the jury when they decided to sentence him to death. His execution just days away, his cousin has now come forward to confess to the double murders 20 years ago, saying that his conscience couldn't take it anymore. Broadnax is due to die by lethal injection. Wayne Cabot, ABC News.
A North Carolina lake struggling under drought-like conditions. ABC's John Dowding says there's so little water it's been hazardous for boaters who are getting caught in sand traps.
Concerns are bubbling to the surface at Falls Lake. Officials said water levels are at least 3 feet below the norm, making it more difficult for boaters to navigate.
Places that you normally boat to, I think I would just watch out for everywhere that I go now.
As the temperatures rise and more people head to the lake to cool off, those we spoke to urging caution.
Take your time. Be careful.
Especially because of those sandbars that are popping up as the water levels continue to drop.
A new poll says 70% of college students see artificial intelligence as a threat to their job prospects, and now more are looking for AI-proof majors. Students say they're looking to build skills they think AI cannot replicate, things like forming human relationships and being able to think critically. Sherry Preston, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Monday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live on YouTube. We're streaming live on Bloomberg.com as well. Markets kind of red and green on the screen here. Not a whole lot of movement. We've got a lot of earnings coming up this week and a lot of economic data as well. We're going to start the show checking with Tyler Kendall, Bloomberg Washington correspondent. She was at the Correspondents' Dinner Saturday night in Washington, D.C. We'll get the latest reporting from that attack there. Ed Ludlow, B-Tech co-anchor on some of the top tech stories out there, and there's plenty to do. I want to ask him about this Microsoft to stop sharing revenue with main AI partner OpenAI. What does that mean for Microsoft? What does that mean for OpenAI?
Yeah, Microsoft was the OG partner of OpenAI. Now it looks like OpenAI is like, I don't need to be hemmed in.
Exactly. I think we're opening up the AI market a little bit. Joanne Feeney, partner and portfolio manager at Advisors Capital Manager, will get her thoughts on the market. Verizon reported some results. We'll check in with John Butler. He covers all the telecom names for Bloomberg Intelligence. So we got a lot of earnings, a lot of economic data, and a lot of geopolitical news we'll cover in the next 2 hours. It's Scarlett Fu and Paul Sweeney. This is the Bloomberg Intelligence program. Let's kick it off with John Tucker and a Bloomberg Business question.
All right, guys. Happy Monday. This report brought to you by Eisner Amper. Eisner Amper provides assurance, tax, outsourcing, and advisory services to businesses that need more than a generalist. Whatever the challenge, we have a team for it, EisnerAmper.com. S&P 500, a little changed right now. Unchanged, in fact, after the record-breaking rally. Oil higher. The peace talks with Iran seem to have stalled out. Energy, as a result, the best-performing stock in the S&P 500. You have Brent up right now 107.28, WTI 95.39 a barrel. Qualcomm, best-performing individual stock in the S&P 500. Yet a tech industry analyst suggests the chipmaker working with OpenAI on a smartphone. Domino's, worst performer in the S&P 500. We'll take a deeper dive in just a second. Companies representing about a quarter of the S&P 500's market cap report this week. Alphabet, Microsoft, Amazon, Meta. They'll be with us Wednesday, followed by Apple on Thursday. Lori Calvasina at RBC, meantime, says earnings do remain the key driver for these markets.
We did have a dramatic surge in the rate of upward revision, so, that's a proxy for earnings optimism. Earlier, back, I would say, like in March, that has softened a little bit now.
Right now, the S&P 500 down a point. The NASDAQ Composite Index down 52. The Dow up just 17. This is like remember the Jetsons?
Yes.
His boy Elroy.
Sure.
Jane, his wife.
Yep. Rosie, the maid?
Yeah, well, she wasn't in the song. Anyway, Joby Aviation planning to fly electric air taxis.
Now we're talking.
Between Kennedy and Manhattan this week.
What could go wrong?
Well, demonstration flights. There will be a pilot. So the feds want to accelerate the integration of air taxis into U.S. airspace.
Wait, demonstration flights, will there be any passengers?
No passengers, but yes, a pilot. The first point-to-point trips of the electric vehicle vertical takeoff and landing. What do they call it? VTOL?
Okay.
Sort of like the Osprey.
So it'll be quiet, though, right? Because these are electric.
Well, yeah, the big complaint with helicopters ferrying passengers back and forth wherever in Manhattan is the noise. Because, you know, it's Manhattan.
The noise, the hair, the wind.
What do you mean the hair? Oh, it blows your hair back?
Yeah, it ruins your hair.
I don't have that problem. Joby, by the way, is up 4%. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash.
All right, thank you so much, John Tucker. All right, should we get to some market movers this morning?
Absolutely. I'm going to do it there. Market Drivers is brought to you by IBKR. For the past 3 years, Interactive Brokers individual clients averaged 24.3% annually, beating the S&P 500. Lower costs and access to 170 plus global markets matter. Visit ibkr.com/performance. And we do have some red on the screen here, but let's break it down. Let's see where some stocks on the move today. We can do that with Bloomberg's Avalon Purnell. Avalon, what are you looking at today?
Well, we have to start off with ARC Resources. That's ticker ARXCN because it's a Canadian stock. Wow. Jumping right now 22% for the most intraday since 2020. That's after Shell agreed to buy the oil and gas firm for about $13.6 billion. That deal is a mix of cash and shares. But what's important is that the acquisition will strengthen Shell's existing business in Canada and support their liquefied natural gas output. Worth noting that it's actually Shell's biggest acquisition since it bought BG Group in 2015.
Puts it in a different position here in the new energy order that we have in this world.
LNG, it's all about LNG.
Absolutely. All right, number 2 on your list.
Yes, Domino's Pizza, that's ticker DPZ, sliding now about 10% to hit its lowest intraday level since 2023. That's after the pizza chain reported first quarter domestic and international comparable sales that missed expectations. Analysts are extremely worried that the print will mean that the full year outlook is also at risk. Domino's saying that consumer uncertainty, inflation, and also weather hurt its first quarter results. And also worth noting that management said that higher gas prices, as you may imagine, are impacting consumers' disposable income.
Any evidence of the Spicoli effect?
No, they're not going to get the reference, John.
Oh, come on.
No.
Avalon, do you understand the reference? No.
I do not.
No.
All right.
Good, and that's good for you. Good for you. We can move on. All right, one more. You got us.
Yes, Veridermics, that's ticker MAIN, surging now about 40% to hit a record high. Okay. That's after its experimental oral medication for male pattern hair loss met all of its key goals. Veridermics is working on a non-hormonal hair growth therapy, which is important since other treatments on the market can have a lot of side effects. Cantor writing that the results are a home run outcome that exceeds investor expectations and potentially could even look better than minoxidil.
So this is the next, like, GLP-1. If you can get the hair.
You're right. That's exactly what I've been hearing from investors, that this could be the next big thing.
What was your last reunion with your buddies?
Oh, yeah, it's just ridiculous. But, I mean, just walking around this office and you look at some of the management around here. Oh, boy.
Well, it's from stress.
Goldman Sachs could use it.
Exactly. There you go. So I'm telling you, that's the next big one there. So we'll see how that plays out. All right. Avalon Purnell, thank you so much for joining us. Appreciate that. As always, for more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Busy weekend in Washington, D.C. Saturday night with that attack at the White House Correspondents' Dinner. Bloomberg had a good group of our journalists there as well, including Tyler Kendall, Bloomberg Television Washington correspondent. She's down in the Washington, D.C. studio. Tyler, what do we know about Cole Thomas Allen and maybe what he was trying to do on Saturday evening?
Well, Paul, at this point, the investigation is preliminary, but evidence has suggested that the suspect was trying to target administration officials. There has been a manifesto reviewed by Bloomberg News where the suspect calls President Trump a, quote, traitor. Now, according to the acting Attorney General, Todd Blanche, Allen is not cooperating with investigators at this point, but they've already been able to piece together a little bit of what was happening ahead of the planned attack, including that this 31-year-old from California apparently made his way cross-country via train. He went from California to Chicago to Washington, where he actually checked into the hotel where this event was being held, the Washington Hilton, several days before the White House Correspondents' Dinner. Now, there's still a lot here that needs to be answered, but it was interesting because according to reporting about this manifesto, it appears that the suspect was surprised by lax security. We can say that the security at the dinner was very similar to how it has been in years past, both when presidents do it and don't attend. The perimeter was very close to the main event space in that ballroom, but guests of the hotel beyond that closed perimeter were able to come and go relatively easily.
And of course, we know because he checked in as a guest, he had perhaps easier access than someone who came in from outside. This is raising all kinds of questions about what security is going to look like, the protocol for these kinds of measures going forward. And Tyler, I want to get to this other story about President Trump really jumping on this opportunity, if you want to put it that way, to show that the White House ballroom is a necessary addition. Make the connection here for us, or what the president is trying to do here.
So I guess we can start with some news related to the president's security protocols. It is our understanding, according to the White House, that the White House Chief of Staff, Susie Wiles, is going to convene basically a meeting this week with the Secret Service and also officials from the Department of Homeland Security to review the security protocols around when the president attends visits or events like this. So, Scarlett, it does appear that the administration is trying to make a push here to change how things happen. We also know that the Washington Post is reporting that the security level of this event was lower than other events where so many high-ranking officials were in the room. You had basically almost every member of the cabinet inside this ballroom. Now, President Trump has been trying to argue that he would like to see his ballroom constructed so that an event such as this could be held in a more secure area. We should say the White House Correspondents' Dinner is thrown by the White House Correspondents Association, which is a private group. It's not thrown by the White House, so it's not totally clear that an event like this that happens every year to honor the journalists would really take place on the White House complex and the grounds. But basically, to catch us up to speed as quickly as possible, there's been this ongoing legal dispute about the president trying to construct his ballroom. And just yesterday, we saw DOJ officials ask a historic preservationist group to drop their legal challenge after a judge ruled that President Trump has to halt construction on the ballroom, at least for now, until he gets congressional approval. We're hearing some murmurings in Congress that maybe as soon as this week, we could see lawmakers act in a way to try to authorize the president, because, Scarlett, just last month, the judge had ruled that essentially President Trump had overstepped his authority by starting construction on this ballroom project. It's not totally nixed yet. The judge had ruled that some elements of it could continue for national security reasons, but ruled that ultimately the entire project did not reach the legal threshold for security, and it's therefore kind of in limbo at this point.
Tyler, it's also a momentous day in Washington today with the King and Queen of England arriving. Are the events from Saturday evening going to alter the itinerary of the King and Queen with the president?
Not too much, according to the administration. The acting attorney general, Todd Blanche, was asked about this. He says that he's confident that this visit can still be a secure one. There's reporting that there's been some small tweaks here and there to the schedule, but we're largely expecting it to go ahead as planned, which includes that the king is going to address a joint session of Congress tomorrow, followed by a state dinner at the White House. But as of now, security protocol doesn't seem to be too much changed.
All right, Tyler Kendall, thank you so much for that summary of everything. Tyler Kendall is our Washington correspondent here, our chief Washington correspondent. Of course, her and her team have been doggedly following this story of the weekend attack here at the White House Correspondents' Dinner.
Yeah, I've seen some reporting where one could argue that the security worked
exactly as planned.
Exactly as planned. The perimeter did not get through the security perimeter. Now you could argue the security perimeter should have been expanded, but the security perimeter to protect the ballroom worked. And so maybe that's a way to view it. Although,
no harm was done in the end.
Right. And if you're going to have these events in these public areas, that's presumably the risk that
And of
from
course, there's a
security
history of the Washington Hilton
Yes.
as being the site where President Reagan was, there's an attempt on his life there.
Yep, exactly right. So there is precedent for that. But again, a scary situation there Saturday evening for all of the White House correspondents and the members of the cabinet for President Trump, Vice President J.D. Vance as well. So we'll continue to cover that throughout the morning here. S&P 500 down 7 points, the NASDAQ down 85. We'll have more coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The record-breaking rally slowing a bit after uncertainty rose over the weekend about what's happening with the Iran war. S&P 500, again, a little changed right now. Down just about 6 points, 71.57 on the index after Friday's record. The Dow is 71 points lower, and the NASDAQ Composite Index down 72 points right now. The oil market prices climbing roughly 2% as tankers still finding the Strait of Hormuz effectively closed. Brent is 107.84, and right now WTI, that's up $1.70, 96 $4.14 a barrel. $4 at the Quick Check. I feel like a trader. I went to the Quick Check this morning, not the Wawa. Verizon climbing close to 4%. The company said it added more postpaid phone customers than it lost during the first quarter. This is actually the first time since 2013 that they can say that. Of the 139 companies in the S&P 500 that have delivered earnings so far this season, 78% have delivered positive earnings surprises. And ahead of the Fed meeting, that's Wednesday. Let's do yields. 2-year is up a basis point, 375 right now. The 10-year, the benchmark, up a basis point, 431. Meta Platforms, I'm not sure I understand this, looking to power artificial intelligence data centers with solar energy collected in space. So it's a space-based power plant that beams energy back to Earth. Only problem is this is still hypothetical. So.
Yeah, I was going to say, wait, this is operational? No, not yet.
No, it's in somebody's head. So they have a deal for up to 1 gigawatt of space solar energy from Overview Energy, which is a startup. And yeah, you know, it isn't working yet. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash, Scarlett and Paul.
All right, thank you so much, John Tucker. We have some breaking news. Bill Ackman's Pershing Square IPO, according to our reporting, is set to raise $5 billion. That is actually at the low end of the targeted fundraising range. Yeah, because he was hoping to raise up to $10 billion, according to an earlier statement. So this deal is expected to stop taking orders at 4 p.m. New York time. This is the IPO of Pershing Square USA, which includes free shares of Pershing Square Inc. So it's his closed-end fund and his alternative asset management company.
Is that what people are really, they want to own the fund as opposed to the closed-end fund? They want to own Pershing Square Inc.?
I think they want to own Pershing Square Inc. rather than the closed-end fund, because the closed-end funds in general have not done as well. Okay. So, I mean, again, all of this could change because it's still early days. They're still going to be taking orders until 4 p.m. New York time.
All right. Very good. Here's some news out today. I think it's important, but I'm not sure. Microsoft will no longer pay revenue to OpenAI. Instead, its partnership with the leading artificial intelligence firm will not be exclusive going forward. Microsoft stock's down just fractionally on the news here. I'm not sure what to read into it, but our next guest does know. Ed Ludlow, BTech co-host. He is in our San Francisco studio. Ed, can you explain this news to us and what it means?
This is important, and it's the latest development in a series of a changing relationship. And so Microsoft, critically important mega cap tech name, and OpenAI, let's call it the most profound AI company in this generation of AI companies. And basically, what Microsoft is allowing OpenAI to do is sell its products elsewhere. For a long time, they've been tweaking the exclusivity by which Microsoft gets first dibs or first access to OpenAI's tech, and also is a major distribution platform for OpenAI's tech to third parties. So the net result is like OpenAI can now run but also sell its models on any cloud. And you'll note that our colleagues in BI, their main takeaways from this is that Amazon will be a big beneficiary of that decision. But there's also some mechanical stuff. So believe it or not, Microsoft is the biggest shareholder of OpenAI. It has like 27% stake. But for a really long time, it's been paying money to OpenAI as a share of revenue from revenues it generates using OpenAI's tech. That's quite complicated. So that's now ending. And OpenAI is a major customer of Microsoft, even though Microsoft's one of its main investors, and it will keep paying Microsoft to use its cloud services. And that's the net takeaway.
All right, so perhaps this is all kind of in the lead up to OpenAI eventually going public, which is expected to happen sometime this year. I also wanted to get from you this story that we have here about China blocking Meta's $2 billion acquisition of this AI firm called Manus. It's an AI startup. Tell us a little bit more about this and whether this would really get in the way of Meta wanting to acquire this company.
Yeah, I mean, the way to look at it is that it shows China still having power and an ability to assert control over technology that originates from that country. You know, that is the main part of it. Meta wanted Manus to kind of build out their agentic offering because that is what Manus does. It makes AI agents. But, you know, the one reason I suppose this story is so well read on the terminal is that we are just a few weeks away from President Trump meeting with Xi Jinping, and the access to technology in either direction across borders, that has been a point of negotiation, right, in the relationship between these two countries.
Is there any expectation just along that front, Ed, that things will ever get better? I can't see a world where I'd want China to have our best tech. I can't imagine they'd want us to have their best tech. Where are we on that?
Yeah. The net position of the administration is that they do not want Chinese entities, companies, and other government entities from having access to America's best technology, but that has largely focused on the picks and shovels, the chips that are being used to develop that. The other way round, the export of software from China to US has been a much grayer area. You'll see the other big headline on the terminal is DeepSeek, right, which is a very competent maker of open source models. And so, like, the main takeaway in this sense is that the direction of travel is China trying to cut off access to its own companies from American capital, both intellectual and financial capital, which is, how the president passes that is going to be very interesting to see.
All right, good stuff. Ed Ludlow, really appreciate your joining us. Ed Ludlow, he's the co-host of BTech and making sense of all these headlines for us. And of course, be sure to tune in to Ed and Caroline Hyde on Bloomberg Television when BTech airs every day at 11 a.m. Eastern Time. Let's bring in Joanne Feeney right now. She is a partner and portfolio manager at Advisors Capital Management, joining us from Ridgewood, New Jersey. And Joanne, I know you heard what Ed was saying about these AI stories, whether it was Microsoft and OpenAI or Meta and its plans to acquire this startup Manus. Have we kind of looked past the Iran war and all the confusion, the fog of war there, to really refocus on tech and the AI story again?
Yeah, hey, Scarlett. I don't think we have. I just think that the tech and AI story is a development that's likely to be unaffected by what's going on in the Middle East. And remember that the S&P 500, about 45% of it is TMT. It's technology, media, and telecom companies. So the market as a whole is almost, well insulated from these developments, which is probably why we've seen the market continue to go higher, even as those uncertainties in the Gulf continue.
The SOX, the Philadelphia Semiconductor Index, 18 days of gains here, just extraordinary here. It seems like the tech trade is once again front and center here. How do you think about technology? How are you playing it today?
Yeah, the opportunity here for investors is that we, by all evidence, are in a multi-year expansion of the build-out of data centers and the deployment of AI. We're also seeing, though, more and more companies talk about how they're using AI. And we're seeing, in addition, now a recovery in the inventory overbuild in the industrial space of semiconductors, as Texas Instruments reported last week. So there's a lot of good things going on that give investors a lot of places to go, and so where we end up putting different stocks for our clients depends on the type of the strategy. Obviously in our growth strategy, we're going to be a little bit more aggressive. We're owning more NVIDIA over there. Lam Research, for example, has been a long time holding. But over in our balance strategy, while we continue to own NVIDIA, we own a smaller portion of it for clients, and we balance that with something more conservative like a Texas Instruments. And that's just obviously on the technology front. But there are a lot of other places to go to deal with that Middle East risk because, our conservative equity side of the balance strategy, you don't want to put people in just tech. You want to make sure they're insulated, owning some defense stocks, owning resilient consumer stocks, for example. So, you really have to pick and choose, which is why we don't like index funds for clients. It is why we like to do, between 40 and 50 equity positions in a given strategy.
You mentioned defense companies and select consumer companies. What about energy companies? Because these are seen as the big winners this earnings season.
Yeah, and there we're also pretty careful. Clearly in something like a balance strategy where we actually have a theme in our balance strategies to go for higher yield than the market offers because a lot of our clients are retired and they want to live off those dividend streams. So energy is a good place to look for that. But we didn't want to have too much exposure to the big integrated oils because they move so much. as we've just seen on the change in the price of oil. But we have Chevron there. In other strategies, we have Exxon. But we also really like the pipeline companies, the storage companies. And so Kinder Morgan, for example, nice high dividend, and is particularly resilient because it doesn't depend so much on the price of oil as it does on the flow of oil. And that continues to be very strong.
Fixed income, Joanne, how are you positioning fixed income within your portfolios these days?
Yeah, we have a whole team that works on the fixed income side, and we do all individual bond and preferred investments for the majority of our strategies. And what they have continued to be focused on is sort of the 3 to 5 year maturity range. We don't specifically want to make a bet on interest rates. Our view is that it's unlikely that we're going to get a cut from the Federal Reserve this year. Because we see the pressures on inflation, not just headline inflation, but as the higher energy prices trickle into other goods, we're likely to see it in core inflation as well. That's really going to tie the Fed's hands. Although a Kevin Warsh Fed might deviate from the data, we'll have to wait and see. So therefore, you don't want to make a bet so much on interest rates. You want to take advantage of what's out there in the sort of that 3 to 5 year range. And also, we're not seeing very high credit spreads. So you're not being paid to hold a lot of risk. So in our core balance strategies, we have an all investment grade selection, but we're at the lower end of investment grade again, because we're picking and choosing among individual bonds. We're doing the deep dive research on the companies issuing those bonds and getting some good yields for our clients.
And of course, the FOMC decision comes out Wednesday at 2 p.m. with the press conference to follow. Joanne, it's a big week, not just for central bank meetings. You've got the BOJ, the Bank of Canada, the BOE, the ECB. You've also got a ton of earnings, including the Mag 7 really getting underway on Wednesday and Thursday. What's the single most important data point you're watching this week?
Scarlett, I got my popcorn ready. We're going to have a lot of fun watching all these earnings reports. I mean, the data point that I think investors will be closely watching is how much evidence is there of the adoption and use of AI? How much capacity utilization are we seeing at the level of the data centers? It's likely to be over 100%. We want evidence of that. Investors got very worried back in the fall that, perhaps there was going to be a pause in data center builds. Perhaps there wasn't going to be the money to do it. We're going to see, I believe, increased commitment to further data center builds. We're going to probably see increases in capital spending budgets. And, I think that's going to give investors some reassurance that this is going to go on for many years to come.
All right, Joanne, thanks so much. Really appreciate it. Joanne Feeney, partner and portfolio manager at Advisors Capital Management, joining us via Zoom from Ridgewood, New Jersey, home to one of my favorite golf courses, Ridgewood Country Club. Lost many a golf ball there. S&P 500 down 8, the Dow minus 33, and the NASDAQ is down 78. Kind of a quiescent market before we get to some big earnings later on this week, including some of the big tech names that will likely drive the narrative. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom. This Bloomberg Business Flash. A few things in focus this week. The tech companies on Wall Street. That includes Apple, Amazon. They're set to release the financial results. That would represent about a quarter of the S&P 500's market cap. And we're not seeing much progress reported toward peace in Iran, so that has oil higher, energy the best performing industry group in the S&P 500 right now. You have WTI 96.21, Brent, the active contract 107.81 right now. Higher earlier, Qualcomm, that has now turned lower, down about 0.2%. And analysts said the chipmaker working with AI giant OpenAI on a smartphone. And the Philadelphia Stock Exchange Semiconductor Index, SOX, down more than 2%. So that ends what would be at record 18th straight session of gains. Federal Reserve officials expected to leave interest rates unchanged this week. Colin Martin at Charles Schwab says still the data that's going to dictate the future rate path.
Now, the bar for a hike is super high, in my view. The bar for a cut will depend not just on inflation, but I think when we start to see if there's potential cracks in the labor market, consumer spending.
Right now, the S&P 500 down 4, the Dow down 33, the NASDAQ Composite Index down 58. Say hello to my little friend. Remember that? Scarface fans.
Yeah.
You have an opportunity to own a piece of cinematic history. The mansion that was used to film part of the movie in Key Biscayne, Florida, on the market for a cool $237 million.
Nice.
I don't know if it comes with that vault with all the guns in it. It has 5 bedrooms. It also, Richard Nixon used it for a time for his the summer White House down there in Key Biscayne.
He was a big Florida guy.
And remember B.B. Robosa, my favorite felon? No. His buddy. I think
Who's selling it, by the way? Do we know?
Some guy. You're
cinematic history
You're
being made
assuming I did all the research on this. I'm still looking into it. I'll have that.
There you go.
For you next report. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker at your Bloomberg Business Flash. Scarlett Paul.
All right, good stuff. Thank you so much, John Tucker. We're looking at earnings season unfolding right now. Of course, this is one of the busiest weeks. We had Verizon reporting results this morning after its larger rival AT&T had reported last week. Verizon surprising investors to the upside with phone subscriber gains. The first time that it has added phone subscribers, like net positive, in a first quarter since 2013. So let's bring in John Butler. He's our senior telecom analyst